afternoon, knuckleheads. Happy Tuesday to you both.
Hello.
Morning.
I woke up this morning thinking it was Wednesday.
Well, it synthetically is.
I know, because Friday there's no market open. Well, no equity market open. You'll have some futures open.
Futures will be open.
Yeah.
For the, do we know if it's
a limited time? Go ahead. You figure it out. But anyway.
Is it, I think it's noon.
I believe so.
Yeah.
Usually how it is. Although it's subject to change.
I can understand you being thrown off by the 4 hours of work you had to do yesterday.
You love that, don't you? You do.
You literally almost ran me over on your way out of the door.
Don't get in my way.
Tracy and I were coming with our lunch plates. We're going to go sit at our lunch spot, and you were like, out of my way, ladies.
Being a king has its privileges, I guess. What can I tell you?
You didn't even stay for the Ben Yehuda.
Ben Yehuda is a good one.
It's good. It's healthy, Mediterranean.
Yeah.
Get a little tzatziki, a little spicy sauce.
Do they put the calories on everything? Because I bet if they put the calories on everything, it's not. I hate.
It's just grilled chicken and brown rice.
I get it. But you go to this place, it's just a salad and it's 1,200 calories. You know what I mean?
Sure, you got to be careful, like what you're putting on top of it.
Yeah,
like,
it's almost better just to have the burger for crying out loud.
Well, that escalated quickly.
Yeah.
I don't know how we got from chicken and brown rice with like Mediterranean veggies to just eat a burger.
Makes it easier that way. Makes it easier.
I'm actually seeing no trading Friday.
No trading Friday? Then what do they do? Saturday? No. Can't be Sunday at noon? Well, they got to have some. They can't be.
It's what Jesus would have wanted.
I'll go to my Taiwanese sources. I'll have your answer for you.
I see the bond market is at 10:15. Equity. Yeah, they trade in the morning. They close right at the open.
Yeah.
Right around the open at 8:15.
Right. That makes sense.
Yeah. So they trade overnight into the morning.
Yes.
But they don't. It's not the noon. It's not noon.
I'm surprised at that. Okay.
Yeah.
Live and learn.
Unless I have this in what time zone?
Are you guys going to be okay?
I don't know what time zone I have this in.
I'm gonna get this for you. I'll get definitive. I'll go right to the sources over there. My Taiwanese sources, a Tasty Trade.
Yes, thank you.
Are you going to get like withdrawal symptoms, Nikki? Are you going to you're going to start jonesing
every
like
single
a trade?
morning, every night? I feel it. Yes.
Okay.
Yeah. Well, it'll be nice, or hopefully it's nice, so I can go golf. But I
think so. I think it's going to rain. I think it's just a lot of rain for the next whatever time frame.
It's unfortunate.
But a little rain won't hurt you. Just unless there's lightning, then you're good.
Yeah, that's true. You can't be out with a metal stick while there's lightning. Be careful.
How many people really get hit by lightning? I mean, I think you can. I think that's one you can. If you could sell a strangle, you can do that.
Yeah, no problem.
You'll be fine.
Yeah, easy.
You'll be fine. You'll be okay.
I mean, holding a metal stick is taunting.
It's got a rubber grip on it. He'll be fine.
Yeah.
That's not how that works. That's not how any of this works. So wait, are you done with your golf simulator?
Yeah.
Okay, so that's done.
How'd you guys do?
Not good. The last season was not good.
So you're not making it to the final.
No Dominican Republic.
Dominican Republic for you
for the championship. No, we're not.
I'm sorry.
Get there, unfortunately. Yeah.
I'm not that sorry for you. You got a lot of work to do. You got things to do. I couldn't afford to have you in the Dominican Republic for a couple of days.
That's right.
That's right.
Yeah.
We need you here.
Yeah.
They got Wi-Fi. It doesn't really matter. This is all performative.
Yeah.
Like it doesn't really matter.
Yeah.
Yeah.
As long as you have internet, then you could do your
good.
job. Yeah.
Then you're good. For sure.
But anyway, I'm glad I got the invite this weekend though. Thank you for that. I appreciate that.
To dinner on Sunday?
Yeah, the text.
You didn't wish me a happy Palm Sunday, so I was surprised that I invited you for
Happy Palm Sunday.
Yeah, I was happy. I mean, I was surprised I even invited you on Sunday for Easter.
He's Jewish.
Now?
Yeah.
Depends on what room I'm in.
Gross.
A little bit of this, a little bit of that, no problem.
Gross.
He's like a broken wing butterfly. He's omnidirectional.
Yes.
Yeah.
Yes.
That's true. What about you, Vanessa? What are you doing for Sunday? Would you like to come over for some lamb chop? Oh, you don't eat meat. I'll make couscous.
I eat chicken. I'm going to see my parents. I'm going to see my parents.
Yeah.
My favorite people.
okay,
Yes, the people, my actual family.
Because we'll have chicken cutlets too. I always like to just pound some chicken cutlets.
Yeah.
And just keep it in the fridge just so you can pick it up and eat it like a snack.
Yeah.
That's what I like to do. So
No,
you're good.
I will be with my family. And
All right. All right.
I still get an Easter basket.
Ooh.
I had that discussion with my wife this last weekend or something like that. Do we still do the Easter basket?
Yeah, you just put like little
Put
vape
gift cards in there. You got some Zins in there.
He buys his own now. He's got a fake ID. He doesn't
Yeah.
need me anymore.
Put some hard cider in there for him. Yeah.
He's got a fake ID. He doesn't need me.
Yeah.
He's good.
Yeah.
He's good.
He has a fake ID.
Sure.
I am calling the state.
I felt bad for you because I was.
But he doesn't look old,
Nick.
though. He has a baby face.
No,
though.
I did feel bad because I was talking to my girlfriend last night and she was like, first of all, she was like, how was your dad's trip? And I was like, I didn't really ask him about it.
Because that's what men do.
We've had that conversation before, so I'll talk to you more about it today. But I did say, I was like, yeah, like he was talking about, how he went out and went fishing by himself.
It was like a frat house.
It was like a frat house.
He was a chauffeur.
He was a chauffeur. And so I felt a little bad for you.
No, don't.
I was like,
I don't feel bad at all.
no, me either. I did everything that I wanted to do. I actually enjoyed my time. This is my life right now. Another 2 years, I won't. Like you said, it goes really, really quick, and I didn't realize how quick it really goes.
Sure.
Another 2 years, he's in college, and then I'm stuck.
Or he's fighting for America in Greenland. Whatever. Like, the choices are wild.
In Canada?
The choices are wild.
Greenland would
In
be
2
a way
years,
better
the
place.
choices are wild. Like,
Yeah.
nobody knows. They raised the age to 42.
He
gonna
might
go.
be there.
Yeah,
Who
he's
knows?
gonna go.
No, the flat feet. Can't go.
Flat feet.
I got
There
the
you go.
flat
He's
feet.
got him too.
Can't go.
He's got flat feet.
Oh, yeah,
too.
he does too. Yeah.
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 But anyway, Vinny could be in Greenland, or we're
He
fighting.
really is yours. I questioned that for a while. He really is yours. Got the
Yeah.
flat feet.
Yeah, he does. Yeah, he does. Yeah.
Well, my question is, how does he have a fake ID? He looks like he's 12.
Yeah. So of all his friends, he's probably the youngest looking.
Like the most baby face.
Baby face
Yeah.
of all of them. I don't know. These gas stations don't really care. Somebody's getting a little shorty in the S&P.
Yeah, a little tiny bit. I'm still long the Nasdaq.
I mean, 8 handles off the highs. I mean,
Yeah.
you're
just
there.
a small little something.
You have some long delta.
I have a lot of long delta. It's longer every single day we go down.
Yeah.
This is just a little
Taste.
We're gonna see what happens.
Okay.
Yeah.
Good job.
Well, we're not down. We're up.
We're up. I
Yeah.
know.
Yeah.
Good.
When the
Taco.
bombs fly, this is the same thing that happened.
Well, we got a true Taco Tuesday. We've had Taco Mondays.
Yeah, the tweets don't seem to be having the same effect as before in the market, to be quite frank with everybody. Doesn't seem like it, at least. Although you got to move.
Oil's
today.
still up, too.
Oil is still up 103. It was just 101 a moment ago. It was 106 last night. Even the S&Ps last night were down around 15 handles. Oil was $3 higher than where it is right now, 106, making new highs.
E-minis were down 30 at one point.
Yeah, down
30 or 40.
Yeah, in the middle of the night.
53.
That's the old
120 points away.
I think that's the old Globex low too, around 63.50 something.
Ooh.
I don't know exactly what
Are you
it
a
is, I just
chartist
remember.
now?
No, but I remember the numbers. I mean,
Sure.
It's not something that I forget. I mean, I forget your birthday and stuff like
I
that.
know.
I don't forget when.
It is
within a week or two of market lows. I usually don't forget that.
that is one of the things that like of my selective memory of things, like stock prices are front and center. Like I
Sure.
forget birthdays,
Yeah.
holidays.
Ask me how my vacation
Yeah,
was.
like I don't.
You forget to do
I don't
things,
care
manners.
about the stinking
you forget
vacation that he doesn't
Sure.
invite me on.
Sure. Okay.
I remember where the market was.
All right.
It's okay.
That's the way it should be.
All right.
That's the way it should be.
All right. I still leave the invite out there. I mean, I'm inviting myself, but a fishing trip or
I would just for once, I would love the show not to devolve into family therapy.
you want us to give.
I am
you
not licensed.
that's the dichotomy
I am not
here.
accredited. I am not paid to do this emotional labor.
We could be,
Believe me, if we're coming for you for sympathy, we are screwed.
Yeah.
Okay? We are at the end of our rope.
I am stone cold.
We're this close to not talking to each other.
Stone cold, but it's just every day.
Yeah.
Every day. It's just family therapy. But we got a great show for you today.
Yes.
No matter your daddy issues. That is a terrific Tuesday here on Tasty Live at the top of the 8 o'clock hour. We're going to do a little options jive. Can the VIX term structure be used as a trading indicator? Nikki, what does that mean?
It's a good one. So we're looking at the various VIX products that the SIBO has. So we'll look at like the VIX 1 day, 9 day, 3 months, 6 months. So they have like,
Oh, I didn't know there was such a variety. There's a 9-day?
yes.
Yeah.
That's, okay. That is odd.
And so we're going to just take a look at them and just kind of talk a little bit about those metrics and then see if there's like, something to kind of pull from it. Ultimately, I mean, obviously, volatility is a moving target. So, you could simplify it by just using IV rank, which is really what we're going to talk about.
See, the CME was so close there to just being able to have their marketing tag be 369. Damn, she fine.
They went too far.
Vix, give it to me one more time. So close. That's why they need me.
Yeah.
And then we also have, it is a terrific Tuesday, so that means Mr. Vecchio in the house for Let Me Explain. What are you talking about with Chris today?
Going to be, I'm sure, oil, the Strait. Maybe we'll talk about some agriculture, chemicals.
Okay.
I don't know. Whatever Vecchio comes.
Okay.
It's always hot.
It's always hot.
It is
It's always
hot.
electric. I can't steal that.
No, just stop.
I can't.
You
No,
guys-
but that's coming.
That's why I said
That's
it's
coming soon.
Stealing
That's
my
coming
bits.
soon.
Stealing my
When she
bits.
gets further through the schedule, that's coming.
And then 9 o'clock, the primary risks of selling short-term options for our market measures today. What is that going to entail?
So it's another interesting one. So it's going to be just 45-day strangles versus like 7-day strangles. So
Okay.
risks, rewards. A lot of people say, oh, well, I can just do this, every week versus, waiting 30 days. Why not do that? So we're kind of going to answer that question.
Okay. Remember that scene? I think it's it from There's Something About Mary. He's like, no, this is 7-minute abs. Okay, but what if someone comes out with 6-minute abs? And it's like,
Basically, this is it.
Okay. No, she understands.
7 is perfect.
7-minute abs. Yeah.
Yeah.
Someone
You
knows what
had a
that's
lot of
from.
those.
Yeah.
I did.
7-minute abs.
You fell for all the infomercials. You had the little bar thing.
Oh, the ab flex or
Yeah.
whatever it's called. Yeah.
I think I peaked at the Thigh Master with Suzanne Summers.
We all peaked at the shake weight.
That was
R.I.P.
classic.
King. Oh man, that was good. Those
good,
were
too
good
good.
times, man. Anyway, that's gonna be great. And then we have live from the trade desk at around 9:30. Maybe special guest Marty Supreme.
Oh, we have Marty Supreme.
Marty Supreme
It'll be amazing.
in his house.
Yes.
Okay. And he was on vacation recently as well. So ask him about his vacation.
I will.
So there you go.
Yes.
And
I'll get
Glenn.
it both
Yeah,
out
show
of the
some
way.
manners.
Yeah.
And Glenn.
Yes.
What do you think Marty does on vacation?
Oh,
Ooh,
that's
Marty,
not. We can't.
Marty,
share that on air.
Marty, a player, single, ready to mingle. Yeah, he's good. He's good.
Well, we will ask him about that. And then, of course, at 10 a.m., Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live.
It was gonna happen.
Look, dude, you got two smoking hot ladies that were actually floor traders, and they're dropping dimes, and they look like dimes. Like, it's just synergy. Get into it, and they respond to you. So get on that tweet deck there, the old Twitter machine. Yes, I still call it Twitter. Hashtag LIZJNY, and they
It's like
will.
Google. Nobody calls it Alphabet. You're allowed.
Yeah, they
when you make
will.
stupid
They
name
will
changes.
answer your comments, your respectable comments. So make sure you're nice there. And if you missed it yesterday, Tony from Mexico was on with Jenny. It's up on our site, so you can check it
Tony.
out, or check it out on our YouTube channel. There, it was a great show. But we got an even better show for you today. Yeah, I said it. Do you want your
for sure.
daily dose?
Sure.
Hey, use my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Today's
coming across the wire. Our leading story, top story, just in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is March the 31st. Happy JPM Collar Day. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
There is an earnings today.
Lack of them.
Well, Nike.
Nike is the only
Oh,
one.
I
Okay.
didn't.
Yeah, I just wanted to remind people, Nike, because that's the end of To me, Nike is the end of earnings. So Nike.
Yes.
Yes.
Day
Nike's
after
today.
the close.
Yeah, markets are for a $50 stock. You would expect them to be a little bit better than they are. I mean, they are 10-ish cents wide, but it does seem to trade by appointment.
Sure.
Take it for what it's worth. The IV rank of 55 is pretty good. Expected move is about $4 or so for the week.
Okay.
Rest of the week.
Fed Reserve Chair Jay Peasy said that he sees inflation expectations as being grounded even as energy prices rise. In the near term, the right move is to look beyond the short-term gyrations of the energy market and concentrate on the Fed's goals of stable prices. So basically, he said that inflation is in check and really no need to hike. But he also said we're not going to lower rates because of the oil shock. I want to talk about bonds and the dollar.
Bond's actually hanging in there, believe it or not, flirting with 114.
Hey.
So 113.31. Remember, I talked about 114 to 116 would be that area where I think it needs to sit for kind of no rate hike, no rate. That's Goldilocks kind of effect.
The sweet spot.
But we'll see what happens.
Yeah, bonds were bucking the trend all day yesterday. It was a little weird because it's been kind of a.
And they were steady. They never moved.
Well, yesterday started up and then it just ended down.
Yeah, but it's usually been like basically sell everything. You haven't been able to hide anywhere from metals, bonds, equities. It's really only been oil and volatility that have been kind of leading to the upside. And bonds stayed steady yesterday. So it's kind of a weird, deviation from the norm.
I know I was joking when I said it at the top, but are you doing any adjustments because it is the big collar day or whatever?
No.
Is there going to be volatility? I have to ask. It is a literal talk show.
Yeah. I mean, it'll be interesting. I think that the top of the put spread is at 65.15, I think. So you're like nowhere near that. I think the
You're talking about SPX now, right?
Yeah, I forget where the short put is. But it's close right here. So, I mean, no, I don't think I'm not doing anything different.
Okay.
But it'll be interesting.
I was just curious.
It might be, I wouldn't be shocked if it was kind of a choppy day here at 64.50-ish.
Okay.
And you kind of wait until the end of the day. That's when those hedges and that position kind of rolls into the next quarter. So like that is probably where you get some action, but I don't think there's anything to do early on. And it's so new. Everything is so news driven right now that I don't know if you can really.
I just think that that's
less news
wild.
than the other news that's driven the market, that's driving the market with more news.
Yes, there's a lot of news.
He mentioned it, just touch on it for a second. Usually, well, at least back in the day, when you had a big trade like this come on, they come back the following month again or try.
They come back. It's systematic. So they come back every quarter.
Right, exactly.
Yeah.
So they're going to come back with some other hedge coming in here with some sort of size, I would think, in the next couple of days.
Yeah.
Okay.
Yeah.
Well, we will see what happens there.
Yep.
New Nasdaq rules. Nasdaq's going to roll out a set of rules, including steps to speed up the entry of newly listed large cap companies to its Nasdaq 100 index. I'm calling this the SpaceX exception. The exchange operator seeks to reduce delays in joining the flagship equity benchmark as richly valued tech companies as SpaceX and OpenAI and Anthropic plan to go public. Exchange operators are seeking to turbocharge the pipeline of IPO offerings. Is this the right move?
I mean, these stocks will have to be added in short order.
Why can't they do it by merit?
Well, they're going to.
I'm just kidding.
Assuming they're going to be. I mean, all these stocks. Let's say at worst case scenario, even if they're down like 50% from the IPO, they're still going to be top
$500 billion. Yeah, half of
stocks.
Yeah.
Like they are some of the biggest stocks in the world, despite not being public. The one caveat here is that you don't have all of the liquidity at the start of these IPOs.
Well, so E-Trade yesterday said they're going to lead the drive to get SpaceX shares to retail customers.
Sure, but it's not 100% of the float.
Absolutely.
Like there's only so much of the float that gets added on IPO, and that's why a lot of times you see these IPO stocks just skyrocket because there's only so many shares. You can't really short it. There aren't shorts to locate, so you can't even be short if you wanted to be short. And so if Nasdaq is going to be adding this like right when it's live, it's probably going to be buying the Pico top of that. And so I don't know if that is a positive. But, of course Nasdaq wants a piece of this right when it's out. Not a shock.
Not a shock.
It'll be interesting. You can't trade SpaceX, but you can trade Tesla right now. So
And
Yeah,
Tesla's usually our number one traded product or
Gold
option.
was.
top ticker.
What's that?
Gold was.
Gold was yesterday, but usually it's the number one product. Ivy ranks are only 14. It's 359, up around $4-ish. But even the S&Ps are up a full 1%, $65 right now, with the rest of the market up 1% or more.
Crypto stocks may be nearing a bottom. That's according to Bernstein analysts. The combination of geopolitics and temporary crypto weak sentiment is offering big discounts on crypto stocks. Shares of Coinbase, Hood, and Figure Technology have fallen roughly 60% from their all-time highs. Bill Ackman said, "This is the best time ever now to be buying things at such a discount." He came out yesterday and said that. But I do want to talk about the crypto side of things. What are the opportunities, if any, here?
Crypto, Bitcoin, 66,000, 67,000. It's been between 65 and 70. It's kind of been least volatile of all volatile products right now. So, I mean, I think it's just kind of a place your bet kind of thing.
Yeah.
It's directional bias. There's really not too much. I bet you could trade if you wanted to.
Yeah. It just hasn't been in focus. Like, it'll have its moment, but there's all sorts of FUD.
Do you Scoopy a Coinbase or a Hood? Or I hadn't traded this FIGR, Figure Technologies.
I have not traded that one. Coinbase, we have a jade lizard on.
Okay.
Around kind of the short strike. The short put is down at 125, so a little bit of long delta there. I mean, I'm long. I'm statically long.
160 though, so you're well.
That's
right in the
crazy
middle
how
of my
much it's
position.
fallen.
Yes.
And I mean, it's a dog. But there is high volatility, so it is an interesting trade. But it's just not in focus. Like, there's so many other things just going nuts. Like, I'm more interested in a Microsoft or a Meta.
Sure.
There just hasn't been that kind of fervor towards the crypto space.
Totally agree. If I could step back for a quick second.
Sure.
The market's trading on Friday because of the unique situation that you have on Friday.
It's Good Friday, but you have some of the reports coming out.
Yeah, so you got interest rate products like the bonds that'll close at around 10:15.
Mm-hmm.
You've got equities, which will be about 8:15 in the morning. That's why you were having all the hard time figuring out. They're not all doing it at the same time. You got FX that'll be around 10:15 on Friday. Cryptocurrencies around 10:15 on Friday. If I didn't mention anything, all the rest of them close on Thursday at some time. Pre-open and then open again.
So do I get like a little sorry for that? You were like, wait, you can't read? You don't know what to do? It's a unique situation, okay?
Again, no. Boys, no.
It was a unique situation. This is a weird one.
Hey, in other news, Micron stock sank 10% yesterday, further cratering in a post-earnings sell-off. Monday was not a good day to beat Micron. The memory company stock has cratered 30% since that blowout report. What to do in MU?
And it's down this morning.
Uh-oh.
It's one of the few stocks that I've looked at that we've been able to trade that we trade on a basis, at least down $3 or $4. 317 will be a new low, a low that hasn't seen since, I guess since the beginning of the year, when it went from right around here to about 450, 460.
Yeah.
So it's really sold off.
So what do? Do you buy here? You wait?
Remember when MU, no matter what the market did, it just
was
went
going
higher?
up every day.
Yeah, right.
So that the AI trade has kind of been a hideout, I think, for the last couple weeks, because you had, NVIDIA is down, but it was hovering between 180 and 190 for the better part of the last 6 months. Same with like an AVGO. Micron was one where market was going down, but the memory stocks were flying higher. It was kind of like the spot where you could hide from the rest of the pain.
Yeah.
I think it just kind of caught up to everything else.
Yes.
And all that there was so much volatility going into earnings that it's a natural compressor to the stock price. Everybody's long calls. And as soon as earnings end and the stock is basically unchanged at the end of the day,
Buy the rumor, sell the news.
Those calls lose delta, and you're selling out of those calls. It's short delta, and you kind of have we've seen it a million times in a million different stocks.
Yep.
You look at it in hindsight, but it seems like that had a little bit to do with it too.
Well, I hate to interrupt you, Nikki, but breaking news, Marvell stock is up 11%. NVIDIA has taken a $2 billion stake, continuing a run of similar bets, if you want to look at Marvell.
That one is one that you can't trade.
That's one that I can't trade. You are right.
Got your number.
It doesn't look like, if you look at the chart, it doesn't look like it's really gone anywhere. It's been from like 70 something to 90 something. It's going to be 95 this morning. It closed at 87, so it's up around $8.
But it's back to where it opened yesterday.
Back to where it opened yesterday. If you look at the gaps in Marvell, they're huge gaps relative to the implied volatility. That's all, and it just has.
NVIDIA said the deal will connect Marvell to its AI factory and radio access network ecosystems, if that means something to you.
Yes. Sounds good.
Sounds good.
Mean to you.
Hey, in other news, Alibaba is unleashing Quinn 3.5 Omni, and this new AI model can now hear, watch, and clone your voice. That's great. Not scared about that at all. Native audio-visual processing beats stitched multimodal pipelines in speed and coherence. It can do voice cloning, semantic interruption, and vibe coding. Quinn, they say, outperformed Google's Gemini, and it's designed for native text, image, audio, and video understanding.
It couldn't outperform Google's Gemini because it is Google's Gemini. Okay, it's the same.
Often imitated, never duplicated.
It's
like
Google
a pizza box.
Shein.
Yeah, it's Google Temu.
Yeah.
It's Google just
You should call this Alphabet AI.
Yeah.
Yeah, well, what's Baba doing?
It's basically unchanged, kind of at the lows here, trading at 121. I do not enjoy trading these stocks.
Google up $4 or so to 277, but still, these stocks are just, a hair off of their lows, recent lows that they had.
Yeah.
Microsoft is unveiling new features in its Copilot research assistant that would allow users to utilize multiple AI models simultaneously within the same workflow. The latest move from the tech giant to improve its AI offerings and boost adoption. I hate Microsoft so much. Just as an end user, as an end business user.
Microsoft needs to do something. It's trying to do something this morning.
$6. Woo!
Woo!
Yeah, up around $6. Brings
Street
it to
loves
where
it.
it was on Monday.
Yeah.
All right,
Yes.
well.
Yes. Ivy rank of 61 is pretty good in there. It doesn't have earnings until after April expiration, which is only 17 days away, but April 29th for earnings.
Mm-hmm.
In their example, Microsoft said a Microsoft user of this system could have GPT generate a response, have Claude review the output for accuracy and quality before presenting it to the user. So, multimodal.
I don't know.
AI.
Now, OpenAI is so in the doghouse here. I don't even think putting their name on something is like positive anymore.
Yeah, but Microsoft was the OG OpenAI investor. Like they were the first ones, but then OpenAI kind of screwed them. They screwed everybody. So
They did.
it is what it is. This isn't really something we trade a ton of, but the deal this size, I would be remiss if I didn't mention it. Cisco, SYY, said that they would buy catering supplier.
This is food Cisco.
Food Cisco would buy Restaurant Depot in a $29 billion deal. Damn, didn't know Cisco had it like that.
Restaurant Depot, you have to be in.
Be like a member or
I
something.
think you have to be a member, but I think you have to be like a
restaurateur,
like a chef or a cook of some sort.
So your soup and grill business would qualify?
Soup qualifies.
Yeah, well, no, I've wanted to go to one of them.
I think you could. I think you could.
They have one on Division, isn't it? Division.
We have restaurant
Division and,
supply stores all up and down here, though, in the West
You got
Loop.
it.
I like to go to Chinatown.
Yeah.
Okay, you go to Chinatown, you get the
big woks and the big bowls
I
and
always
the
wonder,
knives.
this thing is huge.
Yeah.
Where do you put this?
I don't know if Cisco has option to SYY.
They do have options. It has earnings actually May 5th.
Oh, Cinco de
Almost
Mayo.
untradeable, 60 cents wide for a $70 stock.
Yeah, but I mean, it was down $10 yesterday.
It went from 82 to sub 70. Yeah.
So the crazy thing is Cisco's market cap is only $39 billion, but they're going to offer $29 billion.
That's right. They're all in.
Yeah,
They basically just stood up and pushed it all in. That's right. They're going to creative financing.
Hybrid debt, they said. So
Yeah.
yeah.
Hybrid debt.
Cool. Love that for everybody involved. I'm throwing this in. This is sad. I was like, wow, that's a crazy ride. Allbirds is getting bought for $39 million, literally pennies on the dollar. The once iconic wool sneaker that was all the trend in the 2010s is planning to sell itself in an asset sale and subsequent dissolution and a wind down of the company. Bird is the ticker, Bird's the word, but $39 million. Like you could buy it.
Yeah, well, it's just under $3. It looks like it's $3.40-ish.
I was going to
cents.
say.
It's a take under.
I mean, I was going to say, Tom could have taken this and Rhodey, and he could have made like his hipster dream paradise.
Sure.
You have like,
all the runners could have wore the
the shoes.
Allbirds.
You get the nice, little Rhodey bread.
Great. Great.
Yeah.
It's just what a crazy story. All right. Uber is buying chauffeur app Blacklane for high-end riders. The Berlin-based chauffeur booking platform operates in more than 500 cities over 60 countries. I did not know that. The terms of the deal were not disclosed, but the acquisition aims to speed up Uber's move into executive and luxury travel, which is funny because that's how they started. Because it was supposed to be like a black cat, like a fancy, a more bespoke, but now it's just a random dude in a Nissan Altima who comes to pick you up. So they're trying to go back to how they originally started as a, chauffeur service on demand for tech people in San Francisco.
Yeah. Uber trading around.
We were talking about Uber on one of your...
yesterday. Yeah, we were looking at like the 60 or 65 puts.
Stock 71. I
forgot to put those on. I wish I did because the stock's up $1, but we'll look at those this morning too.
Yep.
Okay.
But the market's higher too, so all of these stocks are getting a little bit lift, and all of them have been on their butt. But it's really the key for today is going to see if we hold this kind of rally, which we have not been able to do.
Oil coming off though.
Yeah, 103,
Oil's down
just under
small,
103.
and volatility coming in a little bit, which is good to see.
Finally, this is interesting. Chick-fil-A is offering free ice cream to families who agree to put their phones away during their meal as part of an effort to encourage more face-to-face time and less screen-to-face time.
Wow.
What do you think of this?
I will say, of the chicken sandwiches, Chick-fil-A, not even my top 5.
Really? Because it's not spicy enough, or like?
I just think it's kind of mush.
I think it's good.
Really?
I like
want a
Chick-fil-A.
crisp. I want like.
You want it like hard fried?
Yeah, like a Popeyes.
Oh, okay.
Crispy.
Wow.
Crispy chicken. I think this is kind of like.
But they're the OGs in the space.
Yeah, I wouldn't go that far. We didn't have Chick-fil-A. We weren't like the first ones to get Chick-fil-A.
I know, but I'm from the South. Like like my dad's from Georgia. Like that's where Chick-fil-A is for like.
Well, here I'm saying.
Yeah, I know.
I didn't get it.
I know, Yankee.
Oh, thanks.
16 years ago, Chick-fil-A was my wife's trigger food that she had to have when she was pregnant. You know what I mean? Like, that was her craving. I want to say craving, but
I was like trigger. I was like, okay.
I said trigger, but I meant craving. That's why I went like this. That's why I went like this.
Okay, yes.
When I put that like that, it could be any word. You can insert any word inside there. That's my thing. So I would, every time I would go to like Atlanta or something like that.
Sure, yes.
Bring one or two back. So Vinny was conceived on these.
Yeah.
Okay, no, I did not need to know that last part. But could you and your family abide by this? Could you go no phones at the Chick-fil-A?
Sure.
I can't even do it while I'm driving, no phone. So
okay, well that's terrible.
He is bad. He is bad.
I'm trying to get better.
Yeah.
Okay, Tiger.
About that. Yeah, seriously. Might have to hire you a private driver.
You need a
They
driver.
can't wait. People can't wait. I mean, time is money. And that's how
Finally today, this is crazy. I didn't know this was a thing. First of all, I didn't know Dave and Buster's were still in existence. Good job in this economy.
Oh, yeah.
And number 2, how is this an arcade game? And then number 3, good job, little kid. Watch this.
10. Stop at 10.
So this is a game. You gotta stop the pump at $10. Who pays to do this?
Oh, yeah, little man.
He's not paying for gas. He doesn't know.
What do you get? 5 tickets?
And then all the tickets are digital now. Like, I hate everything about
Yeah, I hate the digital cards too.
On the card, they always like,
I did.
565 tickets, it looks like.
wow.
That will get him 3 banana.
No, one of the finger toys.
One of the finger toys.
My question.
3 banana candies.
My question is like, why is this a video game? Like, ooh, chore simulator.
Oh, come on. You're always trying to get to the round number.
I know, but I like the motorcycle games where you're like,
Yeah,
like
100%.
that's an arcade
That's
game.
a great question. At the pump, you probably use your credit card most of the time or your debit card,
Yeah,
right?
use my credit card. Got to get those
Nobody
miles.
goes in and pays cash anymore.
Yeah, no,
right?
got to get those airline miles.
So do you still go to 000? You just
no,
whatever
because
it
my
ends
tank
on.
will spill out everywhere.
Yeah. You go to 000?
No, I let it go, but I like to do a couple clicks at the end just to get to a round number.
So you'll go like 80 cents or something like that? Or is a round number like $71? Just could be $70.
If I'm like at like, well, I drive a more normal car, you know, mine's not this big behemoth of a boat. But if you're at like, you know, 24.92, go to 25.
So you will go to 25.
Yeah.
But what if you're like 20?
Which is bad. They tell you not to do that.
Come on. What do
I
you?
know.
What, if you're 24.30, what do you do? Or 24.31, what do you
I
do?
go to 50.
24.50?
Yeah.
I just let
Why
it
don't you
slide.
call in with what level of OCD you have? We're 1855
No,
be
we used to have to
tasty.
get to 0. I mean, I pumped gas for a living. I mean, if it was $23.60, we would try to get to $24 because everybody paid cash. You know, you
Yeah.
didn't want to make change cash.
Okay, thanks, Boomer. Hey, what's coming up next?
We're going to take a quick 90-second break and come back because even the S&P is flirting with new highs or making new highs right now, up 77. We'll be back in 90 seconds. Let's Tasty Live.
And I could get Coke for a nickel.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. Well, we've got confirm and send, but first we're going to take a quick look at what the market has been doing the last day or so. By the way, I'm seeing your Uncle Barry tonight. Is there something you want me to say? Because I know he never invites you over for dinner.
I actually talked to him yesterday.
Wow. Did he ask you for a loan? Because he's been...
No, and he didn't invite me to dinner. He did say he was going to dinner with you.
Oh, he did, but no mention if you wanted to...
No mention.
Well, he figures you're with me all day long, and you probably ask me all the questions that you need answers to during that time frame.
Yeah, of course.
Even the S&P is up 75, Nasdaq up 267, the Russell up 37. That's the leader in the clubhouse, and the Dow up 530 and change. Volatility in by $1.70. All eyes on oil, sitting at 103. Place your bets.
Doesn't feel great.
75 handles on the opening is going to be hard to hold on to. I would believe you'll have some two-sided action, but yesterday I thought that too, and we really only had one-sided action. We had one big move back up at 10 o'clock in the morning, and then it was persistent selling throughout the day.
Which is when we got filled on the 0 day.
Which is when you got filled on the 0 day, yeah.
Right when we got
Otherwise,
off.
it would have been a full loser. I believe it closed underneath the put strike for sure.
Which was right after we left the show.
Yeah. Actually, you got filled at 9:58. You're
did I?
Yep.
It was right there.
Yep. All right, let's go. Let's talk a little bit about
quick recap.
Yesterday, quick little recap.
Daily recap of yesterday. So a little bit of weakness in the market overall. It was
a lot of weakness on top of what we've had. Right?
Sure. We opened higher, sold off the entire
Couldn't hold it again. It's been
the first Monday
that we didn't rally. We went lower. Yeah. So now for the rest of the week, we're going to go higher. Go ahead. Russell was the weakest of the group, as you can see here.
Which was weird because you had rates coming in.
I mentioned that on the show with you. That's why it's all BS. Like you can't, like everything. Now you'll see that since the market's higher this morning, you'll see people talking about everything was, all these funds have been selling, the biggest selling in months and years and blah, blah, blah. And now you'll see, well, they're exhausted, they're selling. So now, we're going to rebound back. It's just trade what's in front of you in the market.
Day to day, it's
every day
complete randomness.
Right, the BS changes.
Yes.
Go ahead.
Yes. For the movers in the market, the Mag 7, you got Meta to the upside. It was the strongest of the group. I would, this 2%.
You needed that.
I needed that very bigly. I need more than that.
It's up another $10, $9-10 this morning.
That's okay. That's a good start. Keep that going. Get like 3-4 more of those. And
you do have to remember this was a $600 stock 72 hours ago.
Yes.
Now it's $545 on upticks.
Yes. So we would like that back to 600.
Sure.
But across the board, it was a pretty mixed day for the Mag 7s there. Tesla and NVIDIA, the weakest of the group. We talked about kind of the move in Micron. It seems like kind of the AI trade, which was sort of holding up, definitely holding up when you compare it to like a Microsoft or Meta, which have been kind of taken off the AI trade, so to speak. The NVIDIAs of the world have kind of caught up to the selling here. But still high volatility across the board. You see the 5-day IV change has continued to increase throughout the sell-off. Volatility is high across the board everywhere.
Yep.
Opportunity abound. To the upside, you had financials, a little bit of strength there. I was looking at stocks like Citigroup was up, $1 or $2 at one point. JP Morgan was kind of bouncing. Goldman Sachs was one of the biggest leaders in the Dow because the Dow is price weighted. So Goldman Sachs is one of the biggest kind of components there. It was up it was up like $5 or $7. It wasn't like a huge move yesterday.
But it bucked the move from the rest of the market.
And it keeps because, like a Microsoft is worth, in terms of price movement, 4 times what CRM is worth. I think CRM's in the Dow. Or maybe they removed that. Either way, Goldman Sachs is twice the move of Microsoft in the Dow in terms of like its actual price move. Utility strong. You had healthcare in there. Materials, it was pretty muted there. I mean, really the story was downside move that you saw in semiconductors, as well as some of the metal and mining stocks. Even though you had a little bit of strength In gold, they're kind of coming for the GDXs, the GDXJs. Those are actually bouncing today, which should be good for me. And then you had energy down on a day where, oil was getting to highs. Again, to your point, the day-to-day price movement, I tell you, okay, oil's at the highs, it's at 103. You would think XOM is skyrocketing.
Sure.
Or CVX is skyrocketing.
Sure.
They've had big moves. I will give them that. But on a day-to-day basis, you can't always play that.
Stocks, unlike commodities, have more of a, dare I say, fundamental aspect to them.
Ooh.
Like it's just not.
Now you're a fundamental analysis.
No, but they have an expected move to them, and they certainly go outside the expected move. It's only correct around 80% of the time, but they have an expected move to them. When it gets outside that expected move for some time, you can make an intelligent argument that it should get back inside that range at some time. Doesn't mean it has to stay there, but it's going to get back there, and that's what you try to trade if you trade the way that. At least that I trade or you trade. Semiconductors, SMH, also up around $7 or $8. But still, it was a $375 stock yesterday. It's going to be $368 right now. So you're getting a bounce back in semiconductors, but really,
Is this a dead cat bounce?
I wish I knew that answer. I mean, I've been leaning long like you, and I've been wrong. So it's going to take a little bit of time. But I'm always a little bit early, and it always feels like crap. And I rolled a lot of positions, actually rolled yesterday, besides Friday.
I might have to do some rolls.
Because I was gone. Well, at least you're catching a little bit of a move. It's probably time.
Yes.
Another thing about rolling, if you've waited that long, it seems to me prices are a little bit exaggerated, especially if you're deeper in the money with some puts and you're rolling those deep puts. So be careful about your pricing. Look at the bid ask on this, and let's say you're trying to roll something down and out and back month, and you're doing something for $20 or something like that. The natural bid might be 16, the natural offer might be 24, and the mid price is 20. Go well below and above that and watch how the futures are moving and watch how that mid price changes until things tighten up, especially right on the open.
For sure. So biggest movers to the upside here. You had a little bit of a bounce in some of the tech names that have just kind of been, again, I think on Friday when we were looking at this list too, it was like those stocks that seem to have, they've already taken the 50 or 60% drawdown. That was like where you were seeing some strength. I think you kind of saw that yesterday here with this list. You got like ServiceNow and PanW at the top.
ServiceNow is a mover, man. It went from 100 to 120, back down to 100. Basically in a month. I mean, not something that has the greatest markets to trade.
We've traded it a handful of times.
But markets are 70, 80 cents wide. I wish there were better markets there. Yeah. It's a mover.
Yeah. So not exactly an inspiring list there. On the downside, that's where you saw most of the movement there. You had Cisco in there, which Vanetta talked about. They had an acquisition. MU, Coherent, Sienna, these are all kind of the high-flying, meme type, memory, next leg of the AI story stocks that have just gotten absolutely pummeled over the last couple weeks here. They were the ones that were kind of moving up while the markets were going down. Western Digital, SanDisk are all in there as well. Light as well, another one that's kind of just been a flyer to the upside. A little bit of the air coming out of kind of these meme type stocks.
Yeah.
Not meme, but
remember,
high volatility.
Sure, SanDisk has been a leader in the market. That's not something I would normally say in years past. I mean, I think it started the year around $250 and got its way up to over $700 in a quarter. That's quite a quarter.
Unbelievable.
To be 570 or now 578, I mean, you're definitely selling off in an hour time frame of 45 days. Yeah, there's something to do there.
It's a big one-day move.
It is a big one-day move. Yep.
Lastly, our heat map, just to give you an idea of what the market looked like yesterday, it was kind of a little bit of a mixed bag. But, when you have tech in that deep red zone, it's not usually a good day. So across the board, I mean, energy, you're seeing just like when you see
financials are the unusual one there when you look at all this, as you mentioned earlier.
And this kind of tells you when you see a little bit of deep red and deep green in some of these spots, You're all over the place. Markets have been all over the place. There's been no rhyme or reason day to day.
And it really hasn't been a stock picker's market. I mean, there really hasn't been.
If you're in and out, if you're trading.
If you're in and out nimble, yeah. But that's not what I mean by stock pickers. Like you could say, you were mentioning just a moment ago, the energy. Like you would think with everything that's going on in oil, that might be a place to hide. There really is no place to hide. There's places to trade and be nimble, but there was really no place to hide from parking money or any place like that.
The people are saying, is this segment called bat testing, as in like back testing? I kind of like it. I kind of like that. We are open.
We may have a name for the segment.
Yeah, we are open to names.
That might be the winner.
Yes, that's pretty good.
That is pretty good. That's pretty good. Are you going to claim it as your own since you mentioned it first? We're going to give some props to the peeps out there. And
I give props to the peeps. I already acknowledged they came from the chat.
That's right. You did.
From here.
You did.
So
you did.
I give it to them.
Good job out of you. Let's take a quick 90-second break. We'll come back. We'll come back with Confirm and Send. We'll talk all about those markets. We'll be back in 90 seconds with tastylive.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do viewer emails, let's take a look at the market. Even the S&P is up 74 and change, trading about 8 handles off of their highs, significantly off of their lows of 63.53, about 110 handles lower than where we were last night on its lows. Nasdaq up 260 and change. Russell, the leader in the clubhouse, up $36. That's a 1.5% move, and everything else up about 1.8%. Dow up 518. Volatility in by $1.70. That's a 6% move, trading about 15 cents off at lows at 26.50. You can see here, though, still elevated and quite elevated for some time, right? I mean, I always thought that we had to get under 24 before the market was going to be able to maybe sustain its rallies. We're well above that at 26.50. What do you think about volatility here? In by 6%, just off of its highs of 29.
I mean, we're still backwardated. So you still have, like as you go out in the curve, and I build my own little watch list here. You can build this out yourself. I mean, you're seeing volatility come in pretty nicely today, but it's not like it's,
It's not like we're out of the woods yet. Yeah.
It's backwardated, just the curve kind of shifting a little bit down. So I don't think anything's changing there. This move in oil and oil just staying bid here on the taco news that we had overnight is concerning.
You're not looking at a V bottom in the market here from so far at this point.
I don't think so. And I don't think
that's an easy call to make. I hope you're wrong. I mean,
I do hope I'm wrong, because that would help a lot.
Yep.
But I do think, I've been talking about kind of the higher oil prices, the high, not scary high of like 90 to 95 seems like that's where we're going to settle in. Like, I don't think you're going to see oil have a move like we had in gold or silver where, you have a 30% one-day down move where we're back at like, 70 or 65 or something like that. Like, I just don't see that happening, because I don't think this situation is just going to magically disappear. But it would have been more comforting, warm and fuzzy to see oil at like 98.
Yeah, 98.
That would have been like, I would have been like, okay, now you can get, maybe you scalp some E-minis or Nasdaq, you can short some oil today. You could kind of play for that sort of move to continue. Here, it kind of gives me the vibe that this isn't going to stick.
Yeah, 98 was the number I talked about a lot, where I thought that oil had a hard time getting over that. And now here we are, last night trading 107, I think 106 and change, 106.86. If you were going to tell me that we were going to trade 106 and change, I would think the market would be doing the opposite of what it did last night. I know it was down 30 or 40 handles at one point, but it never looked like volatility really kind of never crept up there, although it did get up to almost 29. But it didn't seem like there was a velocity of the move there. Now, as you continue going lower, you would think those moves would be a little bit muted, just because price is king. And at some point, you say to yourself, who is a buyer on the way down? It's mostly shorts. It's not usually people getting more short. It's usually shorts buying in. And when you get that, you get a bounce. Now it's whether we can hold this. I, like you, don't think that, or at least I'm not putting words in your mouth, I don't think this looks like a V bottom. But I've been wrong about that numerous times.
Sure. Yeah. Okay. Yeah, I agree with that. Oil volatility is another thing that hasn't, and today's move and just the move that we had yesterday is not outside the realm of what volatility is projecting, right? You have a 95% implied volatility in the oil future. So, 3% move is well within expectations here. I will say it hasn't increased much past this 95 range.
Right.
You're not seeing, if I told you were going to have a move to 106, you'd think volatility was expanding pretty significantly.
That's what I was.
And it's not. It's kind of staying where it is, which is telling you that you're probably going to get these 3 or 4% moves in either direction, but it's not going to be like, I'm not concerned about the 150, 200 a barrel that everybody's talking about, but I also don't think we're getting the 70. Like, I don't think that's coming into play. I think that 90 to 95 range is like kind of where it's going to be.
Ooh, I think you have a lot more volatility than that. I think
you think so? I think volatility has stayed high for too long that you can't get the 120 vol print again, because we've stayed in this 95 range. I mean, maybe we do.
We'll see. Well, that's the great thing about it. Nobody knows.
Yeah.
Nobody knows. Bonds are hanging in there, 113.27. I think that's a pretty surprising number to the upside with all the talk. Well, I'm sure Chris will talk about that on Let Me Explain coming up at 8:40 after the market opens. Bitcoin basically unchanged here, hanging out at around 67,000. I'm going to round up there. You can see at the lower-ish end of its range. Ethereum 2,050 and change, a more kind of middle-ish to low of its range. Oil, you just mentioned, hanging out at 103, kind of quiet, eerily quiet so far this morning, although it had a huge range last night of 6 points. That's $6,000, and we're sitting right there in the middle. So place your bets. Gold up $49, traded about $50 higher than that, $45 higher than that. Traded significantly lower than that by almost $100. So gold IV rank of 89 certainly seems like a tradable product there. Silver's actually having a bigger move to the upside, up almost 2.5 cents, 247 to $2.47, up 70, trading 70, just under 73, up around 3.33% or so. Net gas cannot catch a bid these days under $3. That's all I got for you. Nike for earnings. Go.
Cool. Let's do it.
Confirm and send.
Couple viewer emails.
Tuesday, March 31st. Mark Scally, my oldest friend.
Happy birthday, Mark.
Yeah. Together since we were 3.
Beautiful. So Jenny had a guest yesterday.
He also didn't ask me how my vacation was. So don't worry. We're all in good place.
It's just a dude thing. Jenny had a guest yesterday. We had Tony.
Tony from Mexico, TFM.
Yes. And he was talking about hedging his positions. Is hedging something Tasty Trade believes in doing?
Sure. I mean, I think, I know Tony talked about a bunch of different ways, 3 or 4 different ways on, besides just rolling, changing the position if you had a naked put, because the market was going lower and you weren't comfortable with those deltas, maybe buying a put above your short put and selling another put below, just a way to free up the buying power and reapply it and have less buying power with a higher probability of success trade than the old delta trade that you're stuck with. Certainly viable strategies. We use them all the time, maybe in a different way. Taking a look at your overall portfolio, you got 100 long deltas. You want to reduce delta. The next position you put on has short delta. That's another way of hedging your overall position. So yeah, it's definitely something we do. Definitely looking at rolling.
Yeah, certainly. I think if you're on both sides of the market too, you're naturally hedging your positions. Strangles, or if you just have short positions here, long positions there. I also think...
it's a new position. You can call it what you want. Hedge, anything else like that, you're building a new position.
Hedging doesn't mean that you don't have risk. Because if you're hedging your full portfolio, you're out. There's no... Your hedge is always under whatever your directional exposure is. And so, it goes to the conversation of the JPM collar. The JP Morgan does not want that collar to work. The net position is very, very long. And so the collar working and paying out is a bad thing, net. I mean, that's it. You don't want your hedge to work. And so it's always under hedging to your portfolio. Next one, please.
You ready for this? Why are most of your short option trades done in a 30 to 60 day window? Yes, Nick. Why? And if you were going to buy options, would you use the same time frame?
I mean, the 30 to 60 day window is just a spot where you can be a little bit more consistent with your whatever your exposure is, whether it be delta, short volatility, long volatility. If you want to be long the options, the 30 to 60 day window is where things are kind of there isn't a skew in pricing, so to speak.
Right, it's not magical, right?
No, there's nothing magical.
It's optimal for the way that we trade, selling premium. But go ahead.
Generally speaking, 0-day options, very, very priced towards delta exposure, gamma. They're inflated because volatility is typically higher on a shorter duration. Really long options are more of a delta play and a gamma play via time, right? So there's not a component of time decay that is really consistent because there's so much time. And so you have to go, if you're trying to trade for a time component, a volatility component, you want to be somewhere in the middle of that. And that 30 to 60 day window is where you get a little bit of both. You get kind of the shorter duration, pumped up volatility pricing, and you get a little bit of that directional exposure and delta that you want out of those positions. So it's just kind of that optimal spot. Is 30 or 35 days better? They're basically the same. I mean, it's somewhere in this range is your spot.
I'm going to go with the limited amount of information you have here. I'm going to go with a little bit of a different answer, because I think you're really talking about, for us, 45 days is optimal. Just from the research that we've done, we sell premium. That flattens out the volatility curve. If we roll a 21 days to flatten out the volatility and P&L curve because we're short premium. If you're buying options, would you use the same time frame? I mean, maybe. And I know it's a horrible answer. But if I'm looking at buying options for what I think the market is doing today, I'm probably going to stay shorter dated.
Yeah,
I'm not going to go into
you take a shot.
Yeah, it's not going to help, a 0.5%
You're not playing
move.
for any, you're not
looking for bang for your buck when you're just buying.
Yeah, but you're just taking a directional
short
shot. You're just saying, okay, I think the market goes up, coin flip.
Now,
you're not playing for changes in volatility. You're not playing for time decay.
Now, you've done this buying of options in a more strategic way with diagonal spreads, and sometimes, depending on the time frame, let's say the front month has 25-ish, 28 days. Normally, if we were selling premium, we would go to the back month to sell that premium.
Mm-hmm.
You might do your diagonal with the front month and the back month, meaning taking advantage of a shorter term time frame directional move. So it's all subjective.
Yes.
Next one, please.
So when doing a strangle, do you always keep both the put and the call in the same expiration cycle? Would there ever be a reason to use different cycles?
No, on a strangle, I'm keeping it in the same cycle. You get margin relief that way too.
Because if you're in different
months, they're going to look at it as almost like two different positions, and they're going to margin you as two different positions unless you're in a portfolio margin account with a margin a little bit differently. Anyway, I'm always in the same month. It's a pretty simple answer for me.
Yeah. I think that's
for strangle.
The portfolio margin aspect is a good call out because you can be, if you're short puts and the stock goes down and you want to just hold those puts and sell shorter dated calls against them, you're going to be margined. It's going to be cross margin. So if you're in a Reg T margin account, you're going to be margined on both those positions. It doesn't make sense to do that.
That's correct.
That would be the only circumstance where I would say.
And that's why if you have over $150,000 portfolio margin might be something that you want to look for. That would be an advantage of it.
For sure.
All you got to do is click a button.
Yeah.
Next one, please.
On the manage section, my.tastytrade.com.
When market volatility is high like it is now, would you use shorter expirations since those are the ones with the most volatility?
Sure, you can. I mean, this goes to kind of if you want to take a directional shot, I think that's certainly the way to do it.
Mm-hmm.
But volatility is high across the board. So, you're talking about 26% implied volatility right now, and in the short term, it's going to be even higher than that. But, 26% implied volatility 30 days out in time, you don't get that all the time.
That's correct.
So, it's high.
Take advantage of it.
Yeah.
I got to take advantage of this moment. We're going to take a quick 90-second break and come back. We got more Tasty Live with an option jive. Next is even the S&P sit up 68. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today. Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's options. Jive. Nikki, that's right. It is time for an option jive. Go.
Let's do it.
I'm ready.
Can the VIX term structure be used as a trading indicator? What do you think?
Kinda.
I agree with that. I think it's a good context.
I'm Kindler and
right?
Chandler these days. You know what I mean? So I'm going to go with kinda.
Yeah. You know, volatility tells you about pricing of the options and just where value is positioning, right? So it tells you it's really expensive to hedge, it's really expensive to speculate, there's a lot of fear going on, etc. So it does give you that context. I don't know if it totally tells you what direction we're going, but it certainly will give you that context. So
yeah, it's like, you know, some things are, I've said this before, some things are good to know and some things make you money. This would be something that would be kind of good to know.
I think it's market awareness too. It's a big part of market awareness.
Definitely market awareness.
Understanding volatility.
Yep, totally agree with you. All right, I think we're ready for you.
Yeah. I think they're just reloading. There we go. The VIX is a forward-looking index that measures the implied volatility of the S&P 500 over the next 30 days. So this is looking at SPX option values and returning a number as to what the pricing of those options is suggesting from a volatility perspective. So it tells you kind of the expectations of price movement. And this incorporates up and down. So just because volatility is high, it doesn't mean downside is the move, so to speak. We've certainly seen that recently, but it tells you an expectation of price action in the S&P 500 via the SPX options. But there are also a number of different VIX products that are now available as well that we're going to go into as well. But those products, so the CBOE, or the CBO, I should say, shoot.
Don't worry, I do it all the
time. I read it like that. The CBO also provides various durations. So this has, they have a 1 day. So the VIX 1D is the 1 day VIX calculation. So that looks at SPX options that are 0 and 1 day until expiration. So it's kind of a basket of those two. They have the 9 day, which is the VIX 9D, the 3 month, the VIX 3M, and then the 6 month, which is the VIX 6M, and even a 1 year, which is the VIX 1 year. So it tells you just volatility along the curve really for SPX options. And this will differ slightly from the volatility futures because they're different products. There's a different duration. There's a different settlement, et cetera. I mean, like these are more structured toward the actual time frame. The VIX 3 month is looking at around 3 month, 90-day option implied volatility. It's going to include like 95. 97, whatever expirations are available. So it's kind of a basket there. But you can see they move in tandem, right? There's no
magic to them.
Yeah, they're all going up in one, when things are getting crazy, they're all going down when volatility is contracting. You can see it across the history here. By examining the average volatility levels across different time frames, we can see that the term structure we could see the term structure of the VIX. So you could see that curve of volatility. I use in the platform, and I just added these in here just to show y'all, you could put these in. You just type them in exactly as we listed them. The VIX 1 day is VIX 1D, VIX 9 day is VIX 9D, et cetera. But it gives you an idea of where volatility and how volatility is positioned across the curve here. You can see, the 1 day implied volatility is high, not as high as the 9 day, and it kind of has this curve as you get further out there in the expirations. You also can put in the futures as you see them here into the platform as well. But you can see here for the average, VIX 9 day is about 18, the VIX itself 23, the VIX 3 month at 26, and the VIX 6 month at 28. That's just what we're looking at right now here for the VIX numbers.
Beautiful.
So when shorter term IV is higher than longer term IV, it is called backwardation. So this is where the curve is backwardated. Is the front volatility is higher. As you get further out on the curve, further out in time, it gets lower implied volatility. That is not the norm. Normally, you have lesser uncertainty, lesser fear right now, and more fear into the future as time gets extended, because more things, typically you expect more unknowns and more volatility to be associated with more time. If you have what can happen in the next year is usually a wider range than what can happen today. When you have volatility events like we're having now, the uncertainty gets pushed into this front part of the curve, right? There's a lot of uncertainty of what's going to happen in the next 2 weeks. A year from now, it still could be bad, but the projection is that it's not as uncertain as we're experiencing right now. That's kind of the context of what volatility is telling you right now when it's backwardated. When it's in contango, it's telling you that a year from now, there could be something crazy that's happening, versus right now, nothing's happening. So we are in a backwardated situation right now. The question we're going to kind of get into is there a potential edge in selling premium when the shorter term VIX, which is the VIX 9 day we're using here, is greater than the longer term VIX, which is the 30 day implied volatility? The reason we're not using 1 day volatility here is because there's a lot of binary stuff that goes into the 1 day expirations. You have, typically on a Friday, you have 1 day volatility, have bigger swings just because you have a weekend kind of baked into that. You have binary events like JPOW speaking or, the Mag 7 earnings. There's all sorts of things that go into the 1 day that are a little bit more binary than what the 9 day, I think, is probably a better look of like the here and now, like fear.
Yep.
It's telling you got 30 day volatility in the 30 in the 9 day volatility versus the VIX at 28. So there's a lot more fear in the next week or so compared to 30 days, even in that context. So we ran an analysis by examining the standard deviation of a 45-day strangle via these metrics, right? So all positions were held to expiration. We compared two scenarios. So we looked at selling in all market conditions. So this is just regardless of VIX. And then we looked at selling when the VIX 9 day was greater than the VIX. So like looking at situations like we're in right now, where front volatility is significantly higher than back volatility.
Good.
And so the results showed that an average P&L and success rate are lower when the VIX 9 day is greater than the VIX. What that's telling you is that typically when you get into backwardation, you do see some craziness happen. And so this suggests that using short-term backwardation as an order entry signal may not be as effective as expected. It kind of is counterintuitive, right? Because we're looking for high volatility. That's kind of our ethos. You don't want super high implied volatility. Like you don't want, there to be there is a too much volatility. We're kind of in that spot where volatility is pretty high right now. Like
I would say it's very high.
Zone. And so when you look at the average P&L, and this goes back many years for the average P&L, so these numbers kind of skew. It's not really the number that is important. It's like the success rate and just the deviation of your P&L. You can see here, the average P&L is lower when the front VIX The VIX 9-day is higher. Your success rate is also a little bit lower, which tells you that there's bigger swings in both directions. P&L positive and negative, bigger swings when volatility is higher, which is not a shock. So we found that IV level isn't always high when the VIX is in backwardation. So this is one of the main reasons why performance is not improved by checking for backwardation. So, a lot of times the backwardation is not this wide. And so, looking at backwardation is not always the tell. They kind of move in the same direction.
That's why I say it's good to know. It's not I can't put I'm not going to go all in because we're in backwardation or normal forwardation. I mean, I'm not going to do it forward curve. I'm not going to do it that way. I'm going to just look at it as something to know here. Maybe I get a little bit more aggressive with my trades, maybe more delta, less delta, that kind of thing.
I think the key is the P&L volatility. Like when vol is this high, you should expect wider swings in your P&L. When the VIX is at 18 or 19, it's a little bit more consistent, right? You have your decay component, you have the volatility component, maybe a little bit of delta, and things move, but they move in a more predictable sort of way. When volatility is this high and when volatility is backwardated, you're going to have this wider range. And it goes to the story that we've been talking about all year long of taking the money and running and, trading your positions, not marrying your, or hyper fixating on theta or delta, just take them as things move, trade. You got to kind of trade when the VIX is this high. So instead of comparing the term structure, IV rank is a better indicator for determining trading opportunities in general, as it directly shows whether option premiums are trading above or below their average. I mean, this is why you can get into the weeds with, and I like to get into the weeds, and that's part of my market awareness. I like to get into the weeds with all this volatility. If you're just trying to get a simple look at whether there's opportunity, just looking at IV rank is going to tell you, okay, volatility is high here. Your directional assumption, you can pick it or non-directional, whatever, that's your opinion. But all else being equal, you're getting paid to take risk here. And I think that's kind of the story that we're putting out there here with this study.
Yep. And it also shows you can go further dated too. Like if you wanted to go further out in selling premium,
you could go,
certainly.
Right now is a time where you could go, I'm going to go 60 days out.
Yeah, right.
Because you're getting paid, a 25 or 26 vol 60 to 90 days out in time. Normally, that's not the case. Normally, it's 20.
That's right.
So
another takeaway from having high implied volatility across the board.
Yeah. I wouldn't be selling puts a year out in time because that's just still too much. But here, you got a little more flexibility.
Yep.
The VIX and its various durations are useful for exploring the term structure of volatility, but not providing any advantage as a trading indicator. It certainly doesn't tell you direction as we've seen in this market. Instead, our standard approach of using IV rank is better for determining the relative richness of premiums. It tells you whether you're getting paid for taking risk.
100%. And even the S&Ps are up 70, Nasdaq up 250, Russell up 36, and the Dow up 470 and change. Doesn't tell you the whole story here, as we've had pretty much one of the worst starts to a year.
Brutal.
That we've had in quite some time, if not in recent history. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We've got what comes up next?
We got the opening bell.
That's right, my friend.
Come on.
We'll be back in 90 seconds. Let's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means. The opening bell is next. Even the S&Ps are up 69.5. They've actually held up a lot better through any economic news that came out this morning, an hour ago, or anywhere else. Same thing with bonds hanging in here at 113.26. Volatility, I think, in by $1.50 is not enough compared to the market move that we've had so far this morning. But again, we're right where we were yesterday before we sold off. So until we have some sort of sustained rally more than just 24 hours or overnight, volatility is going to stay bid. So the world is your oyster out there. I mean, I think 1x2 put spreads are great here. I think broken wing butterflies are great here. I think selling both sides is great here. I think jade lizards are great here. You can go very wide with the jade. I think some individual stocks are great here too, whether long or short.
I also like big wide SPX butterflies, like equal with butterflies. Like if you're looking,
they're going to trade cheap, relative,
and you're selling that far out of the money short premium, which if you chop here but get a vol contraction, an out of the money butterfly might still be profitable / a scratch, just because
if you don't get the move, even if you don't get the move that you want,
if
we stay inside the expected-ish move or bounce back.
It allows you to hedge a little bit if you do get a crazy down move. I've been doing like 200-point SPX butterflies on the downside for like, you can do them for like, $1,000 to $1,200.
Right, and that would be a $20 wide SPY, which would trade more for 12, 15 cents, something like that.
Yes, same difference.
Cheap.
But the long option that's at like a 30-ish delta or 35 delta, assuming you stay here and volatility comes in a little bit, that goes to like, a 25 delta. It's still relatively heavy, but those shorts.
I'm sorry, I've traded $1.50, not $1.50, not $1.20, $1.50, not 12 cents, 15 cents. Apologize. Keep going.
But that long option that's closer at the money, it's going to lose its delta and its vol exposure, but it's still going to be a relatively high delta option, whereas those further out options that you might sell at like a 1 standard deviation are going to go to
cheap lottery tickets, right?
Yes.
Cheap lottery tickets. And there is your opening bell as even the S&Ps hold steady up 73 and change. Nasdaq up 260. Russell still a leader in the clubhouse up 40. Just a skosh $6 off its highs. Dow up 550. What's that?
Sorry, I was just.
Okay. No worries. Volatility 2660. Bonds up 10 ticks, steady here. 113.31 in the high. See if they can trade over 114. Bitcoin hanging in there at 67, now over 67,000. Ethereum 2,064, about $30 off of its highs. Oil surprisingly up 60, not surprisingly, over 103.5. It's been under 103. Even the S&P is still catching a bit. That's what I meant by surprising. I think it's surprising that it's 103 and change, but others would say it should be significantly higher than that. Gold up 47. Silver up 238 or so, about almost $1, 80 cents off of its highs. I know a lot of people have been playing gold and silver to the upside. Maybe get a little bit of a reprieve there on pricing. Good for you. Net gas up 6 cents or so. It's a 2% move, finally getting a little bit of movement with oil to the upside. I say it's surprising that nat gas has not rallied with the big move that you've had in oil. Nat gas has actually gone the opposite direction. Let's see what's going on in the overall market. I'm looking at the high option volume list. You see on the downside here, really, there we go. Really not too many as you look here, $1, $2 move. Volatility is moving the most here. Other than that, it's all to the upside. Pretty broad base. Let's take a look at that. You've got SanDisk up $14. Meta continues its rally up another $15 to $551 or so.
I sold the puts in Uber that we talked about yesterday. Keep going, sorry.
Awesome, no worries. Tesla up $7 and change. SMH, that's the semiconductors, up 7.5. Microsoft finally getting a rally, up $7 and change. Marvell up 6, AVGO up 5 and change. AppLovin, pretty broad based here with even the S&Ps up 72. You would think so.
Yeah.
Selling puts in a up market like this,
it's up $1 from the lows.
I get that. When you take a look at Uber, I was going to give you props. It really hasn't gone anywhere, right? I mean,
we mentioned it as a mover yesterday, so.
So you're doing something about it.
Yeah, and I forgot to put I don't like to do anything without doing something.
Yeah, sure.
I'm not. This isn't a fake news network.
No. Totally understand.
So I'm trying
S&Ps just dropped 10 handles, are up 64.
I'm trying to do a 1x2 in service now. There we go. 10
hard
cents.
one to trade.
I did the 190 put ratio spread. You mentioned ratio spreads. I think that's a good spot to go if you're a little, you don't want to go crazy here. So
service now basically unchanged, right?
Yeah.
When you look at the markets in there,
they're not great.
They are not great.
I forced that.
You forced it. You're allowed.
Yeah.
You're allowed to force it. That's okay. You want to look at a 0-day trade today?
Yes,
I know it's a little bit early
Let's
in the day for it, but it's something you want to look at. It worked for us yesterday.
What are you thinking?
I think you go your $15 wide one. I think you
want to set it up around the 20 delta for the shorts?
Sure.
As I look through.
I mean, you have a little long delta in your overall portfolio. If you wanted to skew it one way or the other, you could. I personally probably just play it down the middle.
Let's do it delta neutral. Let's do the 20 delta. Just make sure you do SPX, all right? You do ES sometimes. You get all.
It's March quarterly, March 31st. You think we're going to stay elevated because it's the end of March? So you're looking at the 20 delta on one side. You want to go $15 wide. I'm just asking you the question.
Yeah.
Then you can talk about it. And then you go to the 60, 75. It looks like it's trading for around $4.70-ish cents.
Yeah, let's do it.
And you want to do it in SPX, correct?
Yes.
Gotcha.
I'm also Meta up $18, $19 now.
There you go.
Oh, there you go.
Goes right there at 470. Looked like it oscillated around between 460 and 480, so I just kept it in there at 470. But we got caught a little bit of an uptick in the market. When you look at that trade, it has maybe a one short delta to it. So as it rallied a little bit, you caught a little bit of you got filled at mid price that you put it in at.
Yeah, I'm gonna try and roll. I'm just short the Meta 600 strike puts.
Okay.
Oh, shoot.
What's the matter?
I'm just messing up my pricing.
Okay.
But I'll get it. I'm going. I mean, the markets, as you mentioned this morning, you might see $2 or $3 wide bid-ask spreads.
Oh yeah.
Across the board. So just watch your pricing. So I'm trying to, do my due diligence here and price them,
Price them accordingly.
All right. I just rolled just to the 600 strike in May.
Beautiful.
So I'm still long here. I did it at 10 or 1180.
Okay. Good job to you. You're talking about that at 1190 actually got filled.
1190. It's basically a cover call at this point. If we get up to 600, I'll probably look to sell the call, but I want to lean a little bit long there just because we've gotten kind of myrtleized.
Nothing wrong with that. You certainly can do it. So now you have that kind of FOMO. People who have put on trades maybe from yesterday, thinking that you missed, the down move. What do I do now? What do you usually do when you've got
I don't think you've missed anything.
No, I don't think you missed anything on either side either.
I mean,
So if you were looking to buy the market yesterday, I think this is a place where you do both sides, where you sell a put that's a 25 delta and a call that's a 15 or 20 delta and get your long delta that way.
Yeah.
You know what I mean?
Yeah, for sure.
If that's what you're looking to do. If you're looking to, if you put on some fortunate trades that were beneficial in a quick, short period of time, I think you still stay nimble here.
Yeah, for sure.
I don't think you missed anything. I don't think the
game has changed.
Mm-hmm.
I mean,
That's
it's
true.
still, you still got high implied volatility.
Yep.
Across the board.
You do. Yep. Actually, everywhere too.
Yeah.
Let's take a look at the market if anything's really changed here. Dell down around $4 and change. Volatility products, and then you've got MU down $4. AAOI, I get some emails about that sometimes. Trading down around $3 or so. CRM trading down $1 and change. PDD down small. BABA, some of the Chinese stocks down small.
Yeah, they were hiding in those pigs yesterday, and now, you get like a $2 or $3 move in something like CRM on a day where the market's lower. You got to think people are just like, okay, this can't possibly go down, 5% like everything else. It's already down 50%. That's what it feels like.
It does.
Some of those moves.
It does feel like that. UAL, what are you doing there?
I am short puts there. The 85 strike put, you're getting about a $2 move today. I sold the 100-110 call spread against it, so I have a Jade Lizard there. Been doing a lot of Jade Lizards here as a way to get some long delta, but not, full boat.
Statistically better than the naked put.
Sure. Higher probability, you're collecting, more premium, you're getting a better break-even point.
Yeah, you're doing it almost as not a defensive move, but you're already short a put. Now you're selling a call spread. You're just trading.
Yeah.
You're actually staying nimble. You know what I mean? Instead of closing the position that you have, just staying nimble and doing something against it, reducing delta by ever so small an amount.
Yeah. I had a silver diagonal spread, 65.70. Silver up 3 1/3% today. And so I closed out of that. I did those at 336. I closed them at 452. So took a couple bucks out of that.
Yeah, this is a good example of, shorter dated, 17 days versus a 45-day, trying to take advantage of a move, and you got the move. So why wait? 3.5% moves, good size move. Good job out of you.
Anything else here?
So far, we haven't had too much movement. A lot like yesterday, where we first started out the day, we only had about a 5-ish handle move for the first 15, 20 minutes. And then the day got a little bit more aggressive after that. Volatility, 26.75, about 40 cents off of its lows. And oil still bid at 103.52 in the middle of its range. Still up on the day, up around 60 cents.
What's the OVX at? The OVX.
Semicolon. What is it again?
CGI.
CGI. There we go. I knew I had it there for a moment. Down about $3.50, 92 and change. This is what you talked about this morning. You don't think you're going to see volatility back up at that 120 range, where you think that maybe oil kind of settles in here.
I think so. I mean, that's a good sign. Gotta work.
Yeah, so you're
I mean, that can switch though. I'm thinking.
So what you're thinking is oil in the 90s, volatility in oil OVX in the 60s.
Yeah. Yes.
Like volatility comes in, but price stays bid.
Price stays there. It's high. It's uncomfortably high. There, it allows for everybody to still call for 200. It allows everybody to call for 60. You know, like it puts you in that range where it gives you a wide, distribution of expectations, but a little bit lower and less volatile than what we've been seeing.
Unlike some of these, like I said, oil and gold and silver, we're trading like meme type stocks. You think oil, and I agree with you, is going to be in play a lot longer than these memes.
Oh yeah, I think oil
doesn't go away. The situation doesn't go away.
No.
Even if it does get resolved, kind of thing. The situation itself doesn't go away.
Correct. I think we're going to be in sort of like, even gold.
I think that's a pretty popular.
You think so?
I think most people are going to feel that oil is going to stay in play. I think it's really going to surprise you to the downside.
Okay.
That's my taking.
I feel like most people are upside speculation.
I give you that too. I give you that too. It's going to be in play. Yeah, that's what I mean by in play. Yes.
I don't think there's. I think they're on the extremes, which makes sense because volatility is so high.
Yep.
Tells you that people are speculating on the extremes.
Yep.
I don't think people are positioned for 90, a middle of the range. I don't think that's in play. But I think it's going to be like a gold and silver situation. I mean, gold and silver are still in play.
Yep.
Like they are still I have friends that are buying SLV, and that was not happening a year ago, and they're still doing it. So,
well, I like them doing it now rather than before.
Yeah.
I mean, I like them.
Well, they were doing it before too. Don't.
I get it, but when they were chasing from 40 to 60 to 110, I don't think they sold at 100.
No.
You know what I mean? Like, you're back in the middle of its most recent range. I don't mind you looking to put on a directional position there.
Yeah.
So good on you.
Again, today I am just kind of putting in working orders to close stuff. Like I have a Jade Lizard in Citigroup. I have a Jade Lizard in Coinbase that I'm putting in working orders to take whatever your number is. I put them in for $100. I'm leaving these in. Maybe if volatility contracts a little bit, if this bounce continues, you get filled on those. I think that's kind of the what you got to do in this sort of market. Because if you've leaned mostly long, the 80 points today, it's not enough delta wise. You were long. If you were in any of these markets trading on both sides of the market over the last 3 weeks, your long spot is probably like 65.50,
right?
6,600. Like this is a good day, not the full.
You need more.
You need more.
I need more. I think most people need more.
Yeah.
Let's take a quick 90-second break because I need more of this next guy. Let me explain with Chris. He's going to figure all this out for me. I'm going to be back in 90 seconds. Let's take you live. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in-the-money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the ex-dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number, and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. But let me explain. Chris Vecchio in the house. Christopher, how are you?
I'm doing well, Tony. How are you today?
I'm doing okay today. Market's up 1.5%. Russell's up almost 2%. Volatility only in by $1.50. It really $1.56 really hasn't moved at all morning, even as the S&Ps make new highs. Christopher, what do you think's going on here? Let me explain. Explain something to me.
It's a good question. It feels like we're riding the roller coaster of the headlines again here. I mean, if you look at equities today, you'd see that things are calming down a bit. But when you zoom out, volatility across the complex, the story's not so clean, I would argue. The VIX is coming for sure, but VVIX is staying up. And if you look at the MOVE index, rates volatility hasn't collapsed. Oil volatility is still very much alive. So we're not looking at a market that's healed by any sort of stretch of the imagination. This surface level calm that we're seeing in equities today is still masking a lot of the pain and uncertainty that sits beneath the surface. So, from our perspective, I think that's an opportunity. We like to see elevated implied volatility because it gives us the premium that we want to sell, right?
Yeah.
We just have to be careful about how we express that here. Defined risk since mid-February has been the name of the game when we were in that dispersion environment before the war. So that really hasn't changed. And even if you're wrong, hopefully that you're wrong to a smaller degree because of that defined risk nature. But I'm curious here, vol having come in, it's not low per se, it's lower.
Yeah.
Now that we're in week 5 of this war, how are you guys beginning to position yourselves? Because it's also the end of the quarter. So we are dealing with end of quarter flows today, which tells me maybe some people are covering their shorts and we shouldn't get too excited about things.
Come on. Even the S&Ps were down 40 handles last night. Those people were selling into this move in oil, which was up to almost 107. I mean, you mean to tell me after all this selling, you don't think at some point you're going to get, even if it's a dead cat bounce, you're telling me it's because it's the end of the month and Mark Scally's birthday? My childhood friend?
Mainly because it's Scally's birthday. And I would point to the fact that we haven't quite reached levels in valuations that would be, maybe bottom picky yet. Mag 7.
This is the worst. This is the worst worst quarter probably in the last 15 years, maybe the last 25 years. I mean, I'm going from memory here. Somebody can check it out.
Mag 7 PE ratio is currently still sitting around 24. It bottomed last April around 22. When you go through what happened in recent years, like in Russia-Ukraine year, 2022, Mag 7 PE ratio bottomed around 22, 21. So we're not there yet, right? For those like longer term bottom pickers to step in and say, the market's fallen far enough, I can buy and hold this for the next 5 years. But we're close.
So I prepared for you because I wanted to hit you with statistics. Not statistics, numbers that you like to talk about.
And these come from the Taiwanese sources.
These come from the Taiwanese
we cannot
sources.
verify the validity of these.
That's correct. Technology
Let's see
stocks
what Frankie has to say.
Technology stocks have rarely been this cheap. According to some, the S&P 500 technology index is now trading at just 4% forward PE. The lowest since January 2019.
Okay.
The percentage has fallen 32 points since October of 2025. I mean, if you're a macro guy, I mean, that's the picture you paint, isn't it? I'll give you one more. I'll give you one more because I just didn't want to give you my opinion. I have others here. Tech stocks are now trading at the cheapest valuation relative to the S&P 500 in more than 7 years.
Ooh.
Isn't a big component of that software, though?
There's always something.
Yeah.
But a fundamental belief of a big component of the tech sector for the past decade plus has been that software grows in perpetuity. It is a double-digit growth engine. Nothing can stop that train. Mark Andreessen of A16Z famously said years ago, "Software is eating the world," right? And all of a sudden, we learned in recent weeks, months that it's actually it's a zero.
Yeah. So actually it's worth nothing and AI is going to replace it in 6 months, which I think is a little extreme too.
Of course it's extreme because the reality is, when you look at the process for building this stuff and you've seen a lot of company CEOs say this, they're not using AI to go wholesale and replace the B2B, SaaS businesses. They're using it to augment, to supplement, to increase productivity.
Yeah.
And in fact, it's the labor churn it's leading to. The National Bureau of Economic Research put out a paper last week about this. Of course, no dorks out there unless they're me are reading stuff like this. But they pointed to a survey. They conducted a survey of 750 company CEOs and asked them of the 750 largest companies in the US and said, how are you using AI? And they said at the margin, it's not costing us jobs. If anything, we're getting rid of some of the more rudimentary clerical work, like the spreadsheet work, and we're having to hire more higher end engineers to handle additional workflow, which require greater technical expertise. So it's producing upskilling in the jobs market right now. And these headlines that we're actually seeing, like, Jack Dorsey is firing all these people and he's blaming AI. Oh, Jack Dorsey likes to overhire. He's not exactly a great people person in terms of building out companies. And we saw this with Twitter. He fired 80% of the staff. Musk, and the service suffered a little bit at the get-go, but it's still up and running. So clearly didn't need all those folks to keep the business running. AI is an excuse to get rid of a lot of the bloat that we had post-COVID for some of these tech companies. But Tony, the bigger picture, you mentioned the ratios, the PE ratios here, the valuations. You can't bank on a certain segment of the market having those durable peak valuation PEs of a 30 or 40 or 50 times PE now. We've seen this across industries over time as the technology develops. When you move away from peak growth and it becomes more of a moving on to the next thing, the valuations, they get downgraded. So maybe software is a 20, 25 PE type of business now instead of a 50.
Okay. I mean, you can always move the goalposts if you want to. I was just stating facts.
Yeah.
I mean, I don't know.
That's what you guys pay me for.
I don't know why, if you've been, and you've kind of been a little bit pessimistic in the market. I mean, I'm trying to give you.
My Vecchio bull is gone. I'm waiting for him to come back because I know that'll.
And I was wondering, what does it take to get that if you have basically the perfect storm? And I don't mean it had to be yesterday. It could have been last week. I mean, we had the worst quarter in recent history. What wouldn't make you pound the table? That's all.
Well, yeah.
Well, the seasonality here isn't great moving forward. We've previously discussed, and let me explain the difference between year 2 versus year 6 of a president's term. Because it is Trump's second term.
Isn't this one of the strongest quarters coming for
depends on how you slice it. If it's a year 6 of a presidency, which typically would be listen, just hear me out. Let me explain.
It's year 2, right?
Well,
I know,
year
but
two's
if you
bad.
count the other 4,
Yes.
I get it. Yeah.
But all the other year 6 presidents were consecutive terms, right? So like this is where we can have our debate about this and why there's differences in opinion around should you even trust the seasonality. And I've even argued, I don't know what you can trust here this year. But let's say it's a year 2. Year 2 tends to be bad for the market. Year 2 of a president's quarter 2 of the second year of a president's term since 1950 has produced a loss of 2.8% in the S&P 500. It is the worst quarter of a president's term. So you're not looking for help.
So how are you looking at it? As 6-year or 2-year?
Well,
today, I guess is the way I should ask. How are you looking at it today?
In January, because we didn't get the Santa Claus rally, right? We got coal in our stockings. We were on the naughty list.
Naughty.
And then
He was the naughtiest.
The January effect doesn't go into play. We had said at the end of the month, maybe we're leaning more towards year 2 than year 6. And right now we're leaning more for a year 2 than a year 6. More pessimistic, less optimistic here.
So you're saying present pricing is telling you what to look at?
Yeah, I think so. Yes. Yeah. And oil not coming in, like you have this headline overnight, oil not coming in is probably a bit of a tell. But also I'm trying to be an optimist here, Nick. You're right. The bull in me needs to come back out of this. So
I need it.
Here's the optimist scenario, right? Aside from the humiliating defeat of us walking away without reopening the Strait of Hormuz, because the war has seemingly become a war to reopen the Strait of Hormuz, which is only closed because of the war.
Yeah. Well,
let's say Iran puts a levy on all the oil that's going through, right? Let's say they decide to charge a $5 a barrel levy, right? So on a VLCC that has 2 million barrels, that's a $10 million fee.
Okay.
If you're a country like India, you're paying that fee because it's $5 a barrel. Instead of importing at $70 before the war, you're now doing $75. You can stomach that and you're willing to just play ball. You don't give a hoot about the implications for American domestic politics or what's going on in Europe. If you're South Korea or Japan or Thailand or Indonesia,
you don't have a choice.
Your energy. You don't have a choice but to play ball. And so then the commodity supply chain kink starts to unfurl. If you want to be the optimist here, you're going to say that even if the U.S. walks away with seemingly having achieved decapitating the Iranian regime, it seems to be a hydra and growing back a new head. The Iranian military, the Navy is decimated for sure. The missile launchers are destroyed. So time has been bought. The nuclear program disassembled. Okay, those military objectives achieved, but the strait allows the goods to flow. We can start to have the conversations about being optimistic. I think this is a molecular disruption. I've maintained that point for the past month. I have deep-seated concerns about what's going to transpire. I look at the workday closures, the news out of Asia, guys. Kids are staying home from school. It's like COVID learning environment again, 4-day work weeks. Buildings are not allowed to use AC. They're fuel rationing across large swaths of the Southeast Asia. Europe is not immune to it. So Trump telling Europe that they need to get their act together and get their own oil. I mean, there's a timing component to all that because Europe really does have a closing window before the pain in Asia starts to move over across the world. So we'll see. I feel like today is end of quarter bounce after a very weak quarter. Oil isn't coming in. Bonds are still up. Oil is still up. Gold is still up. I don't see any reason that we should be optimists for stocks just yet.
Yeah, and you have
You're not going to tell me that we hit the Globex low last night?
This is another one of his Taiwanese.
We hit the Globex low from a week or so ago. Actually, less than that. You're not going to tell me that? Like this is what I mean about when you try to lay something on another time frame. I mean, you could pound the table for all of these things why the market is higher this morning, but we're not going to go there.
Nah, market's lower. Look at the trend. Trends are still pointing down.
So the oil,
keep it simple.
So the oil move, you have oil volatility coming in. You have oil at pretty much the highs of the last couple weeks here. I think this was the first time we closed above 100. Are you in the camp
since 2022?
Since 2022 was the last time we were above 100?
Yeah, on a closing basis.
So are you in the camp that it's higher oil, higher for longer? I don't want to say that because that's been stolen by the Fed here. But like, what are you thinking has the upside tail been taken off the table in your opinion? It feels like it has been, in my opinion.
I think it has, but I've been sitting on this short 120, 122, and 122, 124 call spread in oil for like a month now.
Yeah, that's not.
And I'm still losing money on it.
Volatility is still high. Yeah, you're gonna hold that for a little longer. But do you think the tail upside is kind of baked in, at least at this point?
I do. I mean, we'd have to see just decimation of energy infrastructure here henceforth. Like tankers blowing up that are waiting to cross the strait would get that kind of spike.
Yeah.
The other side of this is like for commodities themselves. And Tony, you've been through more cycles than Nick and I have, and you've seen this how many times where when commodity prices get too high, eventually they just collapse because no one can afford to buy them anymore. Oil becomes a snake eating its own tail. And so if the longer oil stays up here, then demand falls. And the main point for oil is that its correlation with global GDP on a rolling quarterly basis over the past 30 years is plus 0.93. So if the economy globally, if Asia starts to fall apart because it's just too expensive and industry shut down, then global growth is going to fall and demand for energy will fall. And then oil prices will come back in. So you can't commit to oil being at 100 forever. But in the short term, it seems like it's staying sticky. So for now, I feel like buying dips in oil, selling rips in stocks remains the modus operandi until.
But you don't have a dip in oil. It's 103.
Yeah, oil
102.60.
Yeah,
we had a dip last Thursday when Trump kicked out the deadline at April 6th.
I told you April 4th. I don't know what he's telling you. April 4th.
I don't know.
No, it's April 6th.
April 6th?
April 6th now. Because that gives you the whole weekend.
I'm always a little bit early.
You can still do something this weekend.
Timing it with Easter Monday, it's great.
Yeah, it's perfect. Unbelievable.
Easter Sunday.
Bonds, gold, silver. What are your thoughts there?
Bonds look like they may be bottoming.
I hope so.
That's one of the major peculiarities of the market over the past week is even as oil moved up to 100, 102, 104, 106 last night, rate cut odds are coming back into play. And throughout the month of March, you had your cut odds disappearing, and then hike odds rose to as great as 1 in 3 chance of a hike by this October. And then when oil crossed $98 last week, all of a sudden something turned, and you started to see that cut odds were going up across the board, almost to say like the market's looking through the potential inflation problem and thinking that there may be a bigger issue to worry itself with down the line. And that's and gold has followed that path as well. So that reminds me, since 1980, right, what two asset classes have performed best during recessions, if that's what the market's starting to lean towards, or at least, put a little bit of capital in that corner, probabilistically speaking. Long end of the curve and gold. That's where you hide out during a recession. So, Tony, you've heard me say before, when the rate cuts come, what variety are they? Maintenance, recession, or emergency? I have a funny feeling that the next cut, if it comes, is not going to be a maintenance cut. So the forward returns to the market in emergency and recession cut scenarios for 1, 3, 6 months out are not great. And so just thinking about it in that framework, when the Fed does move, if they were to move to a cut, as the market thinking is now most likely the next move, why would they be cutting? It's because whatever has happened with inflation is transitory, and they have bigger fish to fry on the other side of this. And that just, given the history there, it doesn't make me feel great about stock markets right now. And then you get your year 2, Tony. You get your year 2 of the president's term, which isn't so great. This is the worst quarter for it. Hope springs eternal in the spring, maybe. Well, late spring.
Fair enough. We're going to let him go?
Sure. I think we're very close to the JPM collar here.
Oh.
64.75, I think, is the strike, right?
And I've seen some folks say that if we clear 64.75, that could trigger another wave of buying for about another % or so in the market, up to about 65.30.
Oh.
65.40.
Okay.
That's what the option geeks in my Twitter feed are saying. And those people are much smarter than I am.
No. Don't go there.
See what I did there?
Don't go there. No.
Now you guys are complimenting me. I feel good about myself.
You're sneaky SOB. You certainly are, my friend. Good job out of you. Even the S&P is up 101. Nasdaq up 413. Russell up 50, and the Dow up.
I sold another one of those Nasdaq call spreads.
I saw that at 38.50.
I've reduced a little bit of delta here into this up move.
So you're basically.
I'm listening to Chris too much. He's making me less bullish here.
Understood.
Nick, about 5% ago, you asked me if we're going to Valhalla or hell, and I said hell. So,
I know you did. I didn't like that.
Mm-hmm. I don't like it either. All right, my friend, we're going to take a quick 90-second break and come back. We got more Tasty Live after this with Market Measure. That's right. Even the S&P's up 101.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with the market measure. But first, let's take a look at this market. Even the S&P is up 92. Nasdaq up 360. Nasdaq about 70 handles off of their highs. Russell up 44. To leader in the clubhouse. Dow up 550 and change. Volatility hanging in there. 26.55. I would expect a little bit more from volatility. Just hanging steady.
Yeah, it is hanging steady. Oil hasn't gone anywhere.
102.80. Gold up 80.
Yeah, gold having a nice move today.
Yep.
And I definitely needed that.
Yep.
But yeah, managing a little bit of my delta here. Just I sold the call spread in the Qs. I took off a call spread in Micron. We did a wide iron condor there.
Okay.
So just like kind of taking some risk off the table that has come in.
Beautiful.
Yeah.
That's what you should do.
Yeah.
Being nimble.
I took off one of the micro Nasdaq contracts I had. So I'm taking off some long delta into this move. Still long. Still very long.
Yep.
Too long.
Yep.
Cool.
Completely understand.
Let's do it.
I'm ready.
So we got a market measure. The primary risks of selling short-term options, what would be the primary risk in your book of selling short-term options?
Just the movement, my friend. All you got to do is look at our SPX trade, just the movement.
Yeah, what are we at there?
535. You're at about
all right, so it hasn't
40 cents. Hasn't moved too much. I mean, even hasn't. I mean, it's moved.
You got a
obviously.
10 handle down move. You probably get filled on that.
That's correct. That's about what you need.
Yep. So the strong selling point for shorter term options is that and this is sponsored by the SIBO. The strong selling point of the short term options is that their premium depreciates much faster in the final days of the expiration cycle due to their high theta. So, a lot of people get caught up in the theta number. Why would I sell 30 days out and get $5 of theta decay when I could sell 7 days out and get $25 of theta decay? And these are all things, there's always a give me a gotcha, as a great man once said. Dr. Jim Schultz, our very own. There's always going to be a give me a gotcha, right? With shorter term options, you're going to have a lot higher exposure to all of the Greeks. You can't just look at one in isolation and be like, oh, that's better than this one. There's always going to be a trade-off with everything. It goes to the discussion we had earlier this morning about, duration and why we choose that 30 to 60 day time frame. All things considered, you want to be in something that's going to move, not going to move too fast. It's going to have exposure to time, but not, too short on time. It's going to have exposure to volatility, but not too much volatility. And if you want those sort of things, there is an option market for you. You can take those. But, as a core position, something that you do over a long period of time, you want risk and reward, but you don't want too much risk and reward. You don't want those huge swings day to day. And so, that's really what we're going to be talking about today. So the average premium decay per day for weekly options is much higher than for 45-day options. It's just a function of the math. It's just a function of volatility, a function of time, indicating a potentially greater return over the long term if we keep trading them. So on this next slide here, when you're looking at the average premium for a 16 delta strangle, 45 days out in time versus 7 days out in time, it's not a linear progression here. You don't sell something 1 week out for $10, 2 weeks out for $20, 3 weeks out for $30. That's not how the decay curve works. There's more premium and there's more volatility, more uncertainty baked into shorter durations versus longer durations. So, this curve kind of steepens out as you get closer to expiration and flattens out as you get further out in time. So when you go from 45 days to 145 days, it might only go up $40 or $50. Like that perpetual step is not the same value. And so a lot of people get caught up in this idea that there's more value in 7-day options. There's more value in 1-day options. There is, but there's a caveat to that. So when you're looking at these options and premium decay and the theta number, it's going to be exponentially greater, shorter duration. And that's not necessarily a good thing for everybody. And so in high IV markets, these short-term options appear even more attractive. So when you look at markets that you're in like now, where the VIX is sitting at 2750, volatility is very high across the board in single name equities in the market as a whole. Volatility is really, really high. When you look at all markets, that's kind of what we were looking at on the last slide. When you look at the VIX above 25, you could see there's a multiple there, and it multiplies even greater in the short term. The short term options have even more juice relative. That curve seems even steeper. And that's just because volatility is very, very high. And so when you're looking at high implied volatility markets like we're in right now, you should expect to see even more juicy premium in that 7-day. The question becomes, does it become more advantageous to sell those options or to trade those options versus lower volatility markets?
That's the $64,000 question, right?
Yes.
What do you want, direction or theta decay?
Yes.
No wrong answer.
No wrong answer, and it depends on your risk tolerance and your capital, and
depends on the market move more than anything else, because that's going to validate you.
That's going to determine whether you're right or wrong. Right. But I think ultimately the risk tolerance is a big piece of this pie.
Sure.
However, there are critical downsides to using short-term options, such as weekly or 0DTE options, and we're talking on the selling side here. The cumulative losses can be larger during consecutive losing days or weeks. One of the things that you don't really think about, because everybody's thinking about how much money I can make, those losses, they get very big on short-term options. When you're looking 30 or 40 days out and you sell a put and the market drops, my meta put, for example, where I'm short the 600 put, it stings a lot. But there was a lot of duration on that trade. I put it on when it was like 30 to 40 days to go until expiration. I'm rolling it here at 17 days. If you had put that on with 17 days to go till expiration, and instead of selling that option for $12, you sell it for $3, and now that option is at $50, $5,000. It goes from $300 to $5,000. That's a huge move. When it goes from 12 to 5,000, it stinks. It's a painful trade, but it's a lot less painful than that shorter duration option. So, those are big moves, and the cumulative losses can be even larger when you're doing this day to day, when you're doing this in something like SPX, where your cash settles, that money is in your account or gone at the end of the day. That's it. There's no management, there's no role,
It's pretty clean.
It's pretty clean, which is a positive for a lot of people.
Sure.
Mechanics designed to reduce volatility, like rolling or managing positions, exiting early, they might not work in 0-day options or shorter duration options. You don't have the opportunity to manage the trade and roll forward or do any sort of adjustment. It's pretty binary. So that's another caveat here. So even though single losses appear smaller for weekly options, they carry the potential risk of experiencing multiple consecutive losses over time. So this is especially risky in one-sided markets such as those that we had in 2008, 2020, maybe even now we add that in. Additionally, weekly options underperformed 45-day options on multiple fronts. So when you look at these numbers, you'll see your buying power is going to be lesser further out in time. Your win rate is going to be higher. Your daily P&L is going to be slightly higher. They're very much in line. But the largest loss, obviously, is going to be bigger on the further out options. But when you take into account the amount of transactions that you're in,
7, 14, 21, 28, 35, continue.
5, 6, 7, 8 occurrences, if you have strings like we've seen this year where, prior to this year, the SPX, 30 delta put spread had like a 95% win rate and it's free money every day.
Right.
And you have stretches like this where 45 days out, like the meta put, it's a painful put. It's 1. If I was doing that every week, I'm taking, $3,000-$4,000 losses every single week. It's a way bigger position.
Coin, you got filled.
There we
865. Good job.
Those are some of the orders where I was just putting in orders. If I got filled, besheret, as they would say, blessing. You like that?
I haven't heard it in a long time.
A Passover is coming up, so I'm just doing my due diligence here.
Sure.
The point being, when you have shorter duration trades, everything is great until you get punched in the mouth.
Yeah, as Mike Tyson would say. Also,
yeah, it's everything is great till you get punched in the mouth, and when you get punched in the mouth, you realize, okay, you know what? I had a little bit too much risk. I was getting a little too excited about it. And that's what you see here is that, your 7-day risk, so to speak, on a one trade when you're measuring 1-to-1 is going to be lesser just because, you don't have as much duration here. But when you take into account that if you're trading this every week, you pile those together and you have consecutive losers, the numbers get very, very big. And that's how you get too big for your britches.
That's correct. Too big for your britches. Another term.
Proactive management does not improve the performance of short-term options as effectively as it does for the long-term counterparts. The overall performance is still worse than longer-term options. This just goes to the fact that when you are trading short-term options and something does go wrong, your management, the amount of delta reduction, premium collected, time that you're adding, it's not as significant as those, rolling at 21 days and going back to a 45-day option. When you're rolling at, 2 or 3 days to go till expiration, going to a 7-day option, you're just moving that risk forward. You're not really getting paid to continue that risk. You're really just, moving that risk forward and kind of pushing the realization of that risk forward in time. And you see that in the 7-day metrics here. Your win rate, you're not really increasing your win rate. Your daily P&L, you're not really moving that much when you consider it relative to 21 and 45 days. And your largest loss is still a very big number. Like you're not reducing anything through the management of an option that's you're only moving, handful of days out in time.
Great, very good.
A couple takeaways for you. Those short-term option strategies have higher potential profitability. Their performance might not be as attractive as it seems due to the higher volatility and greater losses over the same period. You're always going to have more risk with more reward. I mean, that's always going to be the case here, and you see that in short-term options. These short-term options are highly susceptible to strong directional moves, making them difficult to manage effectively, such as by exiting early or before expiration. I think the takeaway here is that you should incorporate short-term options into your portfolio.
Yeah, I mean,
but you have to understand that there's going to be a wider risk, a wider distribution of returns if this is going to be a larger part of your pie.
Agreed. And listen, we used to talk about it back in the day, how every strategy that you use in the shorter term becomes to fruition immediately. So if you're looking to see how iron condors work, which is what we're doing, you get to fast forward time exponentially. If you're looking to buy puts, buy calls, and sell something further out to enhance your cost basis on it, wonderful strategy to use in 0 days. It doesn't have to be all in 0 or shorter term 7-day options. It can be, you've used them better than we have in the past on this show with your diagonal trades. If you have a shorter time frame on the expected move, you go a little shorter with your risk. More risk, more reward. I mean, It really is kind of a perfect math model.
Yeah. And ultimately the sizing, as always, is going to be the determinant of whether you can continue doing this. You got to keep the lights on. So sizing appropriately. It's not always about the biggest reward that you can get. It's about maintaining that consistency.
Yeah, and I will say that a lot of people in smaller accounts have, like we always talk about, how do you 45-day strategies that we do as a whole are slow-moving vehicles, all things being equal. I know the last 2 weeks they've moved a lot faster than a lot of people wanted. Mm-hmm. We've had a move that we haven't had in years.
Yeah.
In a short period of time. 45-day strategy is more of a wealth preservation type trade than a get-rich scheme.
Yeah.
0-day options are a get-rich. I don't want to say scheme.
Or get poor.
Or get poor. I mean, we highlight that pretty extensively. We always say that there's, it's a double-edged sword. But if you're looking in a smaller size account and you're looking to take advantage of the moves that we've had in this market, and you're looking to ramp things up, I don't fault you.
No.
I fault you in a larger account where you've just been kind of trying to maximize returns.
You have a little bit more flexibility.
And you have more flexibility. These are just momentary blips in the market where you have to take a little bit of a drawdown that you didn't want to have, but if you stay to the program, it's going to typically work out over time. We just had Chris on. We can go back as long as you want to watch it work or not work, depending on how you want to look at things. But if you're in a smaller account, it's probably the time to ramp up.
For sure. Yeah.
And go shorter dated.
For sure.
We'll take a quick 90-second break and come back. We got more Tasty Live. We've got Marty. I got to give some extra time to him because he can talk. Marty, if you're listening, we can't wait to have you on the show. And we've got my man Glenn coming on. Even the S&P's up 103. They've moved about 15 handles, maybe a little bit less.
Yeah, where's our SPX at? Are we close?
No, SPX, you're trading around $6 now. It was down to around $5, $4.80 or so, and then rallied back. Because we rallied in the market. Nasdaq up 400 and change. Russell up 46. Dow up 520. Volatility in by $1.90. That's about as low as I've seen it since we've been on the show at 26.35. I know it was 10 cents lower than that. Bonds are up 7 ticks, 113.23. Bitcoin caught itself a little bit of a bid, up 1,170 to over 67 and change, almost 68. Ethereum 2,090, just a skosh off of its highs. Oil hanging out at 103. I got to say, oil's probably the most resilient of everything going on, even with the market up, 100 handles. Gold up 82, silver up $3.40. That's been the strongest of the metal plays here. Nat gas up around 6 cents or so. Let's take a look at the overall market movement here. SanDisk up 32, about $5 off its highs, but you can see here it's a great mover, horrible option trading product. Markets are wide there. Lilly up 29, Meta up 20, continues its rally. I know that's something you need, but again, saying it's up 3 or 4% today doesn't give you the whole story here. 72 hours ago, it was trading at 600. APP up 13 and change. TSM up 11. BE up $9. That's another stock that's kind of gotten hit too. Saying it's up 7.5% doesn't give you the whole story here. It too has gotten hurt. I think it's still both sides. High implied volatility everywhere. Gold, Google up $8 and change. CRWV, you got me into yesterday.
Probably take that one off.
Up $5 and change. I'm going to take a look at that. So I'm giving you credit. We're going to
I closed out of that so I've been trading these SPY as a way to the crab trade. Buying a further out long option, so around a 40-ish delta, 40 to 50 days out in time. And then I was selling two further out of the money options in the shorter duration, the April expiration. It starts as basically no delta, but you're short front volatility, which is very high, and you're long back month volatility, which is still very high, but is lower relative to what we're seeing. And so I did that SPY trade. Let me find it.
Talk to me, Goose.
And I can pull this up. Just give me 1 second.
Okay.
So this was a 1x2. So I was long the 640 put in May, short the two of the 620s in April. With 2 days, with 17 days to go till expiration, we actually put this trade on where you have more risk on the downside because you're short an extra unit. It's a ratio spread where the long option is further out in time. We put this trade on when SPY was at 657, which was about a week ago.
Okay.
We've had almost a $15, $14 down move, and that trade where you have risk on the downside. I did that at $4. I just closed it at $6.63. So we took $260 out of that trade. But the trade was profitable because you're getting this volatility contraction, which is in the front. We sold volatility when it was high. It went higher. But you also had that long option, which is going to hold its value. So really, it goes to the conversation. We could look at the IV index too. So we sold 24% implied volatility. It's actually at 26% right now. So volatility has actually gone up, the market's gone down, and that trade was profitable. But what happened is that you're short the units, you're short the tail volatility, which really came in. I mean, if I can look at the option prices, but it's a little harder because they're different durations. But the point being is that the selling the 20 delta puts worked despite the market being lower, and that was just because volatility was very, very high, and your time decay came into play.
Yeah, good job out of you. I'm going to be nimble in CRWV. My option trades today, trade from yesterday. looking to make $1 on that trade, made 50 cents on it in a day. I think you got to run like a thief in the night. Again, just trying to stay nimble. CRWV, a stock that hasn't had an uptick. You catch a little bit of an uptick. Why wait for, another 2 weeks of sideways action if that's what we get? To get another 50 cents on it, just close the trade and move on. We're going to take a quick 90-second break and come back. Even the S&P is up 104, volatility 2630, about as low as it's been as even the S&Ps are on their highs. What's that?
I said that's interesting.
It is interesting.
Volatility at the lows. It's good.
Finally coming in a little bit as the market rallies here. We'll take a quick 90-second break and come back. We got more Tasty Live. My man Marty and Glenn next. Sounds like a cartoon.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live, and it is my pleasure to bring in fan favorite, this man from the Tasty Trade World headquarters, Marte.
One of the best intros of all time.
How are you, Marte?
I'm excellent. Trying to keep up, trying to compete with your beautiful glow.
You got a glow, too. Where'd you go? Well, you went, I know where you went. You went to
I was in Florida.
To the East
I went to
Coast.
visit my daughter.
Went to visit your daughter.
Yeah, brought my son there.
It's like a cookie, like right when it comes out of the oven, like just like perfect, just perfectly. Like,
I feel
like a
delicious.
perfect
You're right,
chocolate
right,
chip cookie.
right.
That color.
fully baked.
Yeah,
You know what I mean?
Well,
Right.
Marty's single. I'm not single.
Right.
So I spent a lot of time outside. Marty spent a lot of time indoors with indoor activities.
I don't even know what that means, but you're going to have to tell me what it means.
Marty's been
Yes, the single life is just...
Marty's been an indoor putty cat for a long time.
Right. No reason to really go spend that much time outside unless it's super necessary.
Are you untrainable?
No.
No.
Hey,
that wasn't the confidence that he said that.
Right.
Yeah, kind of.
Yeah, we'll see.
Maybe.
We'll see how I'm feeling in the next 4.5 minutes. We'll
Yeah.
see if we can't make a decision.
Can we do like a tasty bachelor?
We should.
Well, you would be our bachelor.
100%. I'm all in.
We can do that.
I would sponsor a calendar. We've got Garrett and the team can take pictures.
Right.
We can do it on our own time.
We're not that desperate. We've thrown around the tasty after dark.
Right.
I won't go there. I won't do those things. Okay.
It's a different world when you're single and in that 50-year-old age, right, Tone? Right?
Is that what you do?
Yeah, right. We deduct. It's like a declining asset age, right?
Mm-hmm.
Right.
Well, let's change the subject before you depress me.
Right,
here.
right. I know.
Because I'm going to be.
I'm feeling so old now, right?
I'm going to be 54 soon myself.
Right. Well,
when are you getting that Social Security? When do you get this? 65?
It's AARP card first. That's what we just got. I just got mine at 50.
I want to get you one of those life alerts. The little
he's falling and he can't get up.
Yeah. We could. They probably make them like a little bit less visible now, so I could probably get you like a Guido
ring,
chain one.
like a ring.
No, I'll have it custom made. I'll get you an Italian horn. If anything happens, you fall or something, you just like push on the horn and it'll alert me. I'll say.
Yeah, just
don't you worry about me. I'll be just fine. You okay?
Yeah.
They have it on the watch now. Like I'll hug I don't know guys have met Andre out there. He's quite a large man.
Yeah.
He'll give me like a hug and then my watch goes, it looks like you've taken a fall. Are you okay? I'm like, yeah, I'm good. Don't worry about it.
Let's switch gears because the first thing you said here about the market was, are we going to be able to hold this rally? Now, nobody knows that answer, but why was that on your mind?
Because I think it's essential now because I've been watching this even when I was out of town. We've opened up higher quite a bit. And then the market just goes to its own attrition.
It's
and
been a
falls
sell every single time.
You could have literally sold every day. Today I was looking at it, I think halfway back from the overnight was like 64.10 or something. Like, well, if it's got to stay above that. And then I think you guys were talking about 6,500. I had like 64.80 in that area. But I think we have to have a day where if this thing goes lower today and closes lower, if it's not going to be good. Not going to be good. But I think it's important just for market psychology and just the way that this thing's been trading lately, because, the second you hear we're in correction zone, we're in the correct, which is probably true right now, right?
I think you can call this a correction.
Kind of.
Can you not? I mean,
God.
at least in individual names.
One of the worst quarters in the last.
I know, but I'm teeing that up to you because it's always like, you never seen anything.
You gave him a crib. You gave him a layup. It was like,
yeah, I was giving that to him. Like maybe he's changed a little bit. He's thinking outside the box.
Yeah, I just think that it's been every time they open it up a little higher. And obviously, to your guys' point always about the spotlight gold market, and now it's oil, obviously. Mm-hmm. But every day it opens up like it can be a little strong, and then they just put the whoop on it. And today, I think, I saw it up 100 handles when I walked in here.
We've really been in about a 15 handle range for most of the morning, up around 90 where we are right now, to about 105 when you walked in here.
I mean, if it closes at, you think like 64, 50, 60 would be, some sort of positive territory at least, for the overall look of it. But I mean, another day where they just open it and rally it, and then
we've taken like 8-9 months off the table. It's a pretty decent. That's painful. That's
The trend was always like, they would take something off, and they take something off, and then it would just. But this is obviously.
And oil's hanging in there. It's the most resilient thing. 103 and change.
Right. What did you think of that 100 level in that? Did you think that's like that line of demarcation or
round of a number and too perfect for everyone?
I thought it was too high. I've been saying 90 to 95. I feel like is where gonna settle in. But
I mean, that
I never thought oil was gonna get over 98. So what do I know?
Yeah.
I always thought, I mean, that 100 number is like psychological, but it's also that like number where people are starting, obviously not starting to. You go to the gas station now, you kind of, it's $4.69 in Chicago yesterday.
Crazy.
Like, yeah, I'm asking people
Don't
in the
ask
back of my
about
car.
boat-
I'm asking everybody to
boat
pitch in $8 in the back of the car.
Don't ask me about boat gas.
Boat gas, yeah, boat gas.
If you have to ask about boat gas, you shouldn't get a boat. I mean, that's just the way.
Oh, hey,
It's just the way it
sounded so.
Don't hate the player, hate the game. I know I'm dating myself here now, but
it sounded elitist and bougie at the same time.
Yeah.
Boat gas. Well,
I worked very hard when I was young to buy myself a boat when I was very old. Of
course you
Yes.
I mean, you know.
You've got
it is.
You've got captain written all over you too.
I'm first mate. Don't kid yourself. I mean, I've been neutered and clipped my wings. Unlike you, my friend, who spent a lot of time indoors in Florida. Let's get.
I was outside the whole time in Florida.
Underneath the palapa.
Stayed up late. I stayed up late till like 9:30, 10
With a
o'clock.
little, what do they call it? Dining al fresco.
We all do what we have to do.
Yes.
Let's get to your list so I can get you the hell out of here. Go ahead.
Right, I've got to get back.
Was it a Club Med?
No.
Do those still exist?
Yeah, they probably do. Like hedonism in Jamaica or something. I don't know. Now I'm really dating myself.
Yeah.
All right, here we go. At number 20, we have Indoor Palantir at 18%, 19 AVGO, 18 CRWV at a 36%, 17 SNDK at 72%. 18 Google 39%, 15 SoFi 31%, 14 we have iBit at a 52%, 13 AMD at 33%, 12 Apple 29%, 11 Netflix at 44%, and now we'll round out the top 10, TQQQ 45%, Amazon at a 48%, GLD 79%. Nice. USO at 67. That's at number 7. SLV 60% at number 6. Top 5. Microsoft at 57%. 4 Meta 54%. 3 Nvidia at a 12. Number 2. Tesla at 11%. And number 1. Wow, Micron at 61%.
Wow.
Interesting. A
Is it
little flip
bouncing a
flop
little
at
bit? It's up for
flip at the top, right, boys?
Yeah.
I like it.
Good job out of you, my friend. But you know what? It's time for me to let you go.
Gotta go
at this point. As
You're giving me the hook. Let's go.
As they had to do to you in Florida. Who's our next victim?
Thank you, Marty.
Thanks, guys.
Thank you, Marty. Oh, what's up, Giggles?
Oh no!
Nice to
I heard him giggling over there.
Nice to see you. You
Good
look
to see you, my friend.
fantastic.
Thank you.
I wrote down, added to my.
What about me? I don't get a compliment.
Oh, Nick. Hey, how's it going? Yeah, you're doing great. Chat loves you today. I wrote down for my vision board your little your boat quote.
Okay, did you?
Your vision board. That is. That is.
So we used
You have to worry about boat gas.
Got a boat.
We used to. I still have them. I'll actually bring them in. So I have $5 bills and dollar bills for all.
I'll take them.
For all the stupid stuff that guys would say on the floor. They would say something stupid, and I'd say, "All right, I'll bet you $1." You know what I mean? And I would write it down. Like they would say, "SPX is never going to trade here," or "This is never going to trade there." I go, "This is the dumbest thing I've ever heard." And I would say, "Bet $5, bet $5." And if you won the bet, you took the money, and they had to sign it. So I have a bunch of those bills. I'll bring them in.
Oh, you got
pretty good.
That's good.
I mean, we're going back to the early '90s. I've been holding on to these things.
That's
quite some
good.
time. So
I do.
I am a little vindictive. Go ahead.
Yeah, you are.
I am.
I do a similar thing, but I'm a little pea shooter, so they're $2 bills. So I have a collection of $2 bills on my desk.
Oh, that's SPX.
From
Beautiful. I'm sorry.
Excuse me.
We have to recognize his greatness right now.
My greatness. You put that order in, both those orders, opening and closing. Good job on
Even the
you.
S&P's up 80. think thank you very much for the courtesy. When we put it up, we put on even the S&Ps.
We're up like 70, I want to say. or
Yeah, that's because that's where
75.
we opened with the market.
Yeah.
We did it pretty shortly right there. So that's all just time premium because we're actually higher than where we are. So
A little bit higher, but when we were up at 100.
yeah,
we were out
it was a
$100.
loser by
Yeah.
about $100, and
Yeah.
now you made 70 or $100. Yep. So sorry to interrupt you, my friend. Glenn, talk to me about FX. I haven't talked. But has FX taken, well, not in your world, but in our world? I know Nick was trading a lot more of it in the past. You kind of got a little bit away from it now just because of the overall market's volatility that we have.
Yeah, give me something good.
Say again?
Give me something good.
Give me something good. So he's ready is what I'm saying.
I mean, S&P woes have meant U.S. dollar grows so far, but
All show, no grow.
We went to the same place.
God.
It really is sickening. I don't know.
But no, dollar party slowing down today with the risk on sentiment and just looking across the board for potential trades. It was interesting sitting in the wings here. I would have said this euro dollar just getting outside its historic daily range of around 50 pips. It got stretched all the way to 62 pips here about 15 minutes ago, getting a little pullback there. So if we're respecting recent volatility, there is a potential, if you are really quick, to try and scalp some of these elastic markets.
I am not quick.
No, it's
I'm a bag
hard to
holder.
be. But we are seeing a bounce from recent dollar strength to varying degrees, which is interesting. I mean, you have U.S. dollar, Japanese yen, which is now back below 160. Really got put to the test into the weekend, but with Treasury yields coming down for the U.S., you're seeing a little bit more reprieve for that yen. The surprising thing of the day so far has been this Aussie dollar. That one we've seen recently really map to equity performance, general risk sentiment. And although it is up on the day for the first time in 5 days, really haven't seen, to the degree of equities taking off once U.S. markets opened, added another, percent?
Yeah.
And this one's really stuttered throughout the U.S. session. So curious if there's another kind of variable there as to why that's lagging. But if there's nothing in the way, then we could start to see a resumption of that Australian dollar starting to fill the range. U.S. dollar, Canadian dollar back at highs dating back to December. U.S. dollar, Swiss franc also at highs of January, but same price level as November, December. So that one's interesting because when you start to think about what could come in terms of central bank policy, we're seeing in the news, U.S. is likely to hold all year. Euro area and England might hike, similar with Australian dollar. That Swiss National Bank, the Swiss franc, really not a player there. Yeah. And so that could give traders reason to believe that that's an area where the U.S. dollar could further support gains. Because if you think to where we were in January, that was pricing in still a few cuts from the U.S. and nothing from the Swiss. So if we're to hold and still nothing from the Swiss, maybe a little more room to bounce off of historic lows that we were at in January, February. So similar environment to equities right now, a bid today, a down day for the U.S. dollar, but is it a resumption of a trend, bouncing off of lows, or is this just a one-day blip? We'll see, but definitely.
We were hoping you would have the answers.
I got them, but I'm.
That's the Ocho channel. You get that.
Exactly.
Yep. Got it.
What about the New Zealand dollar?
New Zealand dollar has been an interesting, kind of flavor when you compare it to the Australian dollar, because similar exposure, right? But the Australian dollar has really been outperforming compared to that New Zealand dollar. So traditionally, you'll get, or historically, New Zealand dollar will fluctuate with greater volatility than the Australian dollar, but that really hasn't been the case. as much as this Australian dollar on speculation and its fundamental drivers has been more popular as of late across the globe. So New Zealand dollar, definitely some unique tape action if you're looking for various levels to bounce. That could be interesting, but it has been pretty fascinating to see that this Australian dollar has kept up with its volatility, and you haven't had bigger swings in this New Zealand.
What do you think about euro pound?
Euro pound back in the middle of its range, right? If we're looking, not really a mover today. Oh, it is up 0.2%. Yeah, I mean, it's right there dead in the middle. So of its range dating back to start of the year. But even if you go back further, we've really only been between 86 and 88 here. So,
right in the middle of
exactly. So if you think about it from a directional standpoint, you could say there's even risk reward, but I'd be cautious fighting a trend if, stepping in front of it to the downside with no real reprieve thus far.
Does this bond move, and I know you're talking FX here, but the bond move over 113, almost 114, now we're 113 and a half.
Yeah, they're coming in, and oil is at the highs of the session.
Oil 104.
A little bit of weakness in the market. I think you're tying that together.
Even the S&P's up 70, kind of where we opened for the day, off about 30 handles, 35 handles or more from the highs, which were almost 6,500. But to get to the bonds from it, do you think bond, I guess, strength over the last couple of days affect any of these currencies one way or the other, or one more than the other?
Yeah, historically we've seen that play through the most against the Japanese yen, just because of its rate differential between our countries and their proclivity to own U.S. debt. So we see it play out there. But again,
so the yen's caught a very small bid off of new lows.
Right. Yeah, but that one at least
as the bonds, our bonds were going lower, the yen was going lower. Now our bonds are going higher. Yen is going a little bit higher. Is that typical action?
I've had my yen put spread on, just to interrupt, excuse me, since the 13th, and it has not moved. Hence why I hate trading this.
Yeah, it's definitely
we haven't gone anywhere in the. It's gone a little bit lower, I guess, but ain't dry.
This is a market where volatility will resume at some point, but when it's not interesting, it's been really surprisingly sticky around these historic lows for the yen, highs for the dollar. And we've seen year to date it be much more of a Japan story, but over the longer term horizon, you do get that higher correlation to U.S. bonds. And the reason why I bring it up is if you look at, kind of hourly candles and what's moving on, just jumps in risks, jumps in headline, even though it's been a small bid, it's been more consistent like this bond rally off of lows. So it is nice to see that historic trend come back a little. But again, when you're comparing two assets that are absolutely related but kind of second order effects, you do start to see those pressure zones where they could both be up on a day, they could both be down on the day, but when you flush through some levels and you start to get more activity in the bond space, that's where it can take hold across other asset classes. So it's definitely one to monitor, but you're absolutely right that even though the yen's caught a little bit, it has room to run.
Yeah.
But no real indication as to why that would be right now.
Very good, sir. Even the S&P is up 65. Nick, what do you think about the overall market here? Still up 1%. Nasdaq up 268, up a little bit more. Russell up 30. Russell's about 30 handles, 20 some odd handles off of its highs. Even the S&Ps are about 40 handles off of their highs. What do you think of this action?
It's beholden to the move in oil. I mean, the oil staying bid here, got to expect more weakness in the market.
104.26 up $1.37, a little over a 1% move. Encouraged that the market's even up with oil up?
Yeah. Yeah.
Absolutely.
Yeah.
Right?
For sure. If they
So
revert,
what would you rather do right now? Sell oil or sell SPUs?
I mean, I'm long market short oil, so that is my position. Net. I mean, I've reduced that pretty decently today, but if oil stays this high, where are we closing today?
That is
punched on the day.
No, I think it's
You don't
gonna.
think
I think
so?
it's gonna surprise you. I think it's gonna surprise you today if oil
To the downside?
No,
If
I think
oil's this
to the
high,
upside. I think if oil stays bid, the market stays bid today.
You think so?
Yeah, I think it stays where we are today.
Oh, I
Where
think
we are now.
I'm on the other side of that coin.
Yeah, well, that would be the way that the market has behaved,
Yeah.
and that would make me wrong once again, and that's the way it's been for the last couple of days. So for sure. OVX /CGI hanging in there, 91 and change, down around 4 and change. It got as low as 89 or so, just under 90. So it's up about $1 and change. I'm talking about volatility in oil related products. So if there's something that you want to do there, you are certainly catching a bit in volatility. Even the S&P's up 62. I'm going to let you go, Glenn. Thank you so much for your time, as always, for coming on to the show, and thank you for letting us ramble on. We've got Liz and Jenny next from the floor.
It's always electric when ladies are live.
I know. We'll be back in 90
tuned.
seconds. This is Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while, take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean that.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Golf putt, normal distribution. Reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
And welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde, a sight for sore eyes, is Liz Deerking. Welcome back, Liz. Welcome back.
Jenny, I don't know if you've gotten quieter or they've gotten louder, but it is, I feel like you're very, very quiet today. They're kind of a little bit crazy back there.
You know, they're loud. I don't know if you saw the market while you were on your cruise, but it was a crazy few days. The market has been down, down, down. It was painful. It was painful. And the boys are loud. I hesitate to say boys. Boys and one lady back here.
One lone survivor.
One lone female trader
She's amazing.
remains.
We're trying to get her to talk, but a lot of these traders can't speak to media. It's just part of the firms that they work for. They're not allowed to speak. So that's why we're down here. We'd like to get some traders to talk to us, but it's not as easy as you think. Everybody wants to talk to a trader.
Everybody wants to talk to a trader. So they are loud because it's been busy. Right now, SPOOs are up 71. I saw them up as much as 105. We opened up around 50, 60, maybe.
Yeah, we opened up around 50 or 60. They went up to 100. Now they're 70. We're getting two-way action. I kind of want to see where the VIX is right now.
This is a couple times now she told me I'm quiet today. So I'm just wondering if the people you were around on the cruise the whole week and were very loud people.
No, I think they're loud.
They're loud too.
I also think their octaves are a lot lower than yours and your register is a little higher. Do you know what I mean? Could you bring it down an octave?
All right. We have a very busy show. I'm glad you're back. We have a lot to go over. But before we get into that, we've got our YouTube trade of the day. Liz, are you ready for it?
I'm super excited for this because it's a name that I know and love, right?
Okay. Let's jump into the platform. We are looking at Marvell. Marvell was in the news today. NVIDIA is investing $2 billion into Marvell. So Marvell is up 7%. It was up as much as 10%, but it's hot today. We've got 21 million shares traded already. We're going to look for a trade in Marvell.
$2 billion. They invested.
Oh, I was like, I see 21 million, but Liz sees 2 billion. 2 billion invested.
2 billion invested. And so this is, ironically, this is one of my longer term holds, Marvell.
Marvell, Liz has been a Marvell fan for a long time.
Long time. Really big fan. I'm just kidding. I really don't.
She does own, you own the stock. You own the stock. The trade we're going to look at today, that's the trade I have on.
You know what an ironic turn of events? I'm long the stock, but I also have this trade on.
Doubling down.
Marvell is big and liquid and in the news, and it moves, right? So that's a lot of times what draws my eye line to it. So we are going to put on a trade. I'm going to give credit where credit is due.
Yes, so we're on Twitter. We take live tweets every day during our show, which is on 10 to 11 Central Time on tastylive.com. We take live tweets and we look at any tweet that has the hashtag LAZJNY. You can see it right there, hashtag LAZJNY. Here's one of our favorite viewers, one of our favorite tweeters, Bob. Because of the flame, we call him Bob on Fire.
We call him Bob on Fire. And what I love about it is it's people helping people. There's a lot of interaction between the traders. And he came up with a trade. That's why we don't want to steal it. We've got the Jade Lizard, the Zebra, all this. They're ours, but we don't want to steal other people's. So this is the Bob on Fire.
Right. We like to always give credit to people who create a trade. So Bob created this trade. It doesn't really have a name, so we just named it the Bob on Fire.
The Bob on Fire. Now I'm just going to tell you a little bit about the trade, then we'll go to it.
Okay.
It's a longer-term bullish trade, which is an excellent return on capital. Hold on. Long-term bullish trade, which is an excellent return on capital. if the stock goes up.
Right. So we're going to walk through it, and then we'll pull it up on the curve view so you can see the P&L graph of it. I like this trade. The risk in this trade lies very far from where the stock is trading, so we have a lot of room to be wrong, but we have a lot of profit potential.
So let's set it up, and then we'll walk through the nuances of it on the...
All right. If you're watching this, you've got some knowledge of options. We're going to walk you through how to set this up. We're going to go to January.
Yeah, when we say long term, we're going leaps. Old school term is a leap. You go to January 15 with 2027, 290 days.
Till expiration. So this trade can be on for 290 days. You could set it and forget it.
You could.
We start by buying an at-the-money call. That means buying a call that's right where the stock is trading. Marvell's trading 94. We're buying that 95 call. That's step one.
Then you're going to sell, you're buying a call spread. So then I'm going to sell something, I'm going to go to the 125 level. So 95, 125, so that's $30 wide.
The rule of thumb, or Bob's rule of thumb, is you sell a call for half the price of the call you bought. So if we paid around $20 for the 95, we're looking for a call that's about $10. So the 95, 125, that's $30 wide, meaning this spread could be worth $30 or $3,000 if Marvell keeps going up between now and the next 290 days.
This is not where the trade ends. We're paying $969 to do this. We're going to then go down into the out-of-the-money puts and sell something to capture the premium that we're paying. So we're going to try to outlay, and when I say outlay, there's going to be no debits for this trade. It will require capital, but we're not going to be paying a debit for it.
Right. So we're going to sell two puts. We're going to sell two puts to cover the cost of this call spread. So if this call spread is costing us $963, we need to find a put that's about $5. So that 65 put, if you sell two 65 puts, we're actually collecting a $200 credit.
I want to see if I can
which I like that.
Take a look at this.
I like that. And that, Bob on Fire's rules are collect a credit.
Collect a credit. So you've got a $200 credit. Now let's review the tape. So I'm going to see if I can get it all on here. So you've got this 265 puts, and you've got one 95, 125 call spread. We're buying the call spread. We're selling two puts.
Now, if Marvell goes up and in 290 days is above that 125, that call spread's worth $3,000. So we make $3,000 on that call spread. We take this $200 credit in to place the trade. So that's that $3,200 total that we can make. The reason I like to take in that $200 credit, because no matter what, as long as Marvell's above 65, but even if it falls, we would at least make a 10% return on capital.
In 290 days.
Yes. Yes. Hey.
No, I agree. But it could hold up more. If things go down, it could hold up more capital or look like a loss.
So you see this trade is using $2,200 in buying power. Our risk is at that put level of 65. So as long as Marvell is above 65 in 290 days, we keep that $211. But every
I'm going to go to the curve view.
Point it is above that long call of 95, we'd make $100 for every point. So at 96, that call spread would be worth $100. At 97, $200, so on and so forth. At $125, that call spread is worth $30 or $3,000.
Yes. So some of the nuances of this trade, it is a long-term bullish trade. And what I'm going to show down here is this is where we would start to get long that stock at the 65 level. So Jenny just said that. Some of the nuances are if Marvell does pop up from here, you can take this off for about 50% of the move. I know this.
Yes.
So let's say Marvell pops up $10 tomorrow. We could probably take $5 out of the trade.
$500 out of the trade. You get right now. You get about half the move. So like Liz said, up $10, you get about $500 out of the trade. If Marvell drops, well, this trade will be pricing differently than it is right now, so it would be a loss. But again, fast forward to the end of January expiration, and all we need is Marvell above 65 to not lose on this trade. Below 65, we'd take 200 shares of Marvell at 65. So we've got NVIDIA investing $2 billion into Marvell. We've got Marvell trading 94 right now. I don't mind getting long 200 shares at 65 if I have to.
So I've been into and out of the Bob on Fire trade in Marvell. And I do put it on top of my long stock. Just a little FYI.
If you want a little kicker.
It's a little kicker, and I will trade in and out of the options. I mean, I understand it's a 265-day trade. I typically don't hold them that long.
Some positions, I put these on and I leave them and say, these are just long-term bullish trades, good returns on capital. If it doesn't go up, you're still collecting a credit, and I'll leave it. And I'll just leave it for the 290 days. Some people will.
You could, sure. Like I said, I'm an options trader, so a lot of times if I see a pop in Marvell, because I've got that stock kicker, I will be in and out of my options trades because the leverage portion of it. But this is, as a standalone trade, isn't bad. Let's kind of go through it again real quick so people can see this. It's a complex option trade. It is a long-term bullish trade, which has a very good return on capital. If you are using, your max profit is 3,000 and you're putting up 2,200, it's almost 150% return on capital.
Right, we're using 2,200 to make about 3,200. Again, we only make that 3,200 if Marvell is above that call spread, above that short strike of 125, but anywhere above 65, we're guaranteed to make some money on this trade.
Right. Okay, so once again, back to it. We are buying the 95-125 call spread. Nothing's a trade recommendation. And
that's
selling,
what this is.
what we have.
I have a trade like this on. My strikes are slightly different because I put it on a different day, but I have a trade very similar to this on in my account. You have one as well.
Mine is identical because I did it this morning.
Oh. Well, and again, none of our trades are trade recommendations. These are just trades that we're placing in our own account.
Correct. So buying the call spread and financing it with 2 puts, a long-term bullish trade. We call it the Bob on Fire.
I like it. I hope that name sticks.
I like it too, but I also know that I'm long Marvell in my account, so I want Marvell up.
All right, everybody. If you liked this trade, like, subscribe, share with your friends. If you want more videos like this, you can find us on tastylive.com or the tastylive YouTube channel.
Yeah. And remember, get out there and trade small, trade often.
All right. Now, back to our regularly scheduled program.
All right. Now, let's go back to the VIX because I wanted to look at that so bad. How
30. Go take a look at it. It's down $3 today, down 10%.
It got to 30?
So,
oh, man.
I had TFM on yesterday, Tony from Mexico. He said it could just as quickly go from 30 to 60. He wouldn't be surprised if we had a 60 VIX in the future, if we continue to see a down market. And it was a little scary. I think he scared the children.
Okay, so talk to me about where was everybody? I love when hosts come on or when you have other counterparties because Johnny and I are complex option traders and everybody that we have on is, but everybody's got a little bit of a different perspective.
Oh, with Tony, he was great. He's big by big. He has huge accounts. He manages lots of money, and he talked to me about hedging, and we looked at various hedging positions. If you'd like more information, you can find us on the Tasty Live archives.
Oh, I will watch that, but I was going to say, is he more bullish or bearish? Because you're saying if he said 60 VIX, so I know 60 VIX means market has crashed.
So he said he wouldn't be surprised. We had a question of, market's already down almost 10%. Could you see it being down another 10%? And he said he wouldn't be surprised if we saw that.
Okay, so hold on, let's go.
And again, everyone has a different opinion. Now, his portfolio is long-term bullish, which is why he did a show on hedging. So he's got a long-term bullish portfolio, but he's got a lot of hedges in place.
I mean, I would argue my account is very similar to that. I'm all over the place. I've got a lot of long-term bullish positions, but I'm using options. I'm actually looking for that implied volatility that we're getting in a lot of different things.
Right. Here, go into SPY.
I'm in SPY.
Oh, go to the trade page, and I'll show you just one of the hedges that, short term.
Okay.
The old Valley of Death. You remember the old Valley of Death?
Oh, the Valley of Death.
So, but this would be a very short term. Let's say you want it for just the rest of this week, which is only 2 days because it's a short week. Friday, the market's closed.
Wow.
So basically, you would sell one at the money put.
Okay.
And then cover, we've got the 470 to use, so divide that by 2. So buy 2, no, go down. Buy 2 634 puts. So here you go. You're putting this on for even. You're trying to put this on for even. And if you go to the
oh, I see what you're doing.
Analysis, and you have to take off what we have in SPY.
Analysis. Hold on.
So you got to take off our 45-day trade.
Yeah.
And this is one style of hedging that he does. Doing this nearer term, the Valley of Death is much smaller. So you could see that area of loss.
I'm trying to get in there to make the valley bigger.
Yeah, there we go. So you can see the area of loss between 627 and 640, 40 something. And what's your biggest risk there, Liz? How much?
Your biggest risk right here is $692.
Not horrible when it's giving you 100 short shares of SPY that pick up at 627.
If you do it very short term, the Valley of Death isn't that big. But if you go farther out in time, it's a little bit not cost effective in the fact that you could lose more if you go down.
Now he only likes these in the short term.
You know what? I wish I would have done this and got on my cruise.
I wish I would have had these on before the start of last week.
So what's great about this, and I love Tony from Mexico, and that's why we love Bob on Fire too, because everybody's coming up with these complex trades that fit their parameters, their perspective, and their risk tolerance. And so you look at this. If it goes up, if you're long-term bullish,
you don't lose. You don't lose anything.
Wonderful. That's how it's set up.
If the market crashes, so let's say we are down 10%. I know this is only a 2-day trade. Let's say we're down 5%. So 5% would be $33. So move from 640 down to 610. At 610, go to 610. How much would we make there on this one trade?
$1,700.
$1,700. That's if like a 5% move down between now and the end of the week. But you have that risk, that little valley of death risk.
The Valley of Death, I've talked to him before about this. I like it in the short term. It's not bad for the short term.
It's not terrible in the short term. It's not terrible in the short term. So this is a trade we talked about probably a year or so ago, but back then we were looking at it longer term. How do you learn different trades? From doing them and seeing what works and what doesn't.
I will also tell you, I know from, I'm going to try it see if I get Tony on my show. I also know from experience, he uses SPX, he doesn't use SPY.
Oh, yeah, but we were just using SPY. We were using SPY because it would be...
It's scalable.
If it's $600 loss in SPY, it'd be $6,000 in SPX. For our viewers, he liked to talk in SPY.
In SPY.
Yeah.
Mm-hmm.
Yeah, I mean...
That's amazing.
So another hedge that he does...
Talk to me.
And you can use SPY or you can use SPX or whatever. If you go to the trade page.
Trade, got it.
So this one is further out in time. Let's say he goes to May, and just go to the 38-day because we have a 45-day position.
The 38-day May?
Or the 38-day or 59-day, whatever.
Okay.
He'll go to the expected move, go down to the expected move, and at the 605 level, sell that call.
Sell the call?
Yes. And then he looks at the extrinsic value. So if you're selling that 605 call and the extrinsic value is like 778 and he wants to cover that extrinsic value, now go up and find a call for $7 or $8 and sell a call for $7 or $8.
So here's an $8 call, 666.
Yeah, if you want to keep the math simple, just do the 665. Then we have 605, 665, $6,000 wide call spread. He's taking in 5,500. Why doesn't it show a max loss on that call spread?
Oh,
you're selling both. You're selling. So you're.
I'm selling.
You're selling that.
Yeah.
Sorry. You're buying it. You're just selling the call spread. Okay, so 30. Yeah, this makes sense. $3,800. So he's taking in $3,800. Max loss $2,100. This is another hedge he's been doing, and he's been doing this like big buy big and SPX against his portfolio.
So, oh my God, good, how are you? So selling the call spread is bearish.
I know. When someone from the floor from decades ago when we were all on the floor.
Yeah, we've been on the floor for a very long time.
Yeah, yes, we got a visitor.
Yeah, we do.
He's not here to visit us, but
You think he'll come on?
No. Damn it. Okay, so this is, he had, I don't know, I want to say, what did he say? He had like 17 of these on an SPX. And he just took them off on Friday.
But this is a straight up short call spread, or this is a straight up call spread where you're washing extrinsic value.
Yes.
That's why I thought you were going to try to do something fancier
no,
with it. This could be, that's why I was very thrown off, because this could be, I was like, give it to me. What is this?
I was
to the point where I was like, what?
I was controlling the platform. He's walking me through. He's like, now go down, and sell this call. Now go up, and buy this call.
But you see what I was doing? I was like waiting for like another leg.
Yeah, I know. And I was like, okay, what's next?
So this is a very easy call spread, very easy. But it's a hedge against.
But you wouldn't think of going way down to the expected move and starting your call spread there.
You wouldn't.
No, you wouldn't.
No, but you can make it as wide or as narrow as you want if you're washing your extrinsic value.
But these really helped him. They really helped him in the down move, selling these call spreads. When we had really helped him, and he had a lot. And he didn't really go into the ratio.
This would hurt in an up move. Like on a day like today, this would hurt.
Well,
we're up 100.
It's a 38-day trade. Your max loss is 2,000. So you know your max loss.
Yes.
Because guess what? I don't know how long your deltas are or my deltas are, but anyone with a at least $100,000 account today with Boost Up 100 are making way more than $2,000.
Correct.
So,
and so that's to your point, Jenny. This is a 42 delta trade. So in SPY, you're looking at a short 42.17. It's right there on there. You're adding a little bit of short delta.
yeah, so it's like you might not mind the $2,000. You're not going to take a $2,000 hit on this in a day.
No, because you're in the 38 day.
Because it's far
and
out.
not the near term one.
So this is his far out hedge, far out in time hedge.
Yes.
Not like groovy.
Well, I mean, I was ready for groovy. I was like, all right, what's next?
No, that's it. That's it. That's it. What do you think?
I mean, sounds great.
Yeah, he's amazing.
It's a groovy hedge. I love Tony from Mexico. Every time I'm on with him, I feel like I'm a better trader.
He's my idol. Not just
the one time I was on with him, then the next thing I knew, he's like, you need to buy real estate. I was like, okay.
So he's my idol, and not only is he, I'll tell you, some of the sharpest tacks we've met in the industry, they don't drink any alcohol either.
Well, he doesn't drink any alcohol.
No, I know. That's what I mean. Their mind is going. They're working 24 hours a day. Maybe sleeps a few hours. Then he's always coming up with something.
He's a serial entrepreneur.
Yeah. Got 17 or 18 companies right now.
And not just to springboard on that, I do think learning how to trade gives you a better perspective. And this is something that we learned from being
Here,
at Tasty.
I'll put you on full screen so you could.
Yeah, but this is something we learned from being at Tasty. Learning how to trade and learning how your risk-reward metrics work in options trading actually translates into life as well. So you can, once you learn how to trade, you learn how to take calculated risks.
And I love that our kids are. I love when my kids see a down market. When they've got their accounts. I love when they see a down market. I love when they see, okay, look at how much we can make trading, but also see what we can lose.
Yeah.
See what we could lose, and it gives them almost an appetite for risk or a sense of it's okay. I've been here before. I'll get through this. This isn't the end of the world. In life, it makes them more likely to take risks because they know if it doesn't work out, it's okay.
Yes.
Yeah.
Yes. It's crazy. I just sent this to because you have to see the losses to realize in order to take those chances again. I kind of agree with you.
I'll live through it.
So I just sent this to my son. It's kind of in the same thing with translating. I'm gonna change it to trading though. But I sent it to him. So if someone told you that you had to have 100 losses before you got to your main win,
would you keep going?
You'd love a loss. You'd be like, yes, another one.
Another one.
Yes, another one. Because you kind of have to train your brain a little bit.
It's kind of like how many frogs do you have to kiss before you find your prince?
I'm just kidding.
Liz has only had one boyfriend, and he's her husband. One.
Although I wanted to return him this week. He snored way too much on his vacation.
All right, so I'm going to show you what else is going on. I'm going back to the platform.
You guide me because I've been gone for 3 days.
Yeah, I'm going to guide you to the SPY trades that I put on with Fazia. Okay. She did a Jade Lizard, which I loved it. She does her Jade Lizards a little differently than us.
Okay.
She wants a big credit. You can go.
I'm going to go to it. So it was a $5 white on the top, 65.
She brings her call spread in closer. She wants to collect a big credit, so she brought the call spread in closer. She brought the put was, it's a tighter Jade Lizard than we would typically do.
I like it.
But we collected almost $7.
So you're not covering the width of the call spread?
Yeah. It's a $5 wide. We collected almost $7.
I was thinking it was $10 wide. That's pretty good.
Go to the position page and take a look at that. We've got 682 on a $5 wide call spread. And we did define our risk. We've got a $30 wide put spread.
Oh, I didn't see that on the downside. So then you bought something down there.
But it's wide. It's $30.
Yeah.
That's why this trade used like $2,300. Is it up at all today with
So we are up about $50. $54. Well, actually, it was up 79 today. So you must have done it, and then the market must have crashed.
Oh, yeah. Because she was on Friday.
Okay.
And then we had a big move down the rest of the day. Friday, my 0 DTEs, max loss. Rough.
I was glad I didn't.
You're lucky you're on the ship. Lucky you were drinking Prosecco on the ship. Well, my NDX, I did NDX, and it was a max loss. But
hey, but that's where you get. That's how you get. That's what you do in trading. You're going to have losses.
So as much as I love this trade from Fazia, and we collected almost $700 on this.
You got 8% in 2 days.
The only reason I would say take it off is because we've got a buying power shortage. We could take some trades off to free up some buying power.
Okay, now let's take it from a perspective. I'm just standing on. I'm on the
Yeah.
sidelines. I wasn't in. If I needed buying power, that's exactly what I'm going to do. I'm going to go to little wins and take them off.
Yeah, so I'm not closing big losers. I'm closing winners.
So I will, and you're only $1 away from where you're.
Yeah, so I put in an aggressive GTC, but I would say let's take that off. That's going to give us back $2,300 in buying power. So, I mean, you don't need to get crazy.
I pennied it up 2 cents. That's all I did.
But you could see our option buying power. We only have $6,000 or $7,000 in buying power. We could use this $2,300 back. That's giving us pot money back. Our SPX, we're up $60, $70 now on the Iron Condor. That's another place. Maybe we get. What do we get back if we close that?
So this one, I'm going to cancel this order, okay? So we'll go through it that way.
Because if we can get out of that for $350, that's $70, which I think is
you're up.
That's enough.
You're
Yeah,
up 16%. Closed position.
I mean,
you're
it's-
getting back $1,100.
Sure, and we're taking a $70 win. So locking in a $70 win and getting $1,100 in buying power back.
Yes.
These trades might not be trades that I'm closing or might not be trades that you're closing, but if we need to free up buying power in the show account, these are the trades we're closing.
These are the trades. And I will look at small wins. I would also, I know that's a roll. The Oracle's a roll.
Oh gosh, open that up. I rolled that while you were gone. So Oracle, I think our put was the 150. I think if you pop out the side,
Okay.
I think I moved it down.
So I'll just go to Oracle.
In the last.
I'll go a week.
14, yeah. So we had the 150 put, and I was able to take in a very small credit to move it to the 145.
That's the right thing to do, though. You moved it down. You moved it down and out.
So look at the chart in Oracle. It's been one hot mess.
It doesn't look good.
I mean, how long do you think we were in that other trade?
Let me see. I can see.
What day we put it on?
We don't trade Oracle that often.
We sold that 150 put on 311. So 20 days ago. So go to 311 and see where Oracle was. Was it the actual high day? No.
No, right there. But it's subsequently fallen since then.
Right. So it seemed like a hot mess, and it was in the money, and it was worth quite a bit, so I rolled it out.
I think that's exactly what you're supposed to do. There were 17 days left in that trade.
We also have questions on ZB. What are we doing in ZB?
ZB.
We have a long call spread that has just 3 days to go. We have been selling put spreads, taking them off, So even though this call spread's a $367 loser, we're maybe only out $80, $90 in ZB, so in the ZBM.
So we have been trading around that one.
Yeah.
So let's take a look. ZBM, I'm not going to go 30 days, right?
Well, yeah, sure, you can go 30 days.
Yeah, okay, 30
ZBM.
days. So we have, this is the call spread, the 15-14, right? The 15-14 call spread that we purchased.
Mm-hmm.
And then we sold the 110, 112, bought it back. Sold the 110, 112, bought it back.
And honestly, if you were here, we would have done it again because Friday, I think it was Friday, I did it again. Like I did it in my account and then bought it back on Monday.
It's hard to do with a guest.
But with a guest, so we would have done it another time. It's just hard with a guest to do it.
So when you're doing that from this perspective, I'm going to go 30 days. So
we're only down 85.
It looks like a bigger loss than it is because we're netting them out.
And you go 60 days out and we're net up in ZB.
Yeah.
Yeah, because when you went 60 days, we're net up, but now I don't know if that's ZB. It's still M6. It still is.
Yeah, it doesn't. It's just showing. It
Oh,
can keep
okay,
going farther
okay,
out.
okay. So what are we doing with this? It's worth 15 ticks. What do you think? Do we take it off for a loss and take those 15 ticks back, or do we leave it and see what happens with ZB over the next few days? Because it could bounce up. It could.
We put this on.
Yeah. We put this on when rank was low and we wanted a long ZB position.
So to your point, I do like selling premium in bonds when there's a 26 rank.
Well, I mean, it was higher, but we've got, look at that bounce we had yesterday, a little continuation today. If we get a little move, we could be right, this could be right back.
Do we have a GTC in for this?
No.
How high did this get?
Go to yesterday's high. We were at 114. No. It didn't get into the 114 handle.
No, it didn't. Today's high was higher.
We would need it to get back to like what we saw a week or so ago. But we have 3 days. I'm not quite sure. Let's see. Today's Tuesday, Wednesday, Thursday, Friday. The market's closed, but bonds must be open.
Yeah, the bonds are open. Oh, you're right.
Yeah. So maybe we do close it, take our 14 ticks, and put something a little longer term on in bonds.
I agree. So I've got the order in to close that. Now, that's kind of what we would be doing. So let's go, and then I'm going to go a little farther out in time. I'm just going to go to the 52-day, 24-day.
I've got TP on my brain, and I feel like he would say 24-day. He's been shorter term lately.
I see. I clicked on the 24-day.
Yeah.
TP?
Yeah.
Okay.
So the 112, 110 is one that we've been doing quite a bit. 112, 110.
For 26 cents.
That's not great.
So let's take it.
But we've had this little pop up. But if we're going to take our call spread off, I want to have something on.
I made it a little narrower.
Sure. Or what's the 112 and a half, 110 and a half? Are we getting 30-something ticks?
31.
Yeah, now I know we've been doing the 112, 110 put spread in and out of that for about 39 ticks. What if you do go a little longer term, the 50-something day?
Let's go. Let's check it out.
See how much more we could get, if we can get more. Because I do like to get 35 ticks. Then I think that's a little bit better. It's an easier pill to swallow.
Everything's shipped. We'll see if we filled. So we're working both of those. I'll go to the position page so you can see. We're working the closing order and we're working the opening order.
We've got, so for the person who asked, what are we doing with ZB? That's it. We also had a question, what are we doing with Rivian? What do we have?
Let's take a look at Rivian. Rivian, we are short the 16 put. It's trading 14.88. That is not that bad. We've been in it for 21 days. We're going to take that and roll it out in time.
Our break even is 15. And honestly, let's assess, because there's 40 cents left in 17 days in that option, 40 cents extrinsic value. If you roll that put out.
Did you ever add the call?
Nah, I don't know.
So, okay, rolling the put, that's what I would do. This is what I do with mine. And I actually, when I got on the boat, took and opened everything that I could and rolled them the heck out of the way.
Roll it out.
So I still have long positions. I just didn't get hurt as much because they were longer term.
Yeah. I don't know what I'm going to do because I'm gone all next week.
Yeah.
I think I'll move everything out in time.
Mm-hmm.
And
I opened everything up and just rolled it out
and
in time.
not look.
Yeah.
I'm going to make a rule. I'm not going to look. I know you didn't let the down days ruin your days.
It didn't bother me.
Sometimes it bothers me.
Nobody's going to break my stride.
I'll never forget when my kids were swimming in the waterfall in Hawaii and I was on my phone cursing the market.
Yeah, but that was years ago.
I still remember it.
I don't think it would affect you at all right now.
Yeah, maybe not.
Water off a duck's back.
Maybe.
But if I was going to roll this out in time, you are going to probably roll through earnings, which I'm okay with a short put, rolling through earnings. And take a look at this. You can get...
Oh, no, you're moving the strike. So
61 cents. You're getting $1 extrinsic value. Because I would add something else on after with earnings as well.
Sure. Yeah, then just roll it out. Roll it out, get it out of the way. I'm going to be gone next week. You're not going to be in the account managing it all.
So far, I have secured people. I don't necessarily know in what order.
Go ahead. Rattle off your
I don't necessarily
lineup.
know in what order. But I've got Dr. Jim Schultz coming on to fill in. I've got one beautiful Fazia. There will be a TP sighting. There will be, I'm hoping a Tony from Mexico, but I have not secured that location yet. And then I'm thinking I might try to get a crypto person. But if anybody has anything that they would like me to go over while Jenny is gone, shoot me an email.
It's gonna be a good week.
Yeah.
It was fun. I missed you, but it was fun having my guests on.
Yeah. I like, because you have to use their knowledge and glean something from it.
Yeah.
Should I pop into Twitter?
Yeah, pop into Twitter. We've got a lot coming in.
Okay, I'm gonna go top down.
Sure. Yeah.
There are a couple earnings today.
Okay, so Blue Wackadoo, and I missed you yesterday. I missed your tweet. I never got to his tweet yesterday, but he was gone, and now he's back.
Blue Wackadoo was gone?
Yeah, he was gone too.
Oh.
He was on vacation too. Happy Tuesday. IVR is still over 40. However, contracting at the money. I put on 2 iron condors between 11.15 delta with $25 wings over 100 points wide between the shorts. First one already closed. Nice.
Yes, good job.
And I'm watching the second, looking for about 50%. Now, Fazia said for these 0 days, she feels like those are for people who are actually like watching their accounts.
Why?
She doesn't like them if you're not watching them.
I think you have to put a tight stop in. Not stop for loss, stop for if you I think they can be, you put your price point in and walk away. If I'm not, like, when I got on I did trade every day still. I would put them on, and because I was gone, I only took 20% instead of 50.
Yeah.
And they hit.
So she had a different theory on, like, instead of trying to make, $100, let's say you collect $2 and you make $100, or here, because you could, it's $3.95. He's collecting $3.95 and taking half of that, so $180. So her thought was, instead of taking $180 out of one of these, she'd rather do a bigger, longer term SPX, collecting a lot more, where she's maybe not making quite 180 a day, but a lot of these do lose. They don't all win. You see your average P&Ls might be $80 a day, so she'd rather find that $80 a day with more durational SPX
And I
trades.
think that is absolutely fine. 100%. Everybody can do what works for them. So a lot of times with these, it's the instant gratification. It's the, I don't want to worry about what the market's doing tomorrow. When it's over, it's over with these zero EDTs, and that's the allure for me. But I love that everybody's got their own. Everybody's got their own.
Everyone's got their own trading style,
for
right?
sure.
There's not, like, it's not one size fits all.
For sure.
Okay, and then which I think she might be Madalena. Maybe she's a new trader.
Oh, I love it. She's
Maybe a
okay.
new
So she
tweeter.
was asking about ZB. We went over Rivian. We went over
QBTS. I think we have short puts in there. SMR. Let's take a look.
Oh, we're filled in ZB.
We're filled in one of them. Which one? We're out of our call spread. We're
Okay.
still working that put spread.
I'm just going to take it down by one tick, okay?
Sure. Yeah.
So we looked at Rivian. We looked at ZB.
All right,
then-
now QBTS.
I think we bought one share of this, didn't we?
No, I thought we sold a put in it.
Oh, there it is up here.
There. Okay.
We've got the 18 put. Thank you very much for bringing this to our attention. We're going to take this and get it the heck out of the way, too.
We can do one of two things, and we could take a look. I don't know how much premiums in those options. We could always buy an in-the-money call as to replicate stock if there's not enough premium to roll it.
So, so what Jenny's point is, we've got zero extrinsic value in here. So we're going to look at all of them. I'm going to see their roll, which
you
will
go to
probably
May.
get something.
Oh yeah, if you can get 50 cents for the roll, sure, just roll it.
You can get 50 cents for the roll. I'm getting 38 cents for the roll, which doesn't make any sense.
So for me, what I would probably do is roll to the 18, because there was still 12 cents, 15 cents. What I would do is roll to the 18 and then add on the 10 or 11.
Put. So I know we were talking about calls. We're not going to add on the call. We're going to add on the put.
And you could add on the 18. If I would probably add another out of the money put, and I might add on that call.
And the buying power effect in this is very low.
Right. So, oh wait, you're in Rivian.
What?
Okay. So you've got your roll in and QBTS.
Yes, that's in
We'll go back to
QBTS.
Rivian.
So we're in QBTS and then adding on.
Yeah, you're back in Rivian in the top.
It keeps. Did you see that? I click on it. It won't give it to me. QBTS. I'm gonna do it. Okay.
Okay, so you're working that roll.
I'm working the roll.
Let's penny it down and get filled on the roll, because then we can show how adding the call will add no additional buying power, which I'm never a huge fan of naked calls, and I talked to Tony about that too. Like, not a huge fan of naked calls.
Oh yeah, he's not a fan either, is he? Okay, we're filled in the roll.
So if you add on that call for 50 cents, no additional buying power, and if you add on that 11 put for another 70 cents, we're getting another $1.30.
You got to keep an eye on that naked call. We got filled in our ZB.
So let's talk about cost basis reduction. That 18 put is like we're long 100 shares of QBTS. If we can collect $130.
No, if you cost. I'm going to delete this. This is as if we're long 100 shares. If you, as soon as you add that call, anything above, you can lose money on.
Oh, right. Yes, so that's one reason where instead of that in the money put, sometimes I like to just take the stock, because then you can sell strangles around it and you don't have that risk of the. But then that would be the same as just leaving this put and adding on the 11 put.
That's what I think we should do. Let's leave this and add on the 11. Because you notice we're going through earnings. So on earnings, we'll add the other ones.
Yeah. So if you add on the 11 put and we get 76 cents, if we're short the 18 put, what did we collect the first time? I don't even know.
I don't remember.
Let's talk about our cost basis in QBTS. If you pop out the side. So activity.
This is 30 days. We're down $350. Our cost basis is probably $15.30.
Well, here, yeah.
$15.50.
So you just add, we're out, if you go like year to date, for the beginning of the year to date.
Yeah, I mean, this is all we've had in QBTS.
Have.
Yeah.
So 350, add 350 to where it's trading, 1330, 1415, 1690. So 1690 is our cost basis.
And then by adding, 1690, we're getting another 50 cents in extrinsic value for that 18 put, and we're getting 60 cents extrinsic value in that.
So we're getting like another $1 knocked off. So if our cost basis is 1690, now it's 1590, and if every month we can get about $1 and reduce our cost basis.
And this is different than the other ones too, because the capital required here is very small, so I don't mind adding.
Right, to use $174.
Yeah.
Not bad at all.
So I'm shipping that one too.
And this is one of our conductor stocks.
It's a quantum computing
stock.
stock.
It's a quantum stock, and our train conductor has been talking about this one for a long time.
Yeah, he has.
Yeah. All right.
Okay, so that's in there.
Back to Twitter.
Wait, Rivian, we didn't roll our Rivian.
Oh, we got to roll that too. I think
I canceled that one, so I'm going to buy this back.
We're just moving it out to the 16.
Yes.
And do we want to do what we did in QBTS and add like the 12 put?
Yeah.
I like to do that, especially in this market. Everything's so beaten down. I'll add on another. I know then you're getting double long, so if you can't afford to get double long, don't do it.
It's interesting. QBTS, I mean, they're about the same price. That's why I kept switching between the two of them. Was only holding up $170. This is holding $309. I'm still okay with it.
Yeah, it's just gonna help us dig ourselves out of a hole quicker.
Yep. Okay, so that's in. That's through earnings. We'll probably add calls on the eve of earnings. Anything else? Should I go back to Twitter?
Yeah, back to Twitter. All right, if you go top down, Jack Tucker's in happy end of quarter. Stay small, 2 double tranches of 0DT, collect 22,000.
I'm only saying this to remind myself. Today's end of quarter, end of month, and we're on last call.
Oh my goodness, we're on last call.
Yes.
Yeah.
We're on last call today, so there are some earnings, and I saw the Bob on Fire did that. Nike's got earnings. We're going to take a look at what's happening at the end of the day in the markets. SPOOs are only
up 90.
Up 90.
Okay, so let's keep scrolling down in Twitter.
Fabio, you. We'll check it right now.
All right, you. We have a naked put. This is kind of like the story of our life. This has been a roll. You could see we already rolled this once 11 days ago.
Let me take a look. 60 days and you. We're down $29.
So that's not bad.
I love you.
So since we're not down
over.
much, you can roll that, and we don't need to. Let's roll you.
I want the symbol on the top. There we go.
Okay, there it is. Take that put, and this put, since we rolled it, is not even a loser. So we're going to close that. And honestly, in May, I would just sell in out of the money put or at the money put. Sell that 17 or 16. We don't need to.
I'm going to 18 only because 18 has more extrinsic value than 17.
Okay.
You see, I looked at the call. There's 230 versus under $2.
Got it.
Okay.
So we're paying a little bit of a debit for this roll, but we're getting this most extrinsic value we can.
Because we were up on it, so I kind of agree with that.
Yeah. You.
Thank you, Fabio.
Let me see the chart of you.
Hold on, I'm going to pay 140. It's taken a little bit. It's come down a little bit.
Mm-hmm.
Energy fuels. Maybe they're pipelines.
Energy fuels. All right, back to Twitter. Let's make sure we get to everyone.
Do you want me to go top down?
Oh, we can. Yeah, new tweets keep popping in.
Steve Jones, Liz, yes, different types of trades for different people. And 0DT trades are not right for anyone who can't be glued to their PC while the trade is working. I'm afraid to be away from my PC for even a minute when I have 0DTE working. Okay.
Vegas traders unite. Because he's in
Fazia.
Vegas. Yeah, they're both in Vegas.
I love it. Yes.
Yeah, they don't want to be worrying about their 0DT while they're laying in the pool.
The funny thing is I will literally put my GTCs in and walk away, but that's the one that I keep an eye on the most.
Yeah. Oh, and this one you think about, like, I don't think about my durational trades or my stock or anything like that. All I worry about are my 0DTEs.
Yeah. But I try not to overtrade them. They're either going to be, for me, if I don't hit, it's a loss.
I didn't put it on today because I didn't trust the market.
But I love it, Steve Jones. Vegas traders unite. Do they know each other? Whoops.
I'm sure they do.
Okay, so I'm going to go down Fausia, Blue Wackadoo. We'll make sure we get to every Frank Walsh. We rolled Jade Lizards, ? I have an IRIN.
34, 45, 46. Okay, so I'm guessing like the trouble is the 34 put.
Let's take a look.
IREN. Oh yeah, honestly, you're not bad. 34 put. The call spread I would close for a minimal, pennies, and the 34 put I'd roll it to May. If you look at April, still $2 left.
So their question was, it was kind of like, do you roll Jade Lizard? So okay, now that we looked at it, let's take. So Jade Lizards have a naked put component.
Right. It's
just break it apart. So your call spread made money. You're going to buy it back to your point for pennies.
Yeah.
And then you can roll that out in time. But to Jenny's point, there's still a lot of extrinsic value. So whatever you would do with that put, you're going to do. Then you can add an additional call spread on if you want.
Look at that 34. I want to see. I could probably move it down. And there's so much. If you bought that back, if I bought back the April and go out to May, I could probably move it to the out of the money. I could probably go to the 32.
And you're going to be.
Yeah. Look, you go to the 30. You can go to the 30, 31. Give ourselves a little bit of room.
I'm just going to go to the 31. So you're going from the 30 to 31, and then you can add on a call spread.
So that just is like still taking in a credit and giving yourself more room. Not a trade recommendation, but it's just an idea of how to manage a Jade Lizard.
Yeah, but just remember, a Jade Lizard, and nothing's a trade recommendation, but a Jade Lizard's main component is a short put. However you'd manage a short put, you can manage the Jade Lizard.
Good. All right, that was a good question. Then reminder to put that quarter end long call trade XSP towards the close. So yeah, we'll be watching. We've had end of quarter, end of month. We haven't seen the rally all the time.
Never in March. March was the year that I saw it with Anton. Or March is the quarter that I saw it with Anton. Because
I was on spring break.
You were on spring break.
Countdown. I leave in.
So we will see what's happening, but I appreciate the heads up. We're going to be doing it on last call today. So what we're talking about is, I'm going to go to XSP real quick. This is small. We're not going to do SPX.
And we're going to do something cash settled at the very end of the day.
And then let it go.
We'll be on last call. We'll do it and we'll leave it. It gets cash settled.
Yes.
We'll watch.
Now,
and as the time is ticking by from 250, and honestly, I would say right around 240 we put it on.
So look at the at the monies. I mean, I say 250.
Well, I've seen it rally from 240 to 250.
With that end of quarter, what I saw in March, it was the last 30 seconds. It was out of control.
If I had extra money, I might put like one on it at 240. I don't know. You might do a call spread at 240, and then if you get a chance, buy back the short call, and then you're.
So let's take a look at this. I want you to remember this, Jenny. Okay. Use your steel trap, okay?
I heard. You want me to remember the 643 call for
the at the monies. I want to know what the at the monies are. 643 call, 162. Look at her.
Got it. I'm not going to forget.
Perfect. So thank you very much. We will go back and look at that. What rookie move?
Look at Mikey. He forgot to add the hashtag.
Oh, look at this beautiful family.
A couple days off to visit my son and his wife in Arizona. Look at how cute they are.
That's adorable.
Fun.
I love it.
Oh, Mikey, what a fun day.
What
and you know what? Jeff, our floor official over here, he was just in Arizona last week too.
Yeah, he's very tan.
Yeah. Yeah. So cute. And look, they're in Arizona with their Chicago Bears hats.
I know, I love it.
Cute.
So cute. Okay.
Liz, is that the mountain you climbed in flip-flops?
Yes. Yes.
We were in Phoenix for a show. We were doing a show in Phoenix.
It's called Silverback. Camelback.
And someone said, "Hey, who wants to climb Camelback?" And Liz showed up with flip-flops.
I did. No, it was my family. I took my son.
Oh.
My son and my husband and I climbed Camelback Mountain in flip-flops. Without water. It actually wasn't that bad. It was a perfect day. We had cloud coverage, so it wasn't like one of those crazy days. And they were athletic flip-flops, to my defense, but it's still.
But still. Mm-hmm. But she made it.
I did it.
She lived to tell about it.
I did it.
Yeah.
Like I said, if we were in the sun, it would have been horrible, but it was one of those weird cloud-covered days. I didn't even think about it. I was like, this is fine.
It didn't look that bad from the window.
We got up there, one lady's like, "You're in those?" I was like, I didn't even think about it.
Well, we didn't. We're not hikers.
Okay, and then Bob on Fire comes in. Good morning, ladies. Wishing you a blessed Easter. No more earnings today after the close. Okay, so we have, it's today. And then, so we've got Nike, Restoration Hardware, and CAG.
I have ConAgra. I loaded up. CAG, take a look at it.
Why did you load up on ConAgra?
Because it's really been beaten down, and it's a high dividend payer. Go to the trade. Go to the chart.
Oh.
Okay. If you go, you find me a time in the history of ConAgra where it was $15. Go back 20 years. Find it. Let's see.
I know I'm not going to find it because I'm pretty sure you're done with
I didn't go. I didn't go as far back.
Nope. Still, look at this. This is as low as it was. And
Yeah,
that's
yeah.
2018.
Yeah. Keep going. Keep going. Keep going.
This is exhilarating TV for people.
All right. So no. Okay, here. The last time it was 15. Last time it was 15.
2008.
Yeah. So, and then if you pop out the side and you look at the dividend pay.
I will. Hold on. I just got to go back to our normal.
Now, I like when I bring things like this up because then I get emails from viewers. Like, I got emails from our viewers about Campbell Soup, that Campbell Soup might be removed from the S&P 500. Appreciate that information. Here we've got almost a 9% dividend. You see that?
Wow.
9% dividend.
105 rank?
105
You never
rank.
see earnings are today.
Earnings are today, but I'm just letting you know, fingers crossed for earnings because I loaded up in ConAgra. This is what I do when you're out of town.
Let me.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
5% below recent average with calls and
Ready
puts
to
trading
take
similar
your trading
volumes.
skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I
well-
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as explore traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade. Think you know where ball's gonna go? Test your theories with backtesting.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as explore traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, winding down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. We've got Jamal here, and of course, Thomas Westwater for this edition of Options Trading Concepts Live with a focus on futures. How you guys doing?
I like it. Doing well. How about you, Thomas? How you doing?
Yeah, doing good. We just had, not sure if it hit you guys up there, but a pretty big storm, some hail, some lightning show. So, yeah, I mean, it seems like the temps are dropping pretty crazy right now. So, it's good times.
Yeah, otherwise, what we call spring in Chicago.
Yeah.
You never know what you're going to get. 1 minute it's 70 degrees. Yesterday was that day, though. I mean, people were walking around. There was skin out. People were so happy that it was warm. It was definitely one of those days. As I always say, this is why I don't get too carried away. I feel like you just never know what's around the corner. And now we got crazy rain today. It's like, oh, my God.
Yeah. Highest volatility is definitely in spring in Chicago.
Yeah.
You just you have to check the weather every single day before you leave the house.
It's true.
Otherwise, you're going to get caught with a T-shirt and it's 30 degrees outside. And you're like, when did this happen?
Yeah.
But yeah, very wild out there. Also wild in these markets. Does it feel real? E-mini's up 90, Nasdaq up 350, Bitcoin and ETH kind of flat, but crude is up with the market up. I think that's the biggest telltale sign of something's got to give, as they say. But silver up 5%, big move there. Some other things chopping around. Gold also up almost 2%. And to the downside, really not much at all, which is interesting as well. But talk me through your thought process. The VIX is getting crushed a little bit here, but it still feels like a fake rally. It kind of feels like that 200-point rally we had last Monday, where the first time in the history of my life, I was like, this is not real.
This is another confusing day. Yesterday was a little confusing. Today it seems to be a little confusing. Good call out by you. That's definitely the biggest tell of the day is that the markets are up. I'm going to go ahead and say a new, you know what? It's almost like we got to throw out the March 9th move in a way. I mean, I don't want to say completely throw it out, but this is a new intraday high that's actually staying there, right? That's what we're getting today. I mean, all of that move was in the pre-market on March 9th. This is actually during intraday. This is the new intraday high in crude, and markets are up. This is really strange that we're seeing that. I don't even know what to think anymore, man. I think none of us do. What can you do? But
don't think.
Yeah,
I think that's the move. We just don't think anymore.
Yeah,
it's kind of how it is. Yeah, for sure. These are, again, we're still kind of in a no man's land. We talk about 64.74 in ES. I mean, it's not the 6,500 level. It's not the 6,600 level. I feel like there's a lot of long position at those levels, and when we do hit those levels, I think you're going to see a lot of explosive activity, honestly, because of those big numbers, and that's where a lot of people are long. So just keep that in mind. Yeah,
and I think this could very well just be a short covering rally type move. I mean, there was some news hitting the wire that maybe there's a ceasefire in the future, but we saw a much stronger rally on that potential news a week ago, a little bit over a week ago. But yeah, all these big green bars have been followed by red days that bring us lower, and that's been true for the entire month of March, really. Every single one of these green bars, 3-4 days later, were much lower. 3-4 days later, were much lower. So this could be interesting because if that happens, that could be kind of crazy. But I did place a ton of new trades in terms of adjustments today for that reason. Just preparing for maybe this is fake, maybe it's not the bottom here, and I'm making a lot of adjustments to account for that. I closed this Microsoft butterfly we put on, the 18-day, 17-day. It was the 380, 400, 420. That was a $125 winner. And then I closed the GDX butterfly, diagonal spread as well. Long June, short May. That was a $127 winner. And the rest of these positions, UAL, rolled the short call down in a diagonal spread to hedge it. Intel bought the upside symmetrical butterfly wing to remove upside risk there. IBIT rolled the short call down and out to hedge against the 100 shares I've got. JP Morgan rolled the short call out in time to hedge. SPX bought back the short call of that calendar spread, that long-term calendar spread, because the short call was worthless. And then Apple, same thing, rolled down short call diagonal. Microsoft, just talked about that. And then 6J, I bought back the short call in the calendar because it was worthless. So a lot of just rolling the short call into this rally. And I picked up maybe $300, just a little bit more than that in case this thing reverses. So I'll take that all day.
For a second, I was thrown off because of the timestamps. I thought you literally did all these all at 8:54 a.m., but clearly you did these, and then you logged them all at 8:54
yeah,
a.m. I was going to be like, that is impressive, dude. Trading it up.
Yep. Yes. It was pretty quick, though. I just went through the entire portfolio, just made the adjustments, and then posted it probably within 5 minutes of that happening. But yeah.
The only thing I did was move my EWI strangle. I rolled that, chose some different strikes, was actually able to collect a little bit while doing it. And oddly enough, freed up some capital. Well, not oddly enough. I freed up some capital because the 115 was right at strike. I was up more in this thing. I was up like $300 at one point. Obviously, this is moving further down. I was only up like $20 when I rolled it just now because it was basically at my put strike. But that's the only thing I've done today.
Yeah.
But yeah, largely the last couple of days, it's been about adjusting.
Indeed. Thomas, have you done anything in the last couple of days here in this market?
Yeah, I've sold a call spread on ES, and then I rolled my copper short put spread out with more duration and lowered the strikes a little bit. Copper's been giving me a headache. This short call spread on ES, I like it. Because I think we're just the risk sentiment is going to degrade through the week, and that's kind of what I'm talking about today in my slides.
I like it. Yeah, I would expect to see some realized volatility there, especially with the precious metals kicking up today, leading the charge. Silver up 5% now, gold up over 2%. So they're making moves. Platinum as well. But yeah, if you want to join us on the YouTube channel, we're streaming live there. just head over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas and questions along the right-hand side chat. I've got the Nike earnings preview that I wrote yesterday. They have earnings today after the close, so we can check that out a little bit later, see if you have any trade ideas for that. But yeah, we'll have a bunch of earnings previews for all of the Mag 7 stocks and more coming up over the next couple weeks as earnings kick off April 14th.
Nice.
Yeah.
How many shoes move through the Strait of Hormuz?
Great question. If you actually click on that link, you'll see a Nike shoe with a sad face on it. So that probably answered the question. Yeah.
Teaser.
Yeah, I don't see how they post anything good for earnings. But earnings can be crazy. They could post something terrible and the market just rallies. Reminds me of like Ted when he's working at the grocery store. He does some crazy stuff and the manager's like, that takes guts. We need guts. You're promoted.
Yeah, right.
He's like, I'm trying to get fired.
We've seen that at times, right? Where it just seems like there's nothing good that could come out of the earnings of a name. The sentiment is so negative surrounding it, and they bounce for some reason. So, you know what? That is interesting. For that point alone, it's interesting.
Yeah. I mean, it's at decade lows.
It is.
Nike. So at least there's that. But we'll see.
There's a chance.
But yeah, let's pop over to the slides and see what you got for us, Thomas.
Yeah, so we could just go straight to the first slide and take a look at. So this is since I believe February 27th. I want to say February 28th when the war kicked off, and these are the average moves for each asset you see there by day of the week since that happened. And I also ran the data for 60 days before the war. The pattern is nothing like this. So these are all in a very different environment or regime now that we're in war. And a lot of people have probably noticed this, but I just wanted to quantify it and put it into a chart so that we can view it. I think the most striking ones are crude oil and the S&P 500, and then, of course, the 10-year note, too. You see a pretty clear pattern. So the S&P 500, the bottom right, the orange bars, in the beginning of the week, we make a really nice up move, right? The week starts, it's usually coincides with some kind of positive headline coming out about this war, potential ceasefire, things like that. So risk comes into the market, and Monday we go up. Tuesday, actually, we still on average are making a higher move. So that kind of aligns with what we're seeing today, even though it's not the velocity of the move is a little bit more pronounced today than it has been on average since the war started. Then Wednesday, you start getting some hesitancy coming in. You get a barely unchanged day on Wednesdays on average since February 28th. Then comes Thursday and Friday. So people start taking risk off. The S&P 500 starts dropping. The 10-year note makes a big drop. Yields go up. Crude oil goes up. Thursday and Friday, we see there the top right chart in purple. Crude oil, the biggest moves have been consolidated to Thursday and Fridays. And, that's also kind of what we're seeing with the headlines. Bad headlines come in during the end of the week, and that was especially true for the first 2 weeks, I think. And then the market started to anticipate, this pattern of, some fluff being given at the start of the week by officials, and then, by the end of the week, you see that maybe that's not the case. And then Friday after market close, we've gotten a few developments that are seen as, not great for the market. So I think traders are coming into this market, risk on start the week. There's some headlines, you're trying to maybe even, for a lot of these traders, this is known, and you're trying to scalp these moves. And then by Thursday, Friday, you're starting to de-risk. So you're getting your portfolio more delta neutral. You're taking off risky speculative positions, and the market starts to go down. Crude oil's going up. Hostilities are, expanding. And, it's just a pretty clear pattern when you look at these charts. Gold, a little more iffy on how it's reacting day to day. There's not a clear trend like you're seeing in the S&P 500. You go from left to right, so Monday to Friday, you get an up move, and then you're going down throughout the week. Gold, a little more ambiguous there. So, trading that, Tuesday we're seeing an up move, today's an up move, but yesterday gold wasn't reacting the same way it has in the previous few weeks, so there's some divergence happening a little bit between these assets. But overall, I think we're still following the same pattern. And of course, we're going to have to wait through tomorrow to see if this kind of holds true Thursday, and then we got kind of a short market week. So yeah, I think this is tradable as long as we stay in the war. And the administration, the White House is at least saying the war is going to end soon, things like this, a very positive, optimistic message. But then when you look at what officials are saying, kind of more in not such a public way, it's that they expect the war to go another 4, 5, 6 weeks at least. And I think trading it on, expecting the war to end or a ceasefire, that's a hard thing to do because we're not privy to what's really being said in these negotiations, and the negotiators really aren't even talking directly yet. So I think for now, I'd be surprised to see the risk sentiment remain positive throughout the week. So if we get to Thursday, the S&P 500 is still up. This pattern that has been pretty clear since February 28th is perhaps in jeopardy. But for now, I think, if you're trading with an assumption, this is kind of like seasonality, right? You can look at it almost the same way. So tomorrow, maybe we expect, the buying to cool off in equities. You start getting a little more upside in oil going into Thursday, and then S&P 500, the Nasdaq start accelerating downward on Thursday, and I believe the stock market is closed this Friday, right?
Mm-hmm. Yeah.
So perhaps we see this kind of the risk being taken off on Fridays. Perhaps we see this front loaded coming in tomorrow. So if we get a day tomorrow where oil's up more, equities are down more, the 10-year note is dropping, yields are rising. Perhaps this is being front-loaded more this week since we have an abbreviated week of trading here.
Yeah.
And then, so let's just go to the next slide. I didn't put all the assets on here, but I just wanted to highlight the S&P 500. The pre-war move is in the gray shaded bars, where the war period since February 28th is in the orange. So, we see the gray bars. It's kind of ambiguous, right? You rise Monday, Tuesday is pretty much unchanged. Wednesday you get a little rise. Thursday it drops, but then Friday you get a modest up move again. So the pattern has diverged here, and this is pretty much the same for the other assets, at least the 10-year note and crude oil. So that's why I didn't include the other slides. But if anyone wants those slides as well, just message me on Twitter, and I could shoot those over as well.
Love it. Yeah, I think if we go back to the first slide, the biggest thing that stands out to me is the crude oil chart in the upper right and the S&P in the bottom right. Sure. I mean, we've been saying this for weeks, but crude oil has basically been like the VIX of the market. And this is representative of that, where when you have big rallies in crude oil, you've got big sell-offs in the S&P. And to your point, Thomas, the prediction markets have the highest probability of the U.S.-Iran ceasefire happening April 30th and beyond. Only a 9% chance that it happens this week or next week, and a 20% chance that it happens by April 15th, tax day. So, yeah, I think that confirms what you're seeing too. And I think specifically by this chart, crude oil has been up almost every time S&Ps have been down. And today, you're seeing the S&Ps rally while crude oil is rallying. So there's some people in the YouTube chat saying, this isn't a rally, this isn't a rally. Yeah, I think this is just, it's got to be some kind of short covering or something along those lines, because nothing has changed. And crude moving in the same direction of the S&P is the real, bells are ringing, alarms are going off. Like doesn't seem like this is the end.
Yeah, definitely. And on the other side, it's with the 10-year versus gold. First of all, when you just look at the gold chart in aggregate by itself, I should say, it's got filled. Speaking of gold, I just got filled on a gold call spread. When you look at the gold chart by itself, you're like, what the hell is going on here? This makes no sense. However, when you look at it against that 10-year note, it's not exact, but except for the Thursday, for the most part, rates go up, gold has gone down. And we've seen that trend some. Last Thursday, I'm not sure. I don't know if we got a CPI or PPI number if that messed that up, but that is really weird to see them both down big on that day, which was obviously a day where we were down big in the market and crude oil was really up big. So this is really cool, Thomas, to sort of have this visual to see what's been going on, to try and make sense of it. As we've talked about, definitely the crude oil and the S&P one, but the gold and the 10-year note is definitely the other strange thing that's going on here.
Yeah, definitely. And, the one thing that kind of has changed this week is the rate cut expectations. So, last week it was all about we're now getting rate hikes this year. Now that's kind of came in a little bit. I think that's due to some Fed speak. Perhaps that changes things. But ultimately, I think monetary policy and what is going to happen is still pretty unknown, because if this goes on for longer, the longer it goes on, the more it's going to affect the Fed's calculus. Right now, they're right to kind of wave this off and say, we're not going to necessarily react to it, or we're not going to say we're going to react to it in a strong way. Because if it ends next week, it's the concern for the Fed is minimal. And the Fed doesn't like responding to supply shocks anyways. They have less, their monetary policy tools are less impactful to deal with the supply shock versus the demand side. So I think it's important to see what the Fed does, to keep watching them. But ultimately, I think this is going to be, the market behavior here is going to be driven by what's happening in the Middle East.
100%. And to kind of just lean into this even more, I just got onto a downside butterfly in SPX 10 days out. So next Friday, I bought the 6,300, 6,200, 6,100, 100-point wide butterfly for $8. So that's going to be a fantastic hedge if it comes into play. And 10 days to go, this thing can really appreciate in value if we do end up reversing this move and getting closer to that 6,200 level, or between 6,200 and 6,300 level. It could be huge. So we'll see. But yeah, it feels, again, like this is not a sustained rally here, unless something actually ends. But if something ends, you're going to see the E-minis up 300 points. Like, this is not a war-ending rally.
Yeah, right.
At all.
No, it's not. I'm just looking at too, like, things that are moving today. It's mostly been tech after, well, I can't say all of tech was sold off yesterday. It was mostly AI related names, but obviously Nvidia's up. Microsoft. It almost seems as though they're just trying to go out and get long some things that have not gotten love more recently, particularly the Mag 7 names.
Yeah. Microsoft trading at 360.
There's a lot of end of the quarter rebalances is still a real thing. That still does happen a lot.
Yeah.
I think that's kind of what we're seeing here. They're just using the news today to sort of continue to prop the market up.
This is the biggest update for the Mag 7 since November 2025. So I mean, we're seeing, it's a pretty big day move for tech. Semiconductors have also been in trouble. Semiconductors aren't as much up nearly as much as mags when you look at the move compared to the past. This is the biggest update for SMH since March 9th. So mags is doing more work here on a relative basis versus semiconductors.
Love it. Yeah, and just real quick, wanted to check the FedWatch tool, see where the interest rate probabilities are at. And just like yesterday, you've got 97% chance, 92, 88, 87, 84, and 73% chance in order of staying at the current rate. So not much to expect there, and that'll just keep this market churning. E-minis are up 100 now. Nasdaq up 400. Bitcoin and ETH kind of flat, and crude also rallying a bit higher, up at $1.80. So
yeah, it's wild, man. I mean,
something's off here.
Yeah, like E-minis are up 100 and crude is up almost 2%. What?
Oh. Nah. Fool me once.
Yeah.
Shame on me.
Yeah.
Yeah, this doesn't feel right. Volatility is collapsing a little bit, but we're still in backwardation. Pretty healthy backwardation between the J, the K, the M, the N, and the Q. So as long as that's still there, we're not out of the woods just yet. If and when we do see the war ending rally, which I assume would happen, I would expect E-minis up 250 to 300 points. Volatility gets crushed in the J and K. I'm talking like 15, 20%. And we go from backwardation. This is a pretty mediocre backwardation, a point-ish. We would go probably flat or get back into contango. And then you would see that contango steepen. Mm-hmm. So those are the things I'm looking for more confirmation that the market's ready to reverse this thing. At least
I mean, because, let's really remember the reason we're in this situation obviously is because of the conflict, but oil going higher has led to the worries about inflation, right? And that's why the market's been down. And last I checked, that hasn't changed. I mean, so till that really changes, I don't know if you could argue, okay, well, it's fine because at some point we're going to normalize to that. I don't think we're going to normalize to the fact that oil being up is not going to create inflation in our economy. And therefore, that's why these stocks have been suffering. That's still a problem. And by the way, we got a jobs report on Friday while the market's closed. I don't know about you guys, but I'm a little worried about that. A little worried about that.
That is wild.
Bonds will be open. We'll see what the reaction is.
Have you guys been trading any AG products? Because the prospective plantings report from the USDA came out about 26 minutes ago.
I have not.
I got a corn spread. It's not a corn spread. It's a fall spread. And soybeans. And it hasn't really been kind of quiet ever since. It's kind of, see the chart, it's kind of leveled out.
Yeah, what do you make of that?
Yeah, I see, you're right. I see the number just hit. There's a spike on the daily chart. Yeah. He's got it there.
Yeah, so the report, really quick, I'll go over it. Corn planted acreage down 3% from last year. Soybean acreage up 4%. So it seems farmers shifted a little bit from corn to soybeans. So the reason why I think soybeans is still up today, even though acreage is going up, is because oil prices are up. And the higher oil prices, the more it incentivizes biofuel demand. So more soybean crush, and that's increasing demand on that crop. Corn is up because obviously less corn acres and farmers are facing higher fertilizer costs. So if you want to use less fertilizer when you're a farmer, you don't plant corn, you plant more soybeans because corn is very nitrogen intensive, and soybeans not as much. Also, the report said wheat acreage down 3%. So a little less acreage for wheat. That means less supply going forward, all else equal, of course. And then you get some upside in wheat, up 2% today. Pretty much unchanged from before the report, but wheat is facing some of those supply issues as well.
So wait, say that again. With corn, you said corn, if you're worried about the urea and the shortages and the fertilizers, then you'd plant more soybeans and not corn?
Yeah, because corn takes a lot of nitrogen to plant to get that growth. Soybeans, I don't know the technicals of it, but it pretty much makes its own nitrogen in the soil, whereas corn, you need those heavy applications. So if you're a farmer looking at your input cost, you say, I could plant this corn, and corn did well last year for farmers versus soybeans. But you perhaps want to say, hey, maybe instead I'll plant some soybeans. I don't have to buy as much nitrogen, urea, those kind of products. And this shift was kind of expected because of those input costs. I think we've talked about this either on this show or Futures Power Hour a couple weeks ago. But this is a once in a year report, so it only comes out once a year. Because at this time, farmers are, the past couple months they've been ordering their supplies, seeds, all that stuff. So they have to make their planting decisions. The USDA surveys them. This report comes out, and then in a couple weeks we will get the next WASDE report. And now the WASDEs start getting more and more important as we go through the growing season.
For sure, yeah, I love that when all these reports, whether it's inflation or whatever, like there's actual reasons to pay attention to them. So wait, let me get this straight. So if this situation carries on longer in the Strait of Hormuz, then we run the risk of slower deliveries on fertilizers, right? But that would create somewhat of a, I don't want to say it would draw in corn, right? And therefore corn possibly gets more bid as a result? Or would it be with soybeans? Or what's the deal? How would you play this?
So are you saying if the conflict goes on for an extended period of time?
Yeah, and then there's less fertilizers, right, being shipped, right?
Yeah, so if you're a farmer and you still want to plant corn, you can say, maybe I'll cut my fertilizer use back a little bit. That's going to reduce, even though those acres remain unchanged, you're going to get a reduced yield from that if you're using a little less fertilizer. And maybe some farmers are thinking they can stomach that. There's a lot of things that go into these decisions, but fertilizer is a major input cost. Fuel is another input cost for farmers. They got to run their tractors and everything on diesel. So there's a lot of implications to AG products, especially the longer this goes on. Also, the higher oil prices also affects it because it boosts biofuel demand if you want to start making fuels from these products instead of from oil.
But with soybeans, you said they kind of basically, as a result of the process, they kind of make their own. They're not as reliant, let's just say, on fertilizer.
Mm-hmm. Yeah.
I wish I would have thought about that earlier. So I don't necessarily need to roll this call spread then. I'm trying to get at. Okay. Yeah. No, thanks, Thomas. That's good.
Yeah.
Yeah, you can get into some pretty cheap spreads here.
Yeah.
Yeah, even this 10-point wide diagonal spread, long June, short May. Important call out here. Both of these settle to the N contract, which makes life easier because you're not dealing with two different prices.
My thing now is if they're going to be planting more soybeans and this isn't as reliant on fertilizer, then there won't be an upside bid. Am I thinking about that wrong, Thomas, or what?
I mean, it's kind of there's conflicting narratives because if oil prices go up, more demand on biofuels. If fertilizer prices are up, though, more farmers planting soybeans, less farmers planting corn. From what I'm seeing, about 40% of U.S. corn production goes towards ethanol in the United States. So there's also a demand driver from biofuels on corn as well. So, I mean, I think this is an environment where even if farmers are planting less corn, more soybeans, I think both of these products can still go up in this environment.
Everything you're saying actually almost attracts me more to corn than soybeans. Right, ethanol is a lot. It's fascinating.
Yeah, these are pretty cheap. Either way, if you're doing, let's say you're playing upside and let's say you do both.
Mm-hmm.
These are both cheap. Like corn, long June, short May, just straight up calendar spreads, $200. You can move this further out of the money to just diagonalize it a little bit, pay a little bit more, and that's going to be $300. So a 10-point wide diagonal spread in both of these is about $300 if you're playing it to the upside. Yeah, I think I'm going to do both of these.
I am too. Actually.
Just to get some long delta in here, just in case this thing drags on and these things go higher. And just doing it to find risk. June, plenty of time. And yeah, this soybeans one's a little more expensive, but long June, short May is a nice spread for time value at least. We'll see if it works. see if it works.
If it works.
I'm pretty bold up on corn. I have 2 short put spreads, one in the May 22nd, another in the April 24th. I'll be taking that one off soon. Those are soybeans actually. Also long corn, so long the entire complex. I should have been long wheat. Christopher and I talked about wheat last week, singing its bullish praises. Didn't get into that one specifically because I'm thinking I'm already long corn, long soybeans. Do I want to really, be that concentrated?
Great question. The answer is yes.
I have a friend.
Now it is. Yeah.
I think I've talked about this guy a lot of times. He's the best trader I ever traded with. I don't know how much he wants his name known, so I'll just say his nickname all the time, the Squirrel, because he kind of looked like a little squirrely dude. But he was such a great trader. I've talked about him a lot. He was definitely that. When it came to those situations, like the fertilizer names, for example, it'd be like, which one do you want to get long? He'd just get long all of them. Guy was amazing, man. He just would get long all of them.
I mean, you basically make your own ETF doing that.
Yeah.
There you go. This one's another one that's $500 if you do a 10-point wide diagonal. So they're all cheap if you go long June, short May. If you're playing to the upside, similar story to the downside if you have a opposite directional assumption. But yeah, cheap way to get involved. If you're long June, short May, they all settle to the same end contract, which will make your life simple. And yeah, wheat is ripping higher today. I think the question is, if the markets reverse, does that put more pressure on the upside in these products?
I think if oil makes a big down move, I think you would see some downside in soybeans and corn, just because corn, you're using it for that ethanol. Soybeans, you're using it for that biodiesel.
Mm-hmm. Yeah. So I think ultimately you're playing these for a quick continuation. And I would imagine if we're to pick a side, because right now the market's up and crude oil's up pretty big. If we're to pick a side in which one would continue to go up, I'm 100% leaning on crude oil at this current state and time to continue increasing in price, especially if we see the market go down 100 points tomorrow. So I think that could give you, it could even be like a one-day trade where you throw this on, you take it off tomorrow if you get $100, something like that. I'm just going to do all of them.
I just did call spreads, actually.
I'm working them all. We'll see if they get filled, but yeah, interesting stuff. Thank you, Thomas.
Oh yeah.
Love it as always. I'm going to pop over to the YouTube chat now, see if we got some from the peeps.
What's up, chat?
What's up, chat? Brett looking at Conagra, CAG, earnings tomorrow morning. I'm probably not going to trade this one. It's a $15 stock, so really like the decision is, do you buy a stock or do you just buy a leap if you're trying to get long it? Because the premium here isn't that great. And I'd rather not take undefined risk to sell a put or something like that. So I'm going to be off this one. Can you please explain once more how to turn a double ratio into a free butterfly? Sure. So I just did that in Intel. So in Intel, I entered this trade. I had the short put at 40, and then I bought the 50-55 call ratio for $2.16. I did that in May. So if you start with a call ratio, and this was a lot easier for me to do because I had the short put as well. But basically, if you have a call ratio that's 5 points wide, to create a free butterfly, you need to buy this 60 strike wing. In this example, you need to create symmetry and create a symmetrical butterfly. And you need your wing cost to be less than your credit received up front. So with Intel, again, because I sold the short put, my initial credit received was $216, and I just bought this call this morning for 40 cents. So my net credit received drops to $1.76. However, if Intel just keeps ripping higher, I no longer have upside risk at all, and this butterfly just appreciates because now I have this long call that eliminates the upside risk here. So if you have a call ratio or a put ratio, if you're looking at a double ratio, you just need to buy the wings for less than your credit received. So if you collected $100 for a ratio spread and you can buy the wing on an out of the money move, that's when you can do it. Is like if you do a call ratio and the stock drops, or if you do a put ratio and the stock rallies, it makes your long wing that you're buying cheaper. So that's how we leg into free butterflies. Is you start with a ratio spread or even a broke wing butterfly, and then you create symmetry. I was just filled on wheat. You create symmetry by purchasing that option for less than your initial credit received. You lock in a credit and you have that free butterfly on. Wow, E-minis and Nasdaq ripping higher now. E-minis up 130, Nasdaq up 530. Bitcoin up 1,000. What just happened?
I don't know. I was actually looking at Twitter while you were done. I was like, wait, something just happened, bro. Something was sad.
I'm getting filled on all these products, and the E-minis are ripping higher, up 140 points.
Iran's president, I'm not even going to say this name, Tajikistan. I don't know. We're ready to end the war, but want guarantees. That's what happened. Oh, shit.
A literal timer.
Yeah, that's 65.25 that I've had in the ES as a marker. Yeah, we're ripping here, folks.
Look at that.
Love it when this happens.
E-minis up 140.
You get filled on orders and you start hearing alerts go off. That means action is happening.
Yeah. And as we kind of said, volatility getting crushed here in the J.
Look at oil, bro.
A little bit more. Ooh, oil reversing.
How fun is this to have on OTCL today, folks?
Yeah, this is wild. Let's look at that minute chart. Boom, 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 boom.
Yeah.
Down $4 from the high.
Where do you buy it?
Selling aggressively. And the volatility curve is flattening out as we speak. We are less than a point now between the J and the K in backwardation.
How do we feel now about the rally? How are we feeling?
Everything's great. Feels great. Yeah, E-minis up 160. I would expect to see this continue if this holds.
Hell yeah.
Big move. What are the currency markets doing?
First, I got an April 1st Super Bowl that starts at the 6,600 short put. So just need another 100 handles here. That'd be fun.
There you go. Love to see it. Yeah, Microsoft up $8, Google up $10, Apple up 5, Adobe up 2, Amazon up 7.5. So yeah, all these things are ripping and reversing.
Yeah.
Ready to end the war.
Yeah, said he's president said he's ready to end the war, but only if there are guarantees against future attacks.
Now here's the question: how fast do we get to 7,000 if the guarantees are met, no future attacks are hit?
I think we would stop at 6,800 to 6,850 first. There would be a pause there.
Okay.
Once we get through that, though, it's like, but I think there would be a pause. I think there's going to be a short pause at 6,700, 6,750. Then I think there'll be another pause at 100 points higher. I think it's going to be like 100 gap increments. That's what I believe.
Yeah.
I will say, if we get to 6,600, I think I have to get short a few things. We were just talking about this earlier. These are the levels. And this is exactly what we were talking about. Once you get to like certain areas, it's like, kindling. It's like on the fire. I mean, it just completely takes off. So we'll see. If we get to 6,600, I think we're going to absolutely take off to 6,700. Get there. Can we get there without another bad headline is the point.
Yeah.
Yeah.
Nasdaq
All it takes is one bad headline.
Nasdaq up 3% right now. E-minis up 2.5%. Big move there. Big move. Crude oil reversing more.
10-year yield down to 4.3. Yep. Less than $1 difference between the J and the K contract and VIX now.
Yeah. Yeah. Look at that. Down 10% in the J.
It's already 30-year yield. 30-year bond, 114 now.
Crazy.
This is going to throw off all of our correlations, by the way.
Yeah. Everything we just talked about might be changing. Yeah, this is going to be it's going to be very interesting to see if this holds. It would be insane if this does not hold. That would be crazy. Absolutely insane.
Yeah, I mean,
we're one tweet away.
We are
from a 200-point reversal.
We are definitely one tweet away. That's for sure. What's the dollar doing here? Dollar got smoked. I'm short dollar in Tasty FX over the last couple of days.
We got a Microsoft question. This will be 21 days to go. So you must be in April. Yeah, the answer is if you have a 380 strike short put, if this is a short put, you want to probably roll into this rally. So rolling into the rally, rolling into extrinsic value strength is when the market is moving towards your strike. And that just means that if you were to buy back April and roll to May on the same strike, you can see the May option extrinsic value associated with this option has increased by like $3 almost, $250. So the net credit received, if you look at buying back this option, that's increased to $1.40 in April, and you're selling May, that's increased by $2.40. This 760 credit was 660 yesterday. So that's something to consider. Rolling into extrinsic value strength. This is the best day you've had since that big rally last Monday. So that's what I would do if you're trying to hedge this position, is just roll out in time to the 380 strike, pick up some more premium, and you'll roll it into the earnings cycle. But who knows if this holds? And if it does, you're still going to be great. If it doesn't, you'll be happy that you rolled.
Contemplating whether I'm going to buy a put spread for tomorrow, SPX. At the moment, just let's watch this play out.
Yeah, it's selling off a little bit. Digesting the news.
Yeah, for sure.
Crude is flat. This is nuts. If this thing doesn't hold, look at this. Crude's reversing a little bit.
This market's reversing a little bit.
Scared.
Yeah.
I'm petrified. Volatility picking up a little bit more, back to a point in backwardation. But, just like last Monday, this is a great example of what to expect if and when this thing does reverse. Everything you see would happen again. Crude crashing, markets ripping, volatility collapsing, yada, yada, yada. So this is probably the most clear. The interesting thing about this market is like it's the most clear I've ever felt about like if and when this war ends, I know exactly what's going to happen with these markets.
Yeah.
At least in like
sure.
directional.
Yeah, for sure, right? Like the reversal of a lot of the things that we've seen. I mean, that's exactly what we expect, and it's the moves. I don't even know how much the expected moves are really built into the system. Honestly, right? Like there's no 150 point move built into the system for tomorrow or today. I mean, it is through Thursday as of right now, but even then, like that's not accounting for what just happened. Like there's no way of it knowing. So
yeah, and I think to your point, it feels like if we are getting closer and closer to a potential ceasefire, these iron condors, like one of these is going to get blown out if you're doing like the 0-day iron condors, because yeah, like you said, you're pricing an 80-point move through tomorrow. We just had an 80-point move in 5 minutes.
Yeah.
We have a 40-point move priced in for the rest of the day, which actually is pretty high. This picked up a lot. So that could be interesting. Like from now until the end of the day, having this kind of range. But yeah, it's crazy out there. Just gotta keep that risk small.
Wild stuff, folks.
Let's see what else we got. Scanning.
We get up to on that 65, 63. Couldn't quite do it. Coin is up 6%.
Yeah. Always a passive bid on markets due to 401k plans and index ETF popularity. Yeah. Yeah. For sure. And that's how even through all the craziness, S&P 500 still maintains an 8-9% return year over year on average. So yeah, that's why I've shifted away from taking a lot of upside risk. But if I am taking upside risk, like in the E-mini strangle, we'll just roll the whole thing up, offset that if it hits. Speaking of, that roll to 6,700 is looking okay. 6,700 straddle in May. If we get to 6,700, I will buy this back and roll it back out to a strangle, or I'll just shift it higher.
Get me filled here. I'm trying to get this iron condor off and crude. It's all over the place. It's just Y2 though.
Yeah.
I'm like 6 cents over the mid market, and it's like it's all over the place. Close that thing and put it back on. Oil actually goes back up because we know USO, same deal.
That's crazy.
So slightly up.
Looking at a strangle, show the market rolling the short call. Once you're touched, sell a put at the same strike. In that case, you have 2 short puts as a strategy you use. I'm not sure if you can show me like an actual example of that. I'm not sure what you're referring to. But basically, whatever you buy back the option for, you can replace it with something else as long as you have a credit that's more than that value. So that's the flexibility of undefined risk. Is I could buy back this trade right now for 390 points, and I can move it out to June and do literally whatever I want. As long as I'm picking up more than what I'm paying for, I'm going to collect a credit. So that's the whole key, is just piling up credits and adjusting risk as the risk shows itself. Yeah, crazy move here. SPY gap filled. It can crash now. Yeah, it's chopping. We look at the 1 minute news reaction, sold off a little bit, chopping around this range. But yeah, crude going back down. Volatility futures kind of chop around, but yeah, they're all moving in lockstep with one another, which is always interesting to see.
Guarantees. Want guarantees. Mag 7 flying.
Yeah.
Nvidia 5%. Google 4.
Yeah, Nvidia up $8. Google up $11 now. Amazon up 7.5. Apple up 6. Microsoft up 8.
Oh, it's a party when Apple's up 6.
Crazy. Yeah, all of these are exceeding their rest of the week moves.
Yeah.
For sure. So that's going to be the name of the game here. As long as we're getting close to a ceasefire, if that's real.
Keyword, real.
Keyword. Thomas, I'll give you the last word here. Anything else this month, or I should say next month, since March is going to end after today? Anything next month that you're keeping an eye out for? Any other reports, things we should know of?
I mean, the WASD we got coming up. The thing is with if you get a war resolution, you know what we talked about with soybeans and corn. The planting decisions have already been made. You know, it's not like the farmers could say, "Oh, the war is over. I'll be able to get nitrogen for cheaper now." But you've already made your decisions. You've already ordered your supplies and stuff. So not necessarily. It doesn't mean that that's going to reverse, at least for the acreage being planted this year, or something like that. One thing I'm trying to get long again recently is live cattle. We got seasonality strength coming in strong starting the next few months, really up until I think May or June. So trying to get long there once we break above prior resistance, which is around 244. So I'm going to take a long position once we crack that.
Love it. Yeah, I think we'll see how these markets react as this market moves along. Kind of crazy, but yeah, we got filled on call diagonal spreads and all of these in long June, short May. Those all settled to the end contract in each of them. So for wheat, got filled for like $480, soybeans $500, and corn $300. So the whole package. Some of them are working out nicely today, but these are going to be quick ones for me. If we get an oil rally, market reversal tomorrow or sometime this week, and these are all up, I'll probably just get out of them and close them, just for a quick little trade here.
That was massive volume.
Yeah, it's crazy.
88,000 minis.
Crazy. But yeah, that's it for us. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Check out that News and Insights article on tastylive.com for Nike earnings if you are going to trade it. I'm not sure that I will, but we'll see near the end of the day. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Baby, your love is too good. Baby, your love is too good. Baby, your love is too good.
What is going on, everybody, and welcome back to Risk and Reward. We got a pretty volatile market to catch up on, which we'll do a little tour of market here in a moment. Hope everybody's doing well. Let us know what you're looking at. Let us know what you're trading. Brother Gus, how we doing today?
Doing good. What a time to be jumping in here.
What a time to be alive.
Yeah.
Mike and them just go ahead and pump the market for us, so hats off to them.
We have a tendency to reverse the market on this show, whichever direction it's going. We tend to send it in the other one. So if you got those longs on, just be notified that Gus and Errol are on. The market could reverse.
Take the show with a grain of salt, for sure.
But yeah, everything's moving right now. I have already faded this move a little bit. I threw on a just 0 DTE, a little high risk, high reward situation put in SPY. That is going very poorly at the moment as we continue to churn higher. But I don't really care, given all the long bias that I have going on in my portfolio in general. If I have one loser in there at the expense of everything else being deeply green, I'm content with that.
Yeah.
But expecting this to be our classic fake out move amid this Iran situation. Although the reports are that this is coming from the Iranian side. This isn't a Trump tweet or a press conference or something. It's Iran saying that they're ready to negotiate.
I mean, last night I think we had a Trump tweet, if I'm not mistaken. We had Trump talking about something to where we got a little bit of a run to the upside in the pre-market or in the after hours yesterday. And then to see a continuation into today, kind of just blowing my mind. So, I mean, the headline news, trading in this headline-driven market is kind of interesting, kind of keeps you on your toes, but yeah, nonetheless.
Yeah, and it just goes back to what I've said a lot of times over the course of this whole thing. Like we get, these little blips of news and suddenly we're just ripping towards 6,500 right now. It's like, what happens when the war is actually over, news breaks? How high do we go that day? I don't know, but I'm excited to see it.
Yeah,
what's going on, everybody?
I already see a please reverse it, G&E. And right before this, I'm not going to name any names, but somebody popped through the door and was like, "Yo, please dump the market for us as you guys get on, so those puts will start paying." So I don't know. It's looking like this reversal might have caught some people off guard a little bit. I know it caught me off guard. Came back to the computer, had to scroll up like 3 times to find the top of this move. But with that being said, we can go ahead and just jump right in, do a little bit of a tour of the market, see what's been going on. See what underlyings have been moving on us. But it's looking like we might touch a new day high here soon, maybe. But I don't doubt if we stall out here soon. I'm kind of surprised on the momentum of this move, if you will, just considering the massive overnight move that we got. I think recently in these overnight sessions, the Asia sessions, we've been commonly putting in 200 point, 300 point, 400 point overnight moves. And you would think we would save these massive moves to the New York session, but most of the time, as of recent, at least, they've been happening overnight in the Asia session. But with that being said, we can go ahead and jump into the we can jump into the Tasty Trade platform, and we'll get some eyes on some of the things that's been going on.
The woe skills in the chat, just pasting in the lyrics of Trey Songz "Bottoms Up." I like it.
Bottoms up.
Definitely fitting for this current market environment. I'm a proponent of some "Pump It Up" by Endor in times like this.
Ooh, don't get that stuck in my head right now. Don't get that stuck in my head. We're definitely pumping it up right now, though. So 3-4 consecutive sell-offs on SPY over here, and then a massive gap up, and then a continuation to the upside. So today we're up about 16.5 points. 2.5% on the day. I mean, Gus, what was the probabilities that we would have been talking about a 2.5% green day after 3 consecutive, 1.5%, 2% days to the downside? It happened so quick.
Yeah, it did happen.
Sentiment
so quick.
shifts fast.
Yeah, and it's just crazy because under normal market conditions, obviously, I suppose anytime you get 2% red days in a row, we're not under normal market conditions, but you would say that the probability is pretty slim. But in this environment, it's really it doesn't even feel that crazy. It feels like this was inevitable that we all of a sudden get a day like this popping out of nowhere.
It does. That being said, not as much excitement going on in the portfolio. Kind of just letting things cook a little bit here. We'll go over a little bit on the micro Nasdaq here in a little bit when we circle back around to it. The Micron technology, so far, it's doing pretty well. This has been a pretty volatile position, kind of going back and forth on the P&L side of things. We barely had this one on for about 48 hours. So we're looking to snag a little bit of the dip on Micron. We're not looking for an all-time highs. We're not looking for this thing to start trending back to the highs from where it was trading, especially after how SanDisk reported their earnings. But just looking for a little scoopy scoop, if you will. It's been a little while since I referred to the scoopy scoop. So that's what we're looking at in Micron. A little bit of long delta in there. Sold the 320 puts. We'll keep an eye on it. We put a little bit of long delta on a few days ago on QQQ. We sold the out of the money puts, sold the 565. Those were starting to get a little tricky there. The market started to continue to slide a little bit more to the downside. So seeing this headline definitely helps that position. But good Lord, it was getting a little, come on guys, it was getting a little uncomfy down there, right guys? It really was. We were all down in there together. But after we got this pop to the upside, decided to sell some out of the money calls on QQQ. So kind of unintentionally legging into an iron condor now. Got some short delta on and some long delta. Yeah, so that's kind of how the cookie's crumbling now. We're able to suck a little bit out of that put side. Now we'll throw on the call side. See where we'll be standing within the next day or two. I know we legged into it as an iron condor, but depending on what happens, we might leg out of it or take it off as a whole. But that's what's new in the portfolio, at least. That's what we had going on over here on this end.
Yeah, really not a terrible spot to be with an iron condor either.
No.
Obviously, probably not something you're going to want to hold all the way to expiration with how volatile these market conditions are. But with this move up, as I said, I do expect this to be a fake out move. I saw it very well put in chat by David. If you're not using this rally to get out of long delta and/or add in short delta, I got a bridge to sell you. Yeah.
No, everybody that said, "Oh, if we just bounce back, I'll start managing some of this risk." Everybody that said that, nobody's managing their risk. Right now. Everybody's like, "Oh yeah, this thing's turning green right now. We're back to highs."
Yeah, absolutely. So, like I said, I do expect this to be a fake out. So probably not the worst spot to be in with that iron condor. If 575 is kind of the high that comes in on QQQ, and we begin to slide back towards that 570 level, you're just right in the middle of that range. So
yeah, kind of just
not too bad of a spot. Nothing new going on in my portfolio aside from the 0DTE SPY put that I mentioned. That's a 642 expiration, or 642 expiration. Amateur hour over here. 642 strike. So yeah, expecting a bit of a sell-off off of these highs into the end of the day here. It was a very small position. I am down something to the tone of 40% on that right now, but only took one of them. That would be $33 notional, so sort of a paper cut.
This is a cheapie.
Yeah, in the broader scheme of my portfolio here. But yeah, just having a little bit of fun with that one, and trying to get at least a little bit of downside exposure against all the long delta that I have going on. That's absolutely printing right now. And like I said, if that just expires at zero, and it's because the market goes higher and higher and props up the rest of my positions, I'm content with that. Getting a nice recovery out of Meta, which was really burning a hole in my pocket for a little while there.
Should have done the long delta in Meta yesterday when we were talking about it.
Yeah.
All right, we'll miss out on it.
Yeah. There's a little
Nice
6%
recovery.
pop going on. Opened up something like 3.5%, and then has just run even
No, it's
further.
a large move.
Yeah, in the midst.
That's a
of all
big
this.
move.
All the tech stocks pumping right now as a result of this move that we're getting. But yeah, happy to see that. Yeah, and really everything else, it's just still. I'm just in funny spots on a lot of this stuff. Everything is either so far in the money that I'm just totally content to let them expire for max profit, or so far out of the money that it's like that these things aren't even worth exiting. I don't really have anything that's like super close and feeling like it needs immediate management. We are getting a nice little rally out of crypto here as well. I saw somebody mention Coinbase is up 8%. Brought our crypto market up about 3.5%.
Yeah, nice recovery here as well.
Yeah, so my IBIT, my ETHA doing well. Also have some MicroStrategy in there for some added leverage. I'm pretty freaking levered up on crypto, a little more than what is probably responsible.
Get your money where your mouth is.
But yeah, for sure. And I think the recovery there is inevitable. Dates vary. My Bitcoin is all very, very long dated, as is my ETHA. MicroStrategy is the only thing that's a little bit close. And to be completely honest, I cannot for the life of me remember why I put these MicroStrategy contracts so tight. I have a short put vertical on there at the 240-250, which is like nowhere close. And they're 79 DTE. They would have been something like 100 DTE when I put them on. Like this trade, I've looked at this like multiple times over the past few days, and I cannot for the life of me remember why I decided to do this so short. I've come to the conclusion that I must have just like done this too fast or something, and gotten the wrong expiration. But if we get a little bit of continued recovery out of crypto, I might be able to escape with a break even on those. But yeah, manage your time horizons, guys. I don't know why I did that to myself. But yeah, everything just running. I still have these VIX shorts on, 48 DTE, 18 puts in VIX. We are seeing a little bit of a down move there. Still hanging over 25. So at the 18 strike, I'm still down considerably on these. But anytime VIX wants to start to take the elevator down, VIX is sort of, VIX takes the elevator up and down. We like to say that stocks take the stairs up and the elevator down, but VIX, VIX
it goes
takes
both
the
ways
elevator
on
both
VIX,
ways
for sure. Yeah.
Yeah, that's pretty much all the excitement that I have going on. I will say what's interesting in the midst of this move is that there is no considerable action happening with oil at all. In fact, oil has chugged a little bit higher today, and well, I guess it's just more or less unched. It's down 2.5%. Okay, that's fine. It's a drop in the bucket for me. I'm thinking it hasn't really changed, but it's coming down a little bit.
I'd piggyback off that sentiment a little bit. I definitely see where you're going with that. I think it's a little bit less aggressive, a little bit less volatile.
Yeah, this isn't as serious as I would expect if war is ending is actually becoming priced in. And simultaneously, right before we hopped on, I was looking at the odds on Polymarket and Kalshi, and the ceasefire odds are not really jumping at all. The direct exposure to these markets are not really buying this at all. So that sort of lends itself to my sentiment that I think this move is a fake out, and it's why part of the reason why I decided to get short these SPY.
Kind of still think it's aiding to that kind of the boy who cried wolf, kind of the sentiment of the headlines kind of just getting a little bit lighter each time, kind of less of a dramatic effect as time goes on while we're kind of dealing with the uncertainty.
Yeah, I'm just trusting the headlines less and less is really all that it is.
I hear that.
We've seen the story before, so we'll see how things.
We played these games before.
Out there. Yes,
yeah, we played these games.
That we have.
Most definitely. No, quickly, let's just go through the high options volume watch list and kind of see what else has been moving on us, see what else has some pretty decent premium that we could see if we want to take advantage of anything over here.
Working on a nosebleed right now, guys. Sorry.
Oh, good. I'll let you know. I'll let you know. 100%.
If my nose starts bleeding, buy puts.
Yeah. What does that mean? What is the data in that? Let us know.
Nosebleeds when it's low pressure, right? So
it's raining outside. I'm just trying to see if there's confluences I should be aware of. It's got to be raining and then a little bit of a nosebleed. And
well, but does low pressure happens at higher altitudes? So perhaps nosebleeding is a bullish indicator.
Yeah. You ever been to Colorado?
I have.
How was the elevation for you?
Yeah, no,
you have nosebleeds.
Yeah, I get nosebleeds there. Yeah, I just dry out in general. Anytime I go to high elevations or just dry climates like that, I got to moisturize like crazy. My nose is bleeding. It's all the stuff. I can kind of acclimate after like a week, but if I'm just there for a short trip, I will certainly get the nosebleeds. And even just moving to Chicago from Southeast Texas, which is one of the most humid regions in the United States, it was a bit of
still pretty dry.
Yeah, gotta have a humidifier.
100%. 100%. I hear you on that. Very common, especially during soccer. A lot of the guys kept coming up and just absolutely dying. So kind of sucked to train in that environment, but you kind of get used to it. You know what I mean?
Yeah.
So
well, yeah, I know it offers advantages too when teams that
100%
aren't from there come to play.
100%.
Nobody has the right conditioning. That's always a thing with football games in Denver or basketball games.
Had a buddy that had worked at the Olympic Training Center. Shout out to Creighton. He's a great guy. He was at the Olympic Training Center, so he had invited me just as a guest one time to come check it out. It's pretty cool seeing the boxing arena, those kind of things. But it is crazy to see them conditioned to have that endurance, flying across the country just to do that. That's some dedication right there. That being said, we got XO and pulling back a little bit harder over here. So I know oil isn't as aggressive, but some of the other names that have a lot of exposure to these or to this oil industry has a lot of volatility in them to the downside today, at least. Lay off the book. I'm glad I took my little 30% on the 0 DTE iron condor today instead of greed. Yikes. Yeah, no, this market, we're kind of still in the markets where it's been forcing us to make quicker decisions, regardless of if that's taking profit or managing our risk. Kind of in an environment, it's forcing us to do something because it seems that by kind of having a lapse of judgment in this environment, the market hasn't been too nice. Oil flirting with the big bad $100.
Big bad $100.
Big bad hundo.
Well put.
The big bad hundo. Yeah, right above 100 right now, 65 cents, hovering around there. That goes to tell me if we slide below 100 on oil, does that mean a new day high for the indices? I would think so with the way these have been moving so inversely to each other. They almost feel like a one-to-one inverse correlation. Not that that's the case. It's been feeling that way. Yeah, you almost got me on that, Jared. You almost got me on that, brother. Now I got to watch out for your name every time I see Jared. I gotta put you through 2-factor authentication every time. My only regret today is I exited Meta calls before this pump. That's a tough one. That's tough because that's exactly how I felt when I missed the sell-off on the metals like gold and silver right now. So how you're feeling right now is exactly how I kind of felt on the move that I missed the downside on the metals. So I hear you.
Sort of have the other side on Meta as well. Just yesterday you were contemplating. You really. I don't say this to take a dig, but you've had two big misses recently. You failing to short SanDisk and failing to get long Meta like both. You have just topped
a day after. Oh, that's tough.
Yeah,
That's
both times. But sometimes that's the way the market treats you. And I will say it's always better to be on that side of the equation. I would say, and not to dog on you either, David, but to be in David's situation, it feels a little worse when you have something and then you exit it right before a pump. It always feels a little bit worse than not entering something and then seeing it take the move that you
100%. It definitely. You know, just
but as you said, hindsight's always 20/20. As is true with Meta, as is true with SanDisk. These things are. It's tough to step in front of these trains, try to catch the knife. You know, whatever vernacular you want to throw around.
It is tough.
It's a scary situation to be in. You can only deal with the information that you have right in front of you at any given moment.
It's all good. He's just pouring salt on the wound for you there, David. It's all good. No, I'm just kidding. That's wise words. Wise words.
I'd rather be wrong once than continue to be faked out by this admin. Yes, that's true as well. And it's these headlines are so incredibly tough to decipher. But I don't know. We do seem to continue to be working higher here.
We are crawling just a little bit, taking the highs a few moments ago. I think 23,890 area will be interesting. Again, here I can't imagine the market really has enough in it for it to really rip another 50, 100 points. I mean, it could, but. I mean, more than likely, maybe some consolidation or a pullback sometime soon.
I did take off the shorter dated of my two Affirm puts earlier today, right before we got the rally. So that was a pretty good exit.
Oh, nice.
I felt sort of bad doing it because we had opened higher, and I was like, man, I could have bottom ticked this a little better. But I was inside of 60 DTE on the 35 puts on Affirm, and with the little jump happening in the market this morning, I was like, you know what, I'm content with the 20% profit that I have on these. So pull those off. I still do have a 290 DTE 30 put. I still think this company is going to zero, but you gotta manage your time horizons. I don't even know that I think it's going to go to zero in the next 290 days. But mark my words, Affirm does not exist 10 years from now. I'm sure of it.
Long-term bear on Affirm. Long-term bear.
What's the news here? CNB Science. Iran said that they are ready to end the war, pending that they get some terms,
some guarantees, right?
Some guarantees. Yeah.
Send over the terms and conditions. We'll read them. Yeah. We have AI now. We'll have the AI read the terms and conditions.
Yeah. Meet us in Geneva. Let's throw down.
Go ahead and just summarize this terms and conditions. I'm not reading all that. Go ahead and just summarize this for me.
Yeah. Have your Claude talk to my Claude.
Yeah. Let's go ahead and do that. Why is the market rallying? Yeah. Pretty much everything that I just mentioned here. Got an upgrade to dock 3.1 modem, maybe $100.
Oh, Rhett was saying yesterday that Comcast jacked his prices and he had to call him. So
did
I guess he won those negotiations.
Oh wow, what's Comcast's ticker?
CMCSA. CSA.
How did you know that so fast?
I remember it because it's so stupid.
Like how did you?
I don't know why they don't have a better ticker, but I can always remember it because
did not hesitate. Did not even stutter or hesitate.
Yeah, I mean, I guess Cast is taken. Can I find a better ticker for Comcast? COMC. Yeah, nobody has COMC. Comcast, get better, man. You're too big to be having a five letter ticker. Fix this. Tell your underwriters you need to switch.
Yeah, no, I mean a silver strangle, that'd be nice.
Maybe I can pay for all of it with SLV strangle.
These are juiced up a little bit more than they typically are. I'm not looking to get involved in the metals. I mean, if I did, I would take a little bit more of a bearish stance. I'm not gonna put anything on right now. I mean, if this run today was to 75 or 80, maybe I'd get something short on. But personally, not liking the risk to reward. Maybe we could do something to find risk on there. Do something a little bit more passive, not as aggressive. Then that would be a little bit more comfortable, but it won't force anything for sure. Yeah, $1.46 on a $5 wide would have to do something else. So we'll go ahead and move on from there.
The situation with Meta was made even worse because I entered at 3:30 p.m. the day before the news.
Oh, that's tough.
Man, that is tough,
David.
That's just you got the worst on both ends of the stick. My condolences to you, David, but. You know what?
It's tough.
The valleys in life are what make the peaks feel so much better. You gotta take a few hits like that. Really, I think a few hits like that a year because it's all just tail risk. Sometimes you wind up on the right side of tail risk, and sometimes you wind up on the wrong side of tail risk. Psychology of money, people will understand. So sometimes you're on the right side of luck or the wrong side of risk, and sometimes it's impossible to tell which is which. You know, and that just as easily could have been a great trade. You know, maybe at the time that you got long Meta, there was an 80% chance that it would move to the upside and a 20% chance that it would move to the downside, and you just happened to wind up in the 20% and end of things there. It's these things are esoteric. They are impossible to determine. It's fugazi. It's fairy dust.
Okay, Matthew. Okay, Mr. McConaughey. I'm looking at gold right now. I'm not opposed to getting on short delta in gold. I know we were just going on this whole tangent on silver and how we missed out on the move, but I mean, these pops in these metals still do look somewhat attractive. So at least going to keep an eye on GLD. With that being said, we can go ahead and jump to the Trade and View platform, unless there's any other tickers we kind of want to briefly touch on.
No, I don't really. I don't have anything else super noteworthy. Let's talk. Talk scalps. I'm sure it was a very difficult environment to do these.
Yeah, most definitely kind of was. I mean, we definitely got the volatility. Going to be looking at this value area high at 23,390 if we get here today. So, I mean, if the market heads past this level of value, I mean, we have some swing highs over here at 23,975 and some other higher levels we can look to see if price wants to head into that price discovery type move. But with how far this range has expanded today, I doubt we get more price discovery above this level of value. So with that being said, we'll be patient, see if we get any type of consolidation, see if we can get a little bit of a pullback or a little bit of a reversal. I know we got a couple hours left. But we're just going to wait for the market to show us something that looks attractive and that really stands out, and then we'll pull the trigger. But let's go back a little bit today. This was the initial run that we had to the upside. I mean, I had came back to the desk and then I had pulled up the charts and then I had to scroll up 3 times to see the top of this move. So this is just another testament. I'm always such a proponent for using stop losses because I can't imagine coming back to my desk, 600 ripper to the upside. Like imagine having a trade on and you're forced to manage 600 points away from where you left your desk. But that happened in a matter of a couple minutes. One of the previous trades that we took today, I accidentally threw on 3 contracts. We scooped up about 10 points, but this is another thing to be careful because this little toggle over here, sometimes you might adjust the quantity amount. And I remember I had hit buy and then it just shorted out automatically with 3 contracts. So remembering to adjust this little quantity tab number to adjust how many contracts you're putting on is super important. But we took a few trades today and let's just go back to the morning. Where is that? 8:30? 8:30. Here, we were looking to take a couple shorts at around 23,454. Stopped out of this one. What is that? 14 points on that one. And then the second one was about 463, about 10 points. It's about 40 points total, 35, 40 points off the short to the upside. I was just leaning a little bit more short bias here just because of the massive run that we had overnight. And then also, I really liked how these lows started to stack up. So I really wanted to take the short to be able to target these lows to the downside. So whenever we didn't get that and we put in higher highs, that let me know, okay, your trade thesis is invalid. I should not even be in this trade anymore. So cut the trade a couple times right there. Glad we did. Ended up ripping a little bit more to the upside. Looked to take this pullback long, didn't get it. Stopped out of that one. Pulled back down here to the lows. Wanted to see if we'd rebound back to the highs, but we cut that one after about 5 points. So this one was about 3 contracts, and the more contracts that we use, I want to make sure that we have on a little bit of a tighter risk. So that one was about 5 points, but it's because we got a little bit more aggressive, and there's no need to hold this far, to the downside to figure out if you're about to be right or wrong on the trade. So that's why we're just getting right in and out of some of those trades. But as you can see, the volatility was very difficult today. We got this short at this high. Maybe we would have held this one a little bit longer to the downside if we didn't fat finger 3 contracts off the first entry. Sometimes it'll work in your favor, but it's always going to feel way worse if this were to rip against you and you're in with an amount of contracts that you shouldn't have on off of your first lot. So with that being said, the market's been super choppy. We'll see what we get. This level of value up here is looking a little bit more attractive just because we're already getting a lot of responsiveness off this value area low. So to see something respond off this value area high would be interesting. But we'll continue to keep an eye on it. This consolidation is starting to look pretty attractive. And the fact that we haven't had a pullback yet today is what is making a potential pullback more attractive. Because, if we zoom out over here, you can kind of just see how, we put in higher lows pretty much throughout the entire day. So we'll see how the market treats these levels. SPX is liking 6,500 so far. Yeah, we can take a look at SPX. Sometimes we'll use ES a little bit more often too. I'm more of just a Nasdaq kind of guy, but we'll have to do ES as well? Because I know Robert, Gapper, sometimes you guys will look at those more often.
Yeah, I'm an ES guy myself. Well, I don't really play with the futures products, but I'm a SPY SPX.
Yeah, more of a SPY ES. Yeah,
that guy.
Yeah, I feel that. I feel that.
That's all just personal preference. The classic Brett SPY 0 DTE Iron Condor on our show coming through, 65.95, 63.50. I like it.
There we go.
There's a little downside bias there, sounds like, which I think is smart. If so, yeah, got a little more room to the downside. I think that's the way to sling it. But we're pretty much at our time here.
Oh, we are. Are we going to see a pullback sometime today? Yes.
Probably.
Yes.
No, obviously, nothing can be definitive, but
how far?
I am anticipating it. Yes. When, where,
I don't
how
know.
far are definitely the question marks. I don't even know if it's necessarily a level-dependent thing. It's more of just whether this headline appears to be substantiated, or if some news, any news breaks that could potentially pop the mini bubble we have going on today. But I am positioned for some kind of intraday pullback to come through myself.
I think this will be a fun week. It's only Tuesday. We've got some headlines that kind of pushed us back into ranges that will be fun to trade within. So we'll see what we get.
Yeah, we will. But we're out of time here. Can't eat the futures power hours, guys. Time. I'm sure they have all kinds of things to discuss as this market does this crazy stuff.
100%. With that being said, Booyah, Brett, CNB, Gapper, Jared, everybody else, big deal. Thanks for taking the time to hang out with us. We'll see how this market pans out. Crazy markets. Let's manage these positions. But be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
We wanted to call in because recently, as some traders may have known, there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Let's celebrate, dance to the beat, forget the wars and stop the feet now. The fun
We are back. It's still Tuesday, March 31st, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Jamal Chandler. Jamal, what's soda popping today?
Well, soda popping is stocks. And I think we're all trying to figure out how long it's really going to last. But we got quite the move here. Started when we were on Options Trading Concepts Live, and it's still holding up, Chris. So I think that's a good sign.
It is holding up. Hope springs eternal in a market where it's looking for any sort of headline to hold on to right now. We had a comment from the president of Iran, Masoud Pezeshkian. I'm pronouncing that
okay,
correctly.
So you didn't know how to say it neither. Neither did I.
I try. People maul Vecchio. It's Vecchio, Vecchio, Becchio, Bechil.
Do you know what?
So
let's not go there, okay? Because I have a first name, so that's different. I mean, at least they call you Chris. All right, trust me. We're not gonna play suffering wars.
No, but when there are 10 Chris's in the class, everyone goes by the last name. So,
oh,
and I digress. The point is here, Jamal. We get a comment from a guy who on March 7th told us that Iran was done attacking its regional Gulf state neighbors. Since March 7th, Iran has done nothing but attack its regional Gulf state neighbors. So I myself take, raising an eyebrow about the carrier of this message, the messenger himself. Is he a reliable narrator throughout this crisis? The answer has been no, but the market seems to want to run with it here today, Jamal. And so this afternoon, in the past hour, we've had quite the little surge here in stocks, where green shoots are appearing every single place in the market right now.
Ooh, look at all that green.
Oh, look at all that green. Oil's only off 1% or so. It's been bouncing back and forth between 1% loss, 2% loss. It's hanging still around $100 a barrel. But you can see how everything else is looking at a relief rally here. I've seen a lot of commentary that this is a market that's very bared up in the short term. I'm having trouble crossing that bridge myself. Even with the latest positioning update from the CFTC, you're still looking at now the least net short speculators have been throughout all of 2026. This is not an enormous position by any stretch of the imagination. So it feels like when people are saying the market's really fearful, they're looking at something like the CNN Fear and Greed Index, which in and of itself is a composite of things like the VIX, and changes in yields and changes in stock prices. So when volatility shoots up and prices go down, the fear is high. How are you viewing today's rally? Do you buy it? I'm having trouble getting myself from 0 to 1 here.
Well, I mean, I'm obviously pretty long it, and like most people, I would feel, and despite apparently people talking about how bared up the market is, I am looking for an opportunity to probably get short deltas, because these rallies have been kind of short-lived at times, this one seeming to be a little bit longer. I am looking for an opportunity to get short. The only problem is I don't know how much I love getting short right here, right now, at these levels. I feel like, maybe 66, a little over 6,600 in ES, definitely 6,600 in SPX, which would be another 50 points higher in ES, just by the looks of it, is an area I feel that there are a lot of longs. I feel like once we get to that area, it'll be another sort of stopping point. Until then, hopefully this holds. But at the end of the day, it's still kind of a no man's land.
It still feels like we're not out of the woods, even with the market rally today, and it's ebbed and flowed back and forth. We can just go right to the charts here, Jamal. There's no reason to stand on ceremony. There's a relief rally playing out today, which, given yesterday and the moves we had seen in the past 2 days for those directionally neutral positions, we were quickly getting close to gunning towards 6,300, 6,200 on some of those strikes. So not going to be too upset that we're 200 points higher here, which recenters some of the positions with respect to the short iron condor trades. Not the greatest news for the short call spread in the Russell, which is sitting 25.50, 25.25, but we're going to take our wins where we can get them and look for the silver linings and ask ourselves the question, is this a rally that we want to sell here? Technically speaking, maybe a double bottom. We have that really nice on the 4-hour chart. This is actually a 2-hour chart. Let's go to the 4-hour. On the 4-hour chart, we get that nice looking Morningstar candlestick cluster, bullish engulfing bar, key reversal, with the comments last night from President Trump that the U.S. is willing to walk away from the Strait of Hormuz, end the war. We see a continuation to the higher now, 65.50. The downtrend in place from the pre-war highs through now, that's defining the entirety of March as we wind down this month of March today, it's still in place, Jamal. So signal or noise, dare I say, buy the move or fade it?
Ooh, it's a good one. I see what you did there. I mean, this is such a headline-driven market. That's the hard part about it, right? And so, I guess if you buy it, then you believe that there's more positive headlines coming. And for now, I'm going to say fade it, just because of the negative headlines, or I should say the positive headlines have not outweighed the negative headlines. I mean, you're seeing 1 minute that we want to end the war, but then the next minute you see that there's possible, troops going over. So I don't know what to think. And I think a lot of people feel the same way, as we just dropped 10 handles. But I would say you gotta, if you're long, I think the idea of getting maybe a short delta position here in something broad-based, whether it's ES, whether it's SPX, SPYs or Qs, I think kind of offsets. If you're as long as I am, it helps offset the worries about any possible pullback here.
Well, it feels like today is a good day to take a look at some of the positions that are on and whether or not there's still time for these things to work out. Is it appropriate to use the bounce today with a recentering of the market relative to the strikes that we have? Is that something that we should take advantage of?
Mm-hmm.
So just thinking 6,200, 6,100, or even the 6,300, 6,250 for the short iron condor positions in this market. I mean, this is actually not a bad move with respect to that. We would like to see us stay pinned as close to the center point of this range, for as long as possible for the duration of the trade. And as it were, this bounce today helps achieve that goal to a certain extent. So on one hand, we could take things off. There are 30 days to expiration here, right? We could just go through and quickly try to monetize some of this and take a little profit right now. I, for one, think at 30 days to expiration, it's worth sticking with, because it's worked so far. And the whole point of these trades is to do something in a very mechanical, tasty way. Look long enough, 45 or so days out, hold it until you get to the peak of the decay curve, 21 days, and then move on to the next one. And it's helped avoid a lot of emotional, dare I say, decision-making, reacting to some of these headlines. So a little bit higher of a push, I may consider getting out, right? Just because then we would be at the exact 50% mark. What's the point of waiting a week? We have a holiday Friday. We have non-farm payrolls on Friday. If I want to keep trying to sell the vol, given the fact that there has been a pretty decent vol collapse day with that 35 IVR now, no longer peering into the 50s, then we could look out another 45 or 50 days to give ourselves a little bit more time, keeping in mind the holiday that's coming up at the end of this week with that event risk stacked on a closed market day.
Yeah, right. That's going to be an interesting and weird one. And I think if you want to center some positions, I can see with those who like to do zero DTE, I'm looking at the idea of maybe a butterfly for the end of the week for Thursday, just exactly that. All of a sudden people will wake up and remember, we got a real event risk coming up while the market is closed. And the last few jobs reports haven't been that fantastic. Maybe there is another situation where we see a sell-off heading into a weekend, especially, again, if you're looking to get a little bit of short delta into this rally. I think you got to find ways of adjusting some positions into this because we just haven't had too many of these. But what you don't want to do is get too short, right, for when we do have the massive move. Because at the end of the day, this is showing you how oversold the market is, if you will. I mean, when we do get the positive news, there will be a massive market move, and it will probably come in tranches. It'll probably be a 2% day followed by another 2% day, which again, we could be seeing tomorrow. So I don't think you want to get too short into this rally. But, for those, just remember how worried you've been for the last couple of days. And I'm not talking about you and me. I'm talking about everybody. We've all been collectively worried about our long positions and kind of white knuckling it here. And so this is your opportunity to do a little something. Just don't do too much because, again, the move is going to be big when it does happen. When they do, at least, I won't say resolve it because I think resolution is still some ways away, but the beginning of the resolution, I think, will lead to markets moving big just like this.
I'm trying to find some charts that help me paint a picture that maybe the market has decided to turn a corner. XLY had a decent bounce at the late June lows last year. Maybe it's starting to turn a corner here. Although you could argue that a lot of wood has been chopped and broken already. And then the same thing for tech. A nice green day today, getting back above our 1 month moving average for the first time on a closing basis since the 19th of March. But that's a pretty significant swing level that's still obliterated here. Even semis, right? We get back to the neckline after breaking down yesterday, and we're not advancing much further. So let's see how we close today. Because even so, 65.39 right now, Jamal, you had mentioned the market popped. The high for the session is 65.63. So we're starting to peel off a little bit here from that headline high. Because again, the person who said this, the Iranian president, Pezeshkian, he said us on March 7th that Iran is done attacking its neighboring states. And that wasn't true. There was an article, and I tweeted out the link as well, how the Iranian president is at odds with the IRGC commanders right now. And the IRGC commanders are the ones who are in the driver's seat. So, I mean, who cares what he has to say? I'm struggling to buy into this, just given the context of who the actors are. If some random senator comes out and says the war is going to be over, do you take that at face value? Do you care what Trump has to say about it? Right?
Yeah, right.
I'm having trouble digesting it. So maybe today then is a day where for traders who were not short the market or not doing something directionally neutral. Listen, if you're directionally neutral, today's a great day to kick things out. I'm personally chewing on that right now myself because at 30 days to expiration, we have 2 trading days left in the week. So realistically, if I don't make a move today, tomorrow, Thursday, then I'm looking at Monday. So then now I'm looking at 24 days to expiration next Monday when I'm really making the move. What's going to materially change between now and then that's going to make these positions more valuable? I mean, I guess we could get another 1% rally. That would help recenter the strikes a little bit more. But then wouldn't I just want to buy more time so that I could play for more vol erasure contraction? Are we going back to 26,500 in the Nasdaq anytime soon? I just still don't think that's possible, given what we know.
Yeah, I mean, I think that's the best part about this situation is that you can use this to move things as I'm currently doing right now. You said it and it triggered. There's plenty of things that I probably need to move as this rally is happening that I haven't really given much thought about because I'm thinking about some of my big box stuff, bigger trades. But there's other things that that are still April that I definitely need to move today because this rally is just too big to ignore. It's AVGL. I forgot about this thing.
It is, and making adjustments never hurts. One thing to keep in mind here right now, I would like to give a technical explanation for where we could say that the market has turned the corner. So I'm just going to get rid of some stuff here on the screen real quick. Jamal, the concept with when we're using something like a Fibonacci retracement tool, we do so to check to whether or not a prevailing trend is in place. So for the sake of this exercise, when we pull up our Fibonacci retracement, we're going to go from the pre-war high that we had on that Wednesday, and we're going to take this down to the lows that we had earlier today because we did hit a new low, and technically speaking, this would be a bullish key reversal because we moved below yesterday's low and we're closing above yesterday's high. The level at which we could determine whether or not we had actually made the drop to a place where, the market is turned the corner probably doesn't come into 67.89. We'll call it 67.90. Why is that? I've shared this before. I think it's actually written up on the tastylive website for how you use Fibonacci retracements and extensions. But there's a relationship known as the golden ratio, and it's about 1.618. It's the number you get when you divide a Fibonacci number by the one that precedes it. So, for example, 5 divided by 3 is 1.666, 8 divided by 5 is 1.6, 13 divided by 8 is 1.625, and so on. The closer you get to this, the closer the Fibonacci numbers are together, the closer the ratio is to 1.618. So 618 here is the inverse of phi. Okay. Why do we care about that? That is our trend level when we use Fibonacci retracements. This market could rally up to 67.90, Jamal. And if it doesn't get through there, then technically it is still in the throes of a downtrend from that late February swing high. So with this constructive price action today, we can't rule out the fact that there's a bit of a relief squeeze here. But I still think, given the fact that this is a trending down market, we would have to take at first blush any rally as an opportunity to fade it and sell it, should it be provided.
I can't disagree. I mean, I think just based off of recent history, right, that's what we've seen for the majority of this month. It's really fascinating, too, that this is happening on the end of the month, end of the quarter here. I mean, and I would love to say it's a coordinated effort. A lot of times you would think that, but again, when you have an overseas, the comment came from overseas more than anything, right? Leading to this move today. So, but we always used to speculate about those type of things that happen at the end of the quarter. It's like the end of quarter of the BRIDE program where a lot of funds, et cetera, are rebalancing. You do see that still, but I'm sure this is helping a lot of that today. So yeah, it's interesting that the fib area is right around 6,800, which I think is another key area in the market here, where I think if you do see sustained move over 6,800, that's when the rally starts to get explosive. So we got a lot of key areas to cross here, Chris. We'll see what happens.
Yeah, and so your 50-day moving average is up there. So you get to the 50, you get to the 618, then you feel really good about things. The drop in volatility today, though, is noteworthy. And I think, for short-term traders, if you're looking at what's happening with the VIX, this move from, near 29 down to 25.6, and VX was at J. That's not something you're going to outright dismiss. Same thing for the VIX itself, down to 26.32. That's a loss of, 4 points? Vol generally, though, throughout this entire episode has been staying sticky here, Jamal. And ever since the war started, we haven't really been able to see the VIX drop towards 20. So just thinking out a day or so, let's say the market really is a believer. It has the faith. We wake up Thursday morning, we're getting ready for non-farm payrolls on Friday, which, hey, the business environment for the month of March was stellar, right? So I'm sure companies were adding jobs left and right. Let's say we get a 21, 22 VIX. It's Thursday afternoon. We're heading into non-farm payrolls Friday when we're not going to be able to trade. What are you doing? Are you closing your book? Are you looking to maybe get a little bit of, directional beta to the downside? How do you approach this?
Let me guess here. If we have a 22 VIX, we're above 6,600, an area where I think, I would actually, I'd do more of what I was talking about, get a couple of short positions on. Sure. But I would hold, I wouldn't close the book. I mean, as appealing as that sounds, and sometimes if we had done that, man, think about it, right? But I would hold because, again, Monday is supposed to be, that's supposed to be a goalpost area, right? That's where we moved the goalpost as far as there was supposed to be, a hold off on strikes on our Iranian sites as a result of what's been going on. And so I would hold and see how Monday ends up turning out. But again, I would put on a couple of short positions heading in if we're actually up again by Thursday and this rally has continued over the next couple of days. I'd definitely get a couple of short positions on at least to be able to offset any down move that happens next week.
These headlines are great. We've seen headlines a lot over the course of the past month. Mm-hmm. I have been cynical the entire way. We hit a new monthly, yearly low earlier today before another headline drove us to the upside. What did yesterday's headlines do, Jamal? They were faded by the end of the day. We need to see something legitimate here for us to hang our hat on. Now, the flows themselves, this is a strong volume day. We don't want to discard that. Mm-hmm. Volatility has come in meaningfully. It's over 1.5 million contracts traded here in ES. That is healthy by the end of the day. The fact that we're still at 1:49 Eastern time, that's great. But there still needs to be a little bit more. So perhaps if you're someone who is a bear and who has done well recently, like Friday, Jamal, I cashed out of my long put spreads in ES, thinking that maybe we'd get another Monday bounce, Tuesday, Wednesday meander, like Thursday, Friday sell-off kind of situation, as we've seen for the entirety of the past month. Yep. And yesterday, I felt like I missed the boat a little bit to get short stocks again in ES, even though I had my short Russell call spread still working. So part of me is like, yeah, I can take off, maybe adjust the short iron condor. I can use this as an opportunity to really reload short. Move back down below to like 60, below 6,400 here, 6,350. What does 6,350 look out to next week? Let's play with this. What is 6,350, 6,325? Risking $250 to make a K? Can start tinkering with that stuff. That's how I think the risk to reward is in this rally right here. It's not to the upside because, again, look at what's happening around the world economically speaking. The oil is just not going to go back into the pipelines right away. There's a long tail for this disruption. I will take the under. So adjustments forthcoming. We'll review them when we get to overtime later.
And again, I think it just really depends on how long you are, right? I'm fairly long. My book is doing well on days like today. And so as a result, and a lot of the positions, even though they're doing well, they're not really up money. They're just up money today. I'm not money up on them overall. So as a result, I still want to see some of those through. I still have some duration on them, meaning a lot of them are out in May now. And so as a result, I'm probably going to try and look nearer term. Not here as much, but definitely we get above 6,600. I think that's an area where now all of a sudden I'm going to be looking to get a little bit short in hopes that we continue to rally. And again, my shorts are going to be risk defined because I don't mind losing on those to be able to make on the longs that I have in those further out durations.
The financial minister of Iran here had some comments that Iran will not accept a ceasefire, but a complete end to the war, just not in Iran, but across the region. And they have not received a response to their proposal. Other news agencies reporting America's holding serious talks with the new leaders in Iran. Something adding up there?
Financial minister.
Complete. Do you think that the U.S. is going to accept Iranian control of the Strait of Hormuz?
No, I don't.
Probably not palatable.
Yeah, no.
Okay, hope springs eternal, though, Jamal. We got to keep an eye on oil here. It's nearly back to 102. So much for the market throwing in the hat on this. I mean, we were down below 100 earlier, so this is a quick 2% rebound since we got these headlines coming down the pipeline. I think that is ultimately the one thing that that's the keystone.
Exactly.
If oil's not dying down, then we're not out of the woods.
Exactly. Big, massive move there. And I know we'll get into a little bit, but a big, massive move there initially on the news. But again, the fact that it's remaining above 100, it says to me things aren't completely done.
The Russell here. This is looking like some kind of flag down here all of a sudden because we've been really meandering very tightly between about 2,400 and we'll call it 2,475. We can just take this guy and take you and maybe do one of these. And sure enough, maybe this is the new range that we're watching down here, Jamal. So if we're new traders to the Russell, I think we have a pretty clear guidepost. If we're through 2,570, you have a long. Otherwise, we have not cracked through the 1 month. We haven't cracked through the 50-day. If you're short like I am, as long as we're below the 1 month and below the 50-day, that's the line in the sand that I've been operating around for this trend. And so there's no reason to panic just yet. The technicals are still in place. If I wanted to get short, I would wait for a little bit more of a move to sell closer to resistance. If I also wanted to get long, I might wait for a move back down towards 2,400. But this is the midpoint of a trading range right now. So this is a really ugly place to enter with fresh capital, is my point, Jamal. And we're peeling off the highs a little bit here. So 45 IVR, it hasn't come in as much as everything else. It did move up to 56 at one point today. Do you have any strong feelings on the Russell here? Do you see today's rebound as an opportunity to maybe lay in a short iron condor given the relatively higher vol compared to the rest of the equity indexes?
Yeah, I mean, I think that's always a possibility, and I'm pretty sure you can get a wide one on probably at this point. Considering how much skew there is to the downside right now. I think that's still in place. Even with this rally today, there's still some decent skew. As far as direction, I mean, I don't feel any different about the Russell directionally than I do about the Nasdaq or the S&P. I mean, they're all kind of the same trade right now, right? They're all moving for the same reasons, and interest rates aren't even. Typically, I bring up interest rates because typically with Russell, right, they're a little more sensitive to interest rates. Not to say that they're not, but right now that's not the thing. It's been a thing, but it's more related to oil, right? Obviously, the regional situation, and so this is why they're all moving. So I don't feel any more strongly, but volatility-wise, yeah, it's clearly higher, and I think this makes for an interesting trade.
45 in, 21 out. Let's go mechanical here, typical tasty way. Russell.
Been there.
RTY M6, 2,800, 2,750, the short call spread side, 2,200, 2,250. We're currently at 2,500, Jamal, getting down to 2,200 in this market. We're talking about greater than a 10% move. That's a wipeout happening. So let's just say we're not going to wipe out. Why panic? Why panic if the market's going to potentially spring higher? Meandering, grinding, sideways. Are we getting to 2,800 anytime soon? I don't think so. So what does that short iron condor look like for the typical 45 and 21 out? 60% probability of profit, risking 3 to make 1. Standard. Those are the ones where it's like, that's just, you got to do it, as far as I'm concerned. So starting to tinker, starting to adjust the equity exposure, using the rebound today for the stuff that was directionally neutral, getting more duration on the board, maybe reloading some shorter duration, short delta exposure, in my view. Jamal, I know you and I have been approaching this market a little bit differently, but today is a good day to use an opportunity to reset and reload, in my view. I don't think we are out of the woods, given the people who are speaking.
Yeah, no doubt, man. And that upside. I mean, we haven't seen 2,700. That upside comports with the upsides of almost 7,000 in ES, right? And like 25 half in the Nasdaq. I mean, those are pretty far upside. You don't even have to worry about those.
No, and like right now, you could sell at 2,700, 2,725 and go for a 4-to-1. I mean, it's at a 75% probability of profit. So the volatility here, like, take advantage of it. I know that the headlines are a little bit confusing. They generate fear. But on the other hand, this is opportunity as long as we keep our cool. And so over the past few weeks, doing these short vol, directionally neutral, they're starting to pay off as theta decay wears on. 65.31 here, Jamal. We're off the highs in stocks. We can go over to bonds here. And just like yesterday, we were looking at a potential double bottom coming together. It's looking a little bit better here today. We had that big sell-off on the 20th of March. And today we finally punched through into the highest level since then, breaking that high that we had last Wednesday, Jamal. I would point to that January low. I'd point to what we're seeing here on the 4-hour chart, where it really does look like we're starting to get a bit of a more significant swing through these key levels down here. So not great news, given why we would think bonds would be going up in an environment with gold and the dollar and the yen starting to prevail and lead the way. Nevertheless, it is an interesting technical setup. So if I were a betting man right now, Jamal, would I be betting on the fact that bonds are bottoming because oil is done going up and the war is about to end? Or am I betting on bonds going up because the recession's coming? Or who cares? It doesn't matter. Neither of those count.
No, they definitely both count, and they're both something to be worried about in this environment, or should be paying attention to. Obviously, the first one is not one to be worried about, but we have been worried about oil going up, and obviously that's led to the move in bonds more recently. I mean, I guess the real question is, how much does this change the picture going forward with the Fed, right? Particularly the 10-year. How much does this change the picture going forward? Obviously, we know if there is the release of these higher levels of oil, then we're going to see a big change in 10-year bonds. But, volatility overall is going to calm down too. I mean, that's been one of the stickier things. We've seen the move index at some higher levels that we haven't seen in a while. So you've been able to take advantage of some volatility. It's been breathing quite a bit in the bond land. Maybe not breathing is the word in 10-year, but definitely in ZB. I mean, you've seen that IVR in the 50s, and then it's come back down to 20. So it's definitely been breathing a lot. But I don't know, man. This is another one where, again, it's not as high as I would think if we're actually getting to a point where the war is over. And so as a result, I just don't know how much I can believe in everything that we're hearing today. I think it's a great rally. It's a great opportunity to be able to make some moves in your portfolio, but I just don't know if I think bonds are on the way up yet, and if I could buy into the idea of bonds being higher now.
You'd see that we're trying to turn the corner. ZB through those January lows, but we're not through the 1-month moving average. ZN, where did we run into today, Jamal? I have those January lows marked off on the charts here into January, February. Horizontal matters more than diagonal because it's not subjective, as Ilya likes to point out, which to his credit is absolutely correct. So you get through 1 and 11.5 here in notes, you have a potential durable bottom to work with. We were talking about this yesterday, Jamal. So what does that look like? 109.5, 109. You could go maybe 109, 110 on a short put spread down here doing this fairly typical tasty way. Again, 57.1 IVR. We want to take advantage of the vol while it's here. And by the way, the vol is disappearing because we had IVRs much higher yesterday, Jamal. What am I seeing here on my screen? 85. And now it's back down to 57. So notes over bonds, typically, because it's a more approachable product for retail traders, half the overnight buying requirement, half the tick value, it moves less quickly than ZB. But moreover, you're getting the volatility component here where it is just more appealing on that basis alone. So the train may be leaving the station. We tried to make the move through 1 and 11.5 today. We haven't been able to do so just yet. I want a little bit more, but you could see why if we get down here, we can try to size up a favorable risk to reward at a decent probability of profit to trade out of a double bottom before we start reaching for, far out of the money calls.
Yeah, I am so done with that trade. I am not doing that again. It just has not worked that often.
Not soon.
Right? Yeah, I that one I don't want to do. I think it's just better to play the vol.
Yes, I think it's better to play the vol as well. And so until then, what is there to do but try to play the vol?
Yeah, it's appealing, and they're fairly cheap, right? From the standpoint of whether it's volatility or not. Like bond calls are fairly cheap, and we've had movement. There's no question. It's just been the follow through, at least to the upside, has been the hard part. We haven't seen that. We haven't been able to do that since February, and the picture was a whole lot different in February than it is now.
It was a little different. I think that's fair.
Just a bit.
I think that's fair to say. Yeah, just a little bit. Okay. Metals are pushing higher today as well. And you know what, Jamal, before we quickly get off bonds, I saw a question coming earlier. One of the next major auctions to watch for. 3s, 10s, and 30s. Those are due out next week, Tuesday, Wednesday, Thursday. We go over to metals, and we have our gold and silver rallying up here today. Gold's up nearly 3% now and seemingly turning a corner of sorts. Be still, my tender heart. When you look at that, 46.50, where we had the lows carved out on a closing basis for the 4-hour time frame. It's not a daily, but the 4-hour time frame, you could see how we never. This was during the flush at the start of February. And then it was a bounce area here on March 19th. And then it was resistance here, both on the 24th and then again yesterday on the 30th. Something about 46.50 in the GCM6 contract is a line in the sand for whatever rhyme or reason. But we're through the line in the sand right now. Jamal, are you ready? Are we going to do this?
I'm going to choose my words carefully here because I don't want to get you too excited, okay? Because, I know how close you are with gold. But, I actually bought into the sell-off on the 20th, which, again, was the day before. There was even more of a sell-off on that following Monday on the 23rd. But I got long then, and I got long GLD call spread, pretty wide one too, 425, 450. And I just extended that duration today to May 1st. So, yeah. Yes, Chris, I am ready. I am long gold here. I think it's an interesting counterplay. Forget even the stories right now. It's just taken quite a bit of a beating. And I think at some point it has the ability to bounce back. And it looks like it's trying to hurdle a specific area, at least in GLD. I'm assuming GC is probably a similar type of pattern. So, yeah, I am very interested to see if this thing is going to cross 4,700 meaningfully and eventually 4,800 and onward. But I'm giving it some time.
Jamal, I saw something interesting today. That if we were to take a look at the 25 delta calls and puts right now in gold, plus this expiration, the skew in terms of how cheap calls are relative to puts is in the 5th percentile over the past 20 years. 5th percentile. Calls being cheap relative to puts.
Yeah, I can believe it. There really hasn't been much interest in gold more recently. I don't think people have been able to figure out the moves. It was really confusing a couple of weeks ago, right? And so as a result,
I'm having the research team produce this study for what the forward returns are for like the 1 month, 3 months, 6 months out after you get to a 5th percentile or lower in skew here for calls relative to puts. Because Jamal, if that's the case, and we get one of those like, oh yeah, like 3 months later, the market's higher like 15%, 80% of the time. It's like, yeah, okay, I've seen enough. Let me just go out into August. Let me just buy some, out of the money calls and trust that the winds of history will carry us through mean reversion territory back to profit land.
Yeah, no, I think it's something to take a look at because again, anytime I've noticed when flat skew happens, we can go back to October when I was talking about this. There's the other times more recently too. Anytime there's a change in the skew of gold, something is going to happen. And it's just a matter of what direction, but something is going to happen.
Something is going to happen. So gold's turning the corner here. I still have legacy longs on that still have quite a bit of time to go. That 5,100 call spread that I put on at the end of last year looked real smart for a good while, Jamal. And if I'm lucky, I'll be able to take it off for no loss now. Silver here is up 6.5% today. Silver potentially 74, 75 here has been a band. So maybe silver's turning the corner to the upper half of its post-February trading range, right? When we had that breakdown, keeping an eye on the market, you get through 77.5, 75.5. You could see where we've had some pivots down here in recent weeks, recent months.
Yeah, bro.
There's a lot of wood to chop right now.
Sorry to cut you up, but it is definitely noticeable. Downside is definitely a lot higher. Just looking at 15 days out, downside is higher than upside. $300 wide in either direction. If you go in either direction, you'll see it.
Gold. What would you say? 15 days out?
Mm-hmm.
$300 wide, 43.75, 49.75. Yeah, you see it right there. So Jamal, it's something to consider, right? The market is clearly in a state of gold market's been in a state of extreme, state of panic, at least among traders. You don't kick out to those kind of extremes unless something significant is happening. But then again, gold has been through a historic month. This is going to be the worst month for gold since 2008, when all is said and done. Copper here turning a corner as well, potentially. We were watching this yesterday, Jamal. Can we get back through 5.6, 5.65? Can we break the downtrend from the January, from those February and March swing highs? If you start looking at 5.65 over here, this feels like a bottom. It's very growth sensitive though, so I'm not sure how much we buy it given everything that's still going on, but copper perking up would probably be one of the more reliable indicators that we have, that maybe we should actually be buying the optimism that equities are trying to sell.
Well, the only thing about that, though, it is interesting. I think, when we have these times of, just these times of just a lot of things happening that create these massive dislocations. We had the period where a lot of those metals were obviously moving to the upside. Copper was following along with it. Despite what happened, I think it was August last year with that was a whole nother type of dislocation in the market. But metals moving all up together. I feel like after what has just happened, I don't necessarily know if they're all going to move up together. And you just mentioned the idea of growth sensitive. If we're coming to a point where we're going to have these issues with the different global economies, that is something I think that could hinder a copper's move here, right? Like if I'm going to play, I'm going to play gold, I'm going to play silver. And maybe they struggle a little bit at result too, but you're right. I mean, copper is the one that would really struggle if we have growth issues in the global economy. So this is one that would be a little bit harder. You can always still play vol, right, as a result of it. And this is one I think a lot of times we've done spreads at them, but I'm a little more worried about this bouncing than I am with gold and silver.
Where are we heading through this? Aragachi is now saying that what's happening now is not negotiations, but an exchange of messages directly or through our friends in the region. There's no truth to negotiations with respect to a specific entity in Iran. Messages arrive via the foreign ministry and their communications between security agencies. I don't know if you say we're not negotiating, but we're just exchanging messages about the war. That sounds like compliance. Scrub that language before you put that out there. Like, what's the difference?
I don't know, but that said, this is still an hour-and-a-half rally that is held intraday. I don't know how many times we've had that. Again, a lot of these rallies have happened like in an overnight, and then a regular session comes, and then we fade. We haven't had many. And most of the times, if we've had a rally intraday, it was immediately faded within like 20, 30 minutes. It's an hour and a half now we've held on to this. I don't know how much of this is end of the month, and end of the quarter flows, but holding on to it.
How much do you make of those moves today across the market? There's part of me that looks at what's happening in the S&P 500 and saying, okay, quarter's down, people have been short, folks are covering, rebalancing their books, bonds got killed, gold had a pretty bad past month and a half.
Mm-hmm.
Right? Why wouldn't today be people who have been pressing short gold, short stocks, taking off those positions, lifting and rebalancing at the end of the quarter?
I mean, I think there's definitely some of that happening for sure. It certainly doesn't hurt when you get the headline that we got. And, You see, obviously, the big change in what we were recently calling the VIX of the market, which is the oil more recently, and obviously causing a lift in just about everything. I mean, I think that certainly helps the situation, but there's definitely some rebalancing going on today massively. I mean, it's not like every single thing is up. There's consumer defensive names that are struggling. Obviously, the oil names are struggling, but and the utilities are struggling today. So this is definitely a risk on. The classic risk on that we've seen, where
for sure
a lot of it is tech, right? I mean, tech motivated than anything. I don't know.
If you wanted to paint the tape today with the best outcome, like you have to choose 5 sector ETFs that are going to be red on the day, Jamal, you'd pick all the energy ones, and then you'd throw in something like consumer staples or utilities. And sure enough, 5 ETFs that are red are XOP, XLE, IYE, XLU, XLP. And then OIH is the 6th worst performing sector ETF, and it's up 0.4%.
Yeah.
So in terms of the movement, you're getting what you want to see beneath the surface here. In many regards, GDX, GDXJ are the ones that are just absolutely killing it. GDXJ is up nearly 7% right now, Jamal. But all eyes are on energy here. So I'm not touching. I still haven't turned the corner in gold and silver. I've just avoided making more mistakes recently. And you know what? Again, sometimes the best thing you can do is not keep digging when you're in a hole. First few weeks of March were a little bit rough for me, thanks to gold and silver. Stop chasing, just kind of let things, let sleeping dogs lie and focus on what was happening in oil and equities. And I've been digging out of the hole. So I'm not going to press a market where I feel like there's no edge or I don't have the confidence. Maybe that's a little bit of just having a, bias because of recent trades. But oil here is the only thing we're paying attention to today that really matters in this market. You could see the headline that we got earlier about Iran willing to find some sort of wind down negotiation, Jamal, to the end of this war, and the Iranian president comment, but a drop down into 99.62. We're already back up $2 here. So make heads or tail from us because I don't see volatility having contracted meaningfully, even with that pullback today. You could see that the IVRs were like right at 70 beforehand.
Yeah.
And they're now back to 69.4. Is this a buy the dip opportunity in oil?
I don't know if I want to buy 101, but I mean, if we were to get in the 90s, I think it would definitely be a buy the dip opportunity. I just don't know if I could do it at 101. Because from here, I mean, there's nothing of space for like $10, right? So that's the hard part. And again, if you are, it really does depend on how long you are. I mean, you can use this to offset. This is just like we talked about getting some shorts. This is obviously the other way to do it. If you wanted to get long, for me, I don't think at 101 helps. I'd rather see 90. If this were 90, first of all, I'd really believe, and I'd probably get long oil at 90 just because I feel like that's kind of been the new level. I think they were a little bit elevated above the new level, but 90 has been an area I think you could buy, knowing that you could at least make 5 points on it, let alone maybe 10. Not here.
Let's say the negotiations and what we're hearing this afternoon is nonsense, but directionally it's correct that they're now, after weeks of just trolling one another through social media, the Trump administration and the Ayatollahs, IRGC, are having substantive chats. And while they may not be agreeing as negotiations typically start out, Jamal, two sides have very different views, and you've got to find a way to meet in the middle. We're probably not going to hear many constructive headlines. But let's say we're on a path to resolution here, okay? And for me, the trades moving forward are not necessarily oil itself. It's more about the secondary and tertiary effects as the dominoes fall through the broader economy, right? Like wheat is still going to be a viable trade because the fertilizer's not moving still. So oil prices collapse, but if fertilizer's not getting into the ground for the planting season enough time, the wheat prices are going to be higher, no matter what. No matter what. So would you rather, if you're going to call a high here in oil, if you're going to say, you know what, I think we're turning the corner, I see vol coming in a little bit, would you rather try to buy puts or sell calls? And do you think, more importantly, that the news flow is indicating that some of the tail risk is being taken out of the market in terms of an oil move to the upside?
Would I rather buy puts or sell calls in oil right now?
Yeah.
Oh, geez. I suppose I'd rather sell calls, but I don't know if I want to. I mean, I'd want to do them with some protection, a little further upside protection. But I think I'd want to sell calls. I mean, just based on skew alone, the skew to the upside has been pretty crazy, and it's I think that's the best way to take advantage of it right now. I just feel like here, though, it's really sticky right here. That's the interesting part about it. And I think I'm not the only one. I think just looking at the way it's trading today, nobody's really sure how they want to trade oil at this level, right? It's one of those more interesting things that, 104, 105, people have been nervous. 101 is just not down enough for anybody to be interested. And I think it's just that stickiness makes it hard to decide what you want to do. But to answer your question, it'd probably be selling call spread because the skew alone. I mean, look at this. Yeah, where you are now.
Yeah, I think that's how I'm feeling about this too. I mean, look, the supply is offline for the next several weeks, and we have to think about the contract cycles here. If there is a legitimate off ramp, what are the odds that we're going to see the oil start to resume its flow and the supply side pressures fully removed from the market? They did mine the Strait of Hormuz as well, so there is still only one open passageway. And getting the tanker flow moving to the degree that we can start reasonably pricing in a decline in oil prices, because we're getting back to somewhere closer to the 20 million barrels a day of energy that normally are going through the Strait, it's probably not going to be in the next 16 days. Just on the pure basis alone, that flow itself takes about a month for the pipes to repressurize. So CLM6 probably then would be the vehicle with which you'd want to do this in, more so than CLK6 is probably going to stay up here, but if there's going to be a more meaningful pullback in oil, I think it'd be probably in the CLM6 or the CLN6 expiries. At 44, we could go out to 118, 120 to an express view like this. I'm still not loving the risk to reward. You may want to go 116, 118 or 115, 116 or something like that to get a better 4-to-1, what have you. 115, 114 would be close to a 4-to-1. It's not the highest convexity trade right now, Jamal, but I think it's the safer of the two, because we do have the supply that has come offline, and that, in theory, if demand has gone nowhere, should just raise the floor of oil prices. And who's to say the war ends and all of a sudden oil goes to 85 and gets stuck there because of the disruptions? You were right directionally, but you had the wrong strikes. But if you were selling the vol component of this and saying the upside was capped, you would have walked away a winner. I just think trade construction and the way that we define our risk in this market, if we're trading around oil, it matters more than our opinion about oil itself, because that's a coin flip. I think we're getting lucky more than anything else.
By the way, are you surprised that the Wednesday crude oil number hasn't been more meaningful recently?
Yeah. I think this week, now that we've started to go through a few weeks of disruption, what we see between API, which is due out later today at 4:30 Eastern, and then the EIA, we get midweek, Jamal. I mean, you would think that these big energy inventory drawdowns would be raising flags. Of course, it's somewhat expected because we know that the government is promoting drawdowns of inventories and reserves to help offset the impact of the war. But on the other hand, if it's like, oh, wow, the American economy is, maybe it's not slowing down. The drawdowns are much more than we anticipated. There's no sign of demand destruction. American consumers and businesses are swallowing the higher gas prices and trudging forward, right? I mean, we do want to learn about this kind of stuff. Diesel prices are through the roof right now. Diesel's the primary feed through into manufacturing, agriculture, yada, yada, yada. So, yeah.
As am I. I'm a little surprised that they haven't been, the headlines of those haven't done more with the price of oil. It's kind of weird.
Jamal, we have natural gas here, which is meandering around. If you're in the Northeast today, you can probably look outside your window or open the window and say, oh, yeah, that's why natural gas isn't doing much. It's 80 degrees here right now, Jamal. I have no idea why I'm wearing a sweater. Oh, yeah. It's beautiful. It's beautiful today.
It's like that yesterday here. Wasn't
2.8. What do you think about 2.8 in natural gas? It's only a 38.9 IVR. I almost want to just skip past this because a 38.9 IVR in this environment, that's nothing. You usually look to natural gas for the relatively high volatility compared to everything else. And it's kind of in line or lower. Do you just ignore natural gas and the honey badger that it is?
I've definitely generally ignored it more recently. It is definitely not something that I've watched when we got all of these other things that have been, obviously connected to the war in Iran. I mean, this really hasn't even been on the radar. I've seen the moves. Saw yesterday's move. Thought it was huge. But yeah, I have the capital I have is to trade some other more interesting things right now, not natural gas.
I hear you. And speaking of more interesting, it is what it is. Risk on and FX. The dollar had been a canary in the coal mine for the past few weeks. Even on those risk on days, Jamal, you weren't seeing FX, the world's deepest, most liquid market, turning the corner with everything else. The dollar itself would continue to move to the upside. So when we have this move higher in equities today, when we have this move higher in gold today, higher in bonds, lower in oil, my first instinct is the dollar confirming it? Because if the dollar's not confirming it, then everything else is simply just getting jerked around.
Mm-hmm.
The dollar might be confirming it today, though, which is one of the more interesting aspects of this potential bottom here. The high yesterday was 161. We pushed through that with a high of 164 today. The low yesterday came in at 100.05. Today we're in at a low of 99.87. So that would be a bearish engulfing bar, a key reversal at the high, comporting with that bullish key reversal that we're seeing here in the S&P 500 at the low. So if this has all been one trade, Jamal, right? Oil up, dollar up, stocks down, bonds down. There are pieces of evidence. Maybe it began last Friday when bonds and gold started rallying themselves. But there are some pieces of evidence now that these relationships are breaking down at the end of the quarter. And in turn, we're seeing new opportunities arise. So do you have any opinion on the currencies here? I'm still sitting short deltas in the British pound right now. It's been working out mostly for the past few days. Obviously, today's not doing so great, but do you see this as a buy the dip opportunity in the dollar, or is this a signal confirming that we've started to turn a corner in everything else as well?
Yeah, I mean, looking at that DXY and you're seeing it right at par, which is just below today, I feel like that's been an inflection point. I have largely expressed opinions, whether they long or short dollar in the TastyFX account. And it's been great because the dollar has moved around so much in the last couple of weeks, which, we haven't seen and going back a few months. So yeah, I mean, I've been doing that actually. I mean, I've been day trading a lot of the TastyFX sort of pairs, Chris, and it's been fun. Dare I say, I know this probably sounds blasphemous to you being an FX guy, but it's been really fun.
It's been fun.
It has, yeah. Whether it was Aussie, whether it's the New Zealand dollar. And again, those have obviously been some that have moved the most. And so I've just really been sort of flip-flopping a lot of them. And right now I'm staying short because I wanted to see if the dollar was actually, like you said, this has been all one big trade. The dollar has been making strong moves. I wanted to see if it was eventually going to make a move higher above par and eventually stay there. And I guess we'll just see what happens here. But for now, I'm going to stay short, especially in light of today's news. This is one of those where I'm willing to see what happens.
Willing to see what happens. I just feel like this, FX is the only thing that makes me doubt that this is a bull trap. Dollar is the hardest thing to turn the ship around. 65.43 here in the S&P 500. We haven't really moved all that much, I guess now 5 or 6 points higher from the last time we checked the stock market, but it's a very, very, very strong day here for stocks. On decent volume, 1.63 million contracts traded, Jamal.
Yeah.
What's next on the calendar for tomorrow? It is April 1st, first day of the new month, first day of the new quarter, Jamal. New quarter, by the way, where if you are one of those people who likes to look at seasonality, year 2 of a president's term, it hasn't been great. In fact, since 1950 for the S&P 500, the S&P 500's lost 2.8% in quarter 2 of year 2 of a president's term. But hey, if we can just survive this, turn the corner, we get into the, buy through July window. Hey, buy through July is fun. Data tomorrow, ISM manufacturing retail sales. We'll get a real look into the consumer. And more importantly, let's see if this oil rise changed any spending habits, because thus far in the data that I've seen, Jamal, it has not. Consumers, nothing takes consumers down. Nothing.
Hasn't changed
apparently.
mine. I've just spent more.
Yeah, exactly. Yeah, the only difference is I'm now spending like $50 at the gas station instead of 40. Although that still sucks. All right, we're out of here. Jamal, we'll be back later today. Tasty Live programming continues next, overtime at 4 Eastern, 3 Central. But before then, you're going to take a quick break. You're going to come back. You're going to see Dr. Jim Schultz with From Theory to Practice. Good luck trading.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When we get together, everything is better. When we are side by side, hey, side by side, side by side, side by side, hey, side by side, side by side. When we are side by side.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Tuesday edition of what it is that we are trying to do here today. Welcome to the I'm Not Gonna Ghost Y'all edition of what it is that we are trying to do. So I just straight ghosted you guys yesterday. I was gone. There was no mention of it beforehand. I didn't foreshadow it for like weeks to come or whatever. I was just gone. Well, that was because we had a network meeting yesterday during the slot of my show. Whenever we have these network meetings during the day, like somebody has to be the unlucky winner or loser. And yesterday that was me. So that's why I was gone. And that's why you guys got to enjoy the skinny on options abstract applications for the second time yesterday. And so I hope that you guys got a little bit away, or you guys were able to take a little bit away from that show. But man, we are back. We are 100% back. And this is amazing because we have now won the U.S.-Iran war for the 14th time. And the market is loving it. So if you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Guys, if you are a bull, you can celebrate with your fellow bulls. If you are a bear, you can still celebrate with your fellow bears because the last 3 weeks, you indeed have been the winner. But don't forget, drop a question for me in the chat box, and I will try to get to as many as I can right around the second half of the show or thereabouts. So Josh, bring us in. Ooh, baby, bring us into this market. Take a look at this. Guys, EME S&Ps up 156. Got the risk-free instrument, also known as the Nasdaq futures, which is an extremely high-risk product, but not on a day like today. Nasdaq up 682. You got the boomers up 970, and the Russell 2000 futures index up 71 on the day. Man, you got bonds up 11 ticks. You got notes up 7 ticks. Got oil down $1.50. Got UB40 up 7. Got the shifty celebrating. Gold up 136. Where my Hunt Brothers at? Man, Hunt Brothers enjoying some cheese and pepperoni. Where are we at? SIL up $4.60 up to over 75. The British pound is up. The euro is up. Man, volatility getting smashed to pieces today. Volatility futures down $2.60. And then spot volatility, the old VIX down $4.25 down to 26 or just over 26. And it's an amazing thing. It's an incredible thing. And we won the war. It's over. And of course, we won by pretty much completely surrendering. And so the market absolutely loves it. And so, man, we have been in desperate need of a day like today, have we not? Like, man, we have all, I mean, even if you were a bear, I think you'd were calling for a day like today. Like, even Tim Knight, I think, has been saying, like, man, we need a day like today. Like, I need something. It's almost been too good. It's almost been too easy. Like, I need a little something to kind of challenge me a little bit. Well, here you go. EME S&P is up 151. And so, as you see in the portfolio, man, look at that. That's a lot of green on the screen. I'll tell you what. That's a little something for sure. Now, we've had plenty of red the last couple of weeks, and so we're not necessarily moving forward. We're not necessarily making any progress towards our objectives, but we are starting to kind of plug some leaks, I would say. We are starting to kind of, get a little bit back that we flushed down the drain the last couple of weeks. And so we'll go through the things that need to be gone through here in the next few minutes. But I see you guys in the chat. And, oh, by the way, did you guys check out the interview that I did yesterday with Brent Kachuba over at Spot Gamma? Like, that was amazing. It's on the YouTube channel if you haven't seen it yet. It was last night's edition of Calculated Risk. And so, man, that was amazing because I want to learn more about GEX myself. I want to learn more about DEX myself. Like, I want to become a Gamma Flip aficionado myself. And so Brent is the guy to talk to about all that. And so I feel like he gave us a great kind of overview of understanding those levels, why they matter. The JP Morgan collar today, and I mean, he called it, man. Like, go back and watch the interview. Not only because your boy needs that watch time, but you might also learn a couple of things. He actually said, man, if we get a little bit of momentum coming into today because of the way the JP Morgan collar sets up, because of the way the hedging dynamics of the dealers kind of set up, we could get, a real, a high-flying market where we kind of overshoot to the upside. I mean, I don't know what you call EME S&P's up 156. But that looks like an overshot to the upside. I mean, even for the VIX at 30, VIX at 29, whatever, that's a pretty sizable move. And I got to hand it to Brent, man. And so the GEX guy, the DEX guy. So now if you guys are asking about GEX, I can tell you I got a guy. Now if you guys are like, hey, Dr. Jim, I need to learn about DEX, I got a guy, man. I got my boy Brent over at Spot Gamma. Just a really cool dude, really sharp guy. And it was really awesome to get to connect with him. So watch that over on the YouTube channel if you haven't done that already. That would be really, really, really awesome. And so, all right, let's go ahead, though. Let's go through a couple of things going on in the portfolio. And I see you guys, by the way. Look at Ordenu's in the house. Man, look at Phantom Wealth in the house. And I see Don is in the house. Sunny Blade is here. Man, Alaska Synthetics is here. Ron Vashar is here. Ramsey's here. Jared Kramer is here. Rodrigo is here. Volatility Farmer is here. That's what we need to be doing, man. Farming some volatility. Right? I mean, if we can farm GMOs, we can farm some volatility. Like if I can farm some man-made soybeans, like I can farm a little IVR here and there. And so Volatility Farmer, what's going on there, my friend? All right, let's go ahead, though. So looking at what's going on in the portfolio, you can see that, I mean, everything is working today. So this is essentially the polar opposite of essentially any day you could choose at random over the course of the last 2 weeks. And so that is obviously good. That is very much welcomed at this point. And so MCL, this is our inverted triangle that with oil down today, that's obviously good for us. We've got a little bit further that it could fall. That would be really good for us. But I'll tell you what's crazy about this. So you've got oil at 93. We've got a 62.5 and an 87.5 strike. The Dow's now over 1,000 on the day. What's crazy about this strategy is we've been getting absolutely pummeled on this guy. Even punished, I believe, is the word we've been using the last couple of days. There's no doubt, like we've been getting completely hammered on this guy basically from the very beginning. But here's what's wild: with all of the adjustments that we've made and all of the different things that we've done. I mean, you can even go back and you can bring up the chains here, and you can see for yourself all the things we've done on this trade. This guy started back on. Yeah, here's the first trade, right? It's going to be December 16th. Like it's this guy right here. Here's your original, your OG strangle that we sold for $1.98 to 50.61. And it's like, man, talk about yesteryear. Like talk about good times gone by. Like, man, now we're looking at a 62.5, 87.5 inverted strangle. So this guy has taken a few different kind of permutations along the way. But when you add up all the credits that we've collected a total of $17 on the trade. Now, it's currently marking at 38, which you can find that here. You can find that here, 38, almost 39. So don't get me wrong. I mean, we're down $21 on the trade, right? Which $21 in the options world is $2,100 in the actual world. So don't get me wrong. But it is a little crazy to me, given all the things that have gone wrong with this trade, basically from the very beginning. We're barely down over 1x of total credit collected. Now, let's be fair about this. This is not like saying you're down 2x or 3x of total credit collected on entry. I mean, that would be down here. You're only losing $400 or $500 or $600 at that point. So let's be fair. This is a very different scenario than that. But still, I mean, when oil was running over 100 and MCL was, printing triple digits, like we were in a way, way, way worse scenario. It's not amazing now, but man, it was awful not too long ago. So right now, I'm like, man, we have finally gotten ourselves in a situation where we can actually do nothing. I mean, I don't love it. I'm not looking forward to it each day, but I'm like, all right, now we have the opportunity to kind of lean into that default setting. Let's do nothing, and let's see if oil doesn't calm down just a wee little bit over the course of the next couple of days, couple of weeks, what have you. And maybe we can, start trimming some losses and really pare this guy down to something even more manageable. I mean, honestly, at this point, given everything that's happened in this oil trade, if we take this thing down to, being only down $12 or $13, that would be a win in my book. Now, obviously, that's a loss in everyone else's book, but in my own personal book, I'm going to put that down as a W. Right? I'm going to put that down as a W, and it helps win percentage and the batting average increases because given everything we've been through, I'm going to go ahead and call that a W. So there's MCL. There's a few thoughts around that, but man, MES. MNQ, Nasdaq up 715 now. S&P's up 163 on the day. And so now we've got our strangle on an MES that we did recenter that guy a little bit. We did that last week, right at the end of last week. And so now, it's going to be oh my gosh, it's going to be so funny. So I just want to make sure I'm on record as having said this. This is going to be downright hilarious. And by downright hilarious, I mean it's going to be so incredibly frustrating. If we get tested on this call side, I'm shutting it down, man. If we get tested on the call side, that's it. It's over. Like it's done. Like from theory to practice is gone. It will be no more because that is actually the thing that frustrates me so much. It frustrates me more than MCL. It frustrates me more than inverted strangles. When you get hit by significant whipsaw risk, oh my gosh, that frustrates me so much because again, I look at the scenario and I'm like, man, had we just done nothing, had we just done our go-to strategy, our number one strategy, I mean, we've got the bumper stickers, we've got the t-shirts printed, we've got the coffee mugs on order. There's a reason why this is the number one. Now, we're not at that point yet, right? But again, we've now won the war for the 22nd time in just the last 10 days. And so I have a feeling maybe there could be some more upside. Right, maybe we're going to go ahead and march a little bit higher. Man, if we get tested on this call strike, you guys won't even have to tune in that day. If you see EME S&Ps print 6,800, you know the show is over. It's done. Now, maybe we'll keep doing calculated risk. Maybe we'll show up for some interviews here and there. But from theory to practice every day, it's done. It's over. I won't be able to do it anymore. But for right now, we can sit tight and we'll have to wait and see. But all kidding aside, the whipsaw risk is largely what has informed the do nothing strategy for me personally, and why I am a bit more patient with my adjustments, why I am a bit more methodical with how I manage my positions than some of my own brethren might be on the network. Which again, I don't view that as a bad thing. For you guys, I view that as a very good thing because it gives you guys different viewpoints and it gives you guys different perspectives. Like we're not all just cookie cutters. We're not all just robots. At least not yet, probably another 6, maybe 9 months, and then that will be the case. But for now, we have different feelings. We have different, kind of gimmies and gotchas, different pros and cons, and ways that we look at the market. And so for you guys, trying to blaze your own trail, you're trying to kind of make a style that fits, your own personal temperament and your risk tolerance and your account size and your experience level, whatever. I mean, there's so many factors. You've got to, take a little bit from here, take a little bit from there. Like take a little Dr. Jim and then take a little Nick Batista. Right? Take a little Liz, take a little Jenny, and then take a little Chris Vecchio. Right? Kind of make these things and blend them together. And then, then there you go. And so for MES, we're going to do nothing. And those are the 9 reasons why. So MNQ, I'm never going to be able to get through everything. It messes me up so badly when I miss a day. So when I miss a day that's kind of planned, I get messed up. It throws off the whole rhythm of what I'm trying to do. But when I miss a day that's unplanned, because I saw the network meeting on the calendar, but it didn't really register that I would have to be off that day for the show. So the fact that yesterday was kind of an unexpected off day, like a sick day or whatever, man, it really kind of discombobulates me. And so my apologies that we're a bit extra discombobulated here for a Tuesday edition of the show. This is kind of what you would expect on a Friday edition of the show, but here we are. It is a Tuesday. And so for MNQ, the 24,000 put, I'm not going to be able to get through all these trades. We'll have to do the rest of them tomorrow. But, oh, by the way, look at Snapchat. Look at Snapchat. Josh brought Snapchat to us. Snapchat up 57 cents today. Man, look at this stock. I mean, it's as crappy as it's ever been. But look at this thing. Like, this thing is unbelievable at 57 cents today. So that is a good thing. Snapchat just carrying the whole portfolio. It is the core position, SNAP. And so there you go. But I was going to say McDonald's. But Nasdaq, MNQ, we are short a 24,000 put. So with the Nasdaq up 700 today, that's obviously helpful. That's obviously, kind of moving in the direction that we would like it to move in. So now I don't want to do anything for this strategy. I'm like, hey, we've got the bullish delta. Again, I've talked about this so many times on the show. I'm not going to belabor this point too long, but allow me to wax poetic for 2.5 minutes. By 2.5, I mean 11.5, maybe 14. When you have a short put, you've got positive theta. That's an advantage. You've got positive delta. That's an advantage. You've got high probability. That's an advantage. You've got room to be wrong. You've got the buffer that's built in. Advantage. Lots of advantages. The biggest one, in my opinion, if it goes in the money, you don't have to do anything. If it goes in the money, if you want to play, fill in the blank, the market, the individual stock, the asset, whatever, if you want to play that thing to the upside, and especially when you're dealing with equity markets that have the positive drift baked in, man, that's a huge advantage that you have just right there at your disposal. And so tap into that guy, lean into that guy, and don't necessarily feel like you need to adjust the position at all if you don't want to. Now, again, if you want to control and neutralize directional bias, by all means do it. If you want to add a call, we did that with MES, and of course, it's going to be the thing that ultimately takes us down, but you can do that. Like you've got premium coming in on both sides. There's a very strong strategic case to be made for going down that pathway forward through the forest. But I just want to make sure that we are all aware there's another pathway through the forest. There's a whole nother pathway that is equally as illuminated as the first pathway, where you don't do a single thing. You're just like, man, I'm just going to hold the in the money short put. It's basically long stock at this point. I'm just going to hold this guy. I'm going to play it to the upside, and I'm going to put all of my faith, all of my trust in the Trump administration. What could possibly go wrong? Right? What could possibly backfire? Can you think of anything? I certainly can't. At least not until about 2 o'clock today, when something comes up that's like, yeah, that's probably not a good idea. But MNQ, we're gonna sit tight, and we're gonna do nothing. And there you go. So look at Dell. Look at Dell. Man, I looked at Snapchat today. So I looked at Snapchat getting ready for the show, and I was like, and Josh brought it to my attention. I was like, that's some good stuff, man. Like, I don't know that we're going to be able to have a better show. Like, I'm not sure that we can make a better show than one where Snapchat is up 10%. But au contraire, mon frere, look at Dell. So look at this. Again, if you're still doing NFTs out there, if you're looking to print something off for Etsy, here you go. Here's another one. The whole portfolio, this is literally the perfect day. The only two things that we need down today are oil and Dell. And look at what is down today. Oil and Dell. Everything else is up. We need everything else up. Everything else is green. We need everything else green. Now SLV, you got there's a little ink spot there that's kind of messing everything up, but that's nothing. That's neither here nor there. Snapchat is more than making up for that. Man, oil down, Dell getting hammered. That's amazing. So with our strangle here in Dell, you've got Dell now down to 159, which is really, really nice. And so we've got a 130, 150 strangle. So, man, we have worked our tails off to get to this point. I mean, I think I've clicked the mouse at least 5, maybe 6 times in all of the adjustments that we've made on this strategy. So now we're going to sit tight. Like, now we're not going to do anything with Dell, and let's just see if we can't get, 2, 4, maybe 7 more days like today. And then we'll really be cooking with some avocado oil. And so Dell down today, that's obviously very, very good. And then the other thing I want to talk about, let's talk about GDX, and then we'll get caught up with the rest tomorrow, because I want to get to you guys. I see you guys in the chat, man. Look at you guys. You guys are doing some work in that chat. Man, I appreciate you guys so much. Don't forget, you guys have one job to do. Kind of like the other day when I had one job to do, bring in the groceries. Do you guys remember that? I had to bring in the groceries. I'm pretty sure it was on Friday. Totally failed. Autumn's calling me. She's texting me on the show. I'm obviously dismissing her calls. I'm not reading her text messages. And then the second text message, I looked at it and I'm like, oh my goodness. The ice cream is melting on the front porch. Now, we didn't have any melting ice cream, but we did have popsicles. Some of them didn't make it. So if you happen to have a banana natty on hand right now, which given the last couple of weeks, I wouldn't blame you. Pour a little bit out for these lost popsicles, because we lost like 2, maybe 3 popsicles. And so obviously it did not end well for me. And so I'm still trying to, make amends for the popsicles that we did lose on the porch the other day. But for GDX, let me think here. Man, I lost my popsicles. I totally lost my train of thought. Yeah, this really is like a Friday show. And so, but GDX, where was I? Yeah, I don't even know where I was going with that. Man, I got to get back on this blueberry train, because we have totally lost the plot. But GDX is a ratio spread. Oh, because I see you guys in the chat. I just see you guys. That's what it was. You guys made me think of the grocery thing, because I scanned. I saw somebody ask about it. That's what it was. I remember. You guys got one job to do. That's what it was. Your only job is you got to pump the algo. That's it. That's the only job. So get in the chat and do it. Not because of me. Not because of the show, not because of the network. Do it simply for the love of the algo. So hop in that guy and push it so we can get this guy going out to more people. But GDX, we have a ratio spread on 80.77 a 1x2. We sold it for $2.57. It's currently marking $1.25. It's getting pretty close to where I might want to take that guy off and just book those profits. I'm not quite there yet. I typically like to get maybe more like 65% of the credit collected, because remember, the credit that you collect on a ratio spread is not the maximum profit on the strategy. The maximum profit on the strategy is if you pin the short strike at expiration. So in that scenario, you would keep the credit that you collect, plus you would capture the full width of the vertical spread. Now, that is not a realistic outcome. Like, that's not really a feasible, destination for you to get to. But still, if we're talking about like theoretical max profits, it's not the same as selling a strangle. It's not the same as selling a put. Like, for those, the theoretical max profit is the credit that you collect on entry. It's not the same thing for a ratio spread. So that's why when I put on a ratio spread and I have some kind of credit, I'm typically looking to get more like 60, 65, maybe 70% of that credit collected, with the understanding that, with the put ratio spread, if the stock rallies, that's a great scenario for me. I don't feel a ton of, pressure. I don't feel a ton of urgency to take that guy off too quickly, because if it just sits there, then that's good for me. It's gonna slowly, I'm going to slowly see that credit kind of, dissipate and wither away on whatever I sold it for on entry. So for me right here, this 257, that's going to slowly but surely go down if GDX stays elevated. And it's obviously up a bunch today, so that's why we're doing so well. But if it just stays up here, that's fine. Like, we have a bunch of positive theta in the trade. You can see that right here. We've got about $4 of positive theta in this guy. And so, yeah, we can just sit tight and do nothing. So for now, I'm going to sit tight, and let's see, maybe sometime later this week. I mean, we obviously have a shortened week because Friday is Good Friday, so there'll be no programming on Good Friday, which is crazy because we have a jobs number. I'm pretty sure we have a jobs number on Friday morning. And so not only do we have a jobs number when the market's not even open, so the futures will be open, but the liquidity probably won't be that great. So we have a jobs number when the market's not even open. Thank you, Josh. Yes, we do. Jobs number, market's not even open. Market holiday, Easter weekend, Good Friday, all the amazing things, right? Jobs number dropping 8:30 a.m. Listen, guys. So we've been through some tough times together. Like these last 2-3 weeks, I mean, they've really made some men out of us. I mean, not me personally, but hopefully you. This Friday, this is not good, guys. What's coming on down the chutes? I've studied the markets for a long time, nearly 20 years now. With all the things that are happening with the administration, all the things that are happening abroad, all the things that are happening with Powell's tie colors and the different hues and the hex codes. I mean, I can't keep up. I mean, yeah, he keeps going with the same one every time, but one of these times, he's going to shock us. One of these times, he's going to surprise and delight us, and we are not going to be too delighted when he does surprise us in that context. This number on Friday morning, it's going to impact your financial future in a way that you can't possibly prepare for. And so all I can say to you now, it's only Tuesday, just enjoy. Just enjoy the next 72 hours because that may be the final 72 hours. But that's 8:30 on Friday morning. And so should we make it through, maybe we'll see you guys on Monday. But all right, let's go to you guys, though. Where are you guys at? So let me see here. Josh brought me a surprise and delight. He hand-delivered it. Amazon primed it right to my doorstep, man. So I appreciate you so much. Josh says that Phantom Wealth Options says, what's going on there, Phantom Wealth? When a CSP is hit, so I'm assuming you mean a cash secured put here. When I read an acronym like that, sometimes I think of a credit like put spread too, but I'm assuming you mean a cash secured put. Is hit, you're synthetically long. Treat it like a covered call and roll above the cost basis. If you're deep in the money, when and how do you convert to synthetic long shares? So great question there, Phantom Wealth. Okay. So I'm not sure what you mean by converting to synthetic long shares because you already have synthetic long shares. So, I mean, if you mean converting to shares, I mean, that's a different thing. And that's going to be essentially whenever the long side decides to assign you, the shares. And so if you have a deep in the money short put, understand, Phantom Wealth, it's already synthetic long shares. Now, it depends on the delta, just how close it is to truly long shares. If the delta is like 90, then it's basically like long shares. It's 90% of a 100 share position. If the delta is only 65 or 70, then you're not quite there yet, obviously, but that is the pathway that you're on. And so once a short put goes more than a couple strikes in the money, I start viewing it as, all right, this is potentially a long stock position. And if this guy keeps going in the money, I'm going to start to treat it like a long stock position. And so I would actually say, Phantom Wealth, you're already synthetically long when you have an in-the-money short put. How do you convert that to actual long shares? Well, the interesting thing is, as I understand it, I don't think you can call your broker up and say, hey, I want to be assigned on my put. That's not your choice. Like, that choice always rests on the long side of the contract. Now, if you hold that in-the-money put, if you hold the in-the-money put all the way to expiration, you will be assigned. Like literally 100% of the time. If it doesn't happen any day prior to expiration, it literally will happen at expiration. So on expiration Friday, when the market closes, you get through the after hours market, what have you. Come Monday morning, you're going to have a share position in that underlying stock. You're going to be long those shares because that short put will have been assigned to you. Now, as you get closer and closer to expiration, the extrinsic value goes away. It's just purely intrinsic value at that point. The likelihood that you get assigned prior to expiration is increasing. And so the longer that you hold it, like you will be assigned at some point, if not at the very, very, very end at expiration, at some moment prior to expiration. And so when it comes to thinking about like how to view this from a long holder's perspective and a long share perspective, I kind of view it as I have the synthetic long shares as long as I have the deep in the money short put. It's going to basically behave by long stock, or behave like long stock, I should say. You've got some extrinsic values in there. You got some delta differentials in there. And so it's not the perfect synthetic. I mean, the Venn diagram is not perfect overlap. There's a little bit of kind of bubbles around the edges there. But once you get towards expiration, at that point too, your deltas are going to be 95, 97, 92, 93. So at that point, you actually do have effectively long stock. And so, that's how I would view that there, Phantom Wealth. But hopefully that helps a little bit. And so, all right, let's see here. Where are we at though? Can I surprise and delight somebody on my own here? Let me see if I can surprise and delight somebody. You guys are making me laugh. Let me see if can I find somebody? I think I can. Let's see. Well, actually see, oh, you guys are making me laugh. Oh, man. Ron Vashar is in the house. What's going on there, Ron Vashar? Hello, Dr. Algo, for the love of Jim. My man. I see what you did there, and I like it. I like it a whole lot. Hood seems to be hanging in there. Oh, we're doing Hood again? Oh, man, I think I've actually made some money in Hood, actually, though, so I shouldn't lament it too much. But Hood seems to be hanging in there since all the volatility. It looks like a nice candidate for a strangle. With 45 days to go, do you have any thoughts? Man, I've always got some thoughts for you. I mean, you may not be able to do anything with them, but I'm going to share them nonetheless. And so Hood at 69, yeah, you've got a volatility rank of 36. Yeah, so this is the problem, right? And so you've got earnings coming up. This is it. Like we're getting into earnings season. I mean, today is March. Today's the last day of March. Tomorrow's April. And so it's like, this is the heavy hitters. This is the earnings season where, you've got all the individual stocks are set to report, usually around the kind of the back half of April and then into the first week of May or so. And so this is where, in my opinion, it's very difficult to do strategies in individual names because I even just talked about this on today's calculated risk. So this one will get posted tomorrow night. We got thrown off a little bit with that Brent Kachuba interview that kind of got dropped down on our lap there at the last minute, which was amazing. And so the one that I recorded on Friday is actually going to get posted tonight. And then the one I did today will get posted tomorrow. But I talked about this a little bit. And so just to give you all a little bit of a preview, as gold is now over 4,700. Wow. By doing short premium strategies in stocks that have earnings coming up in like 2 or 3, or in this case, like 4 weeks, you're making an already difficult endeavor that much harder, in my humble opinion. Going into earnings, it's pretty reliable that stocks are going to see a bid in their implied volatility. Like they're going to see their implied volatilities increasing as you get closer and closer to earnings. And this is because traders and investors are all buying options to try to be part of the potential explosive move that happens and materializes in the stock after the earnings number comes out. Which, I mean, anyone who's traded earnings more than once or twice or thrice knows that, yeah, these things can move pretty significantly, after the earnings numbers are out. Now, how they're going to move, I mean, that's anybody's guess. And even if you had the numbers beforehand to channel up the artist formerly known as Baum Nosnoff, I completely agree. I'm not sure you can make any money because I don't know that how the market's going to react because it really is pretty random in that regard. But either way, the buying of these options, the demand for these options is going to lift the prices and the implied volatilities on the options. And so as a result, you run into a situation where you're trying to collect theta. You want time to be working for you, but man, you've got a huge stick in the mud that is implied volatility. Like you've got just a huge obstacle in your way that is implied volatility expanding as you get closer and closer to the actual earnings day. So when I look at Hood with earnings on April 29th, I'm like, man, I don't really want to do a May cycle right now. With earnings on April 29th, I'm thinking let's just wait until Hood earnings and do something on April 29th. Like, let's just do something for hood earnings. And so a lot of times when you start getting in this time of the calendar, end of March, end of June, when you start getting like right into the early stages of earnings season, this is when kind of leaning on indexes makes a lot more sense, in my opinion. And so I'm going to pass on this right now there, Ron, but I appreciate you, my friend. I appreciate you very, very much. But let's go to the beginning. Can we go all the way back to the beginning? I think we can. I mean, it's our show, right? I mean, I think we can do that. Man, I see a couple people before I even put in my comment there. I see you guys, and I appreciate you guys. Look at Jared Kramer is here. Rodrigo is here. Man, look at you guys. Phantom Wealth is back, talking about the younger generation of Tasty Nation. Does that include me? Because I'm not sure that it does. I mean, obviously, Tom and Tony, dinosaurs, right? Josh, he's going to get into the Dinosaur Museum next year. But me, I mean, I'm be 45 in May. I don't know, man. I mean, I'm no Errol Coleman. Like, I'm no Gus. What's Gus's last name? Like Sanchez or something? I'm no Gus, whoever his last name is. But maybe I can be included. I'm pretty sure it's not Sanchez, but it could be Sanchez. It's got to be something Irish. Right? What's it good? Like O'Brien? Oh, it's got to be like O'Brien. Or like O'Maddies? Like Gus O'Maddies? What is Gus's last name? Josh, do you know? Like I would like to know now what Gus's last name is. Or if somebody knows in the chat, let me know. Downing, that's what it is. I've seen that in my email too, a million times. So I was pretty close. Sanchez, Downing, it's the same thing. And so Josh says it's far from Sanchez. Nah, they're pretty much right next to each other. And so, but I see you guys, man. What's going on there, Odenu? Hello, Dr. Jim. Welcome back. What's up there, my friend? What is the least IVX and IVR that you would consider to do a short put? Better yet, what conditions should be met for you to consider doing a short put? It's a great question. So I'll start with IVR. I mean, actually, let me back up before that. I'm going to start with liquidity. Liquidity is number one. And so by just focusing on the stocks, even the S&P's up 170. Man, look at this. It's over, baby. The Tasty, by that, I mean, it's just getting started. The Tasty Default watch list is really great because all the stocks on here have essentially been pre-screened and pre-filtered for liquidity. So if you trade something on here, like a Citigroup or even like a Baidu or, GLD, Google, Goldman Sachs, obviously, these are all the stocks we're all trading. I mean, we trade stocks outside of this list as well, but this is a really good starting place. Like if I'm looking for a place that gives me kind of a populated watch list that I can always begin my analysis, for a given day, I'm going to go Tasty Default because it's going to give me a really nice starting point when it comes to stocks for selling any short premium strategy, but a short put especially. Then number two, IVR, anything over 30 is pretty good. Even things in the 20s can work. That's going to be a little bit different now because implied volatility has been so elevated the last few weeks. And so we don't necessarily need to be, just taking whatever we can get. We can be really, really thoughtful and we can be really, really selective with what we do from an IVR standpoint. And then IV itself, because I'm trading all the same stocks all the time, I actually don't look at IV that often, even though the higher the IV, the better. I just kind of internalize, all right, if I trade, NVIDIA, if I trade AMD, if I trade Tesla, these are all going to have higher implied volatilities than if I trade Procter & Gamble, or if I trade IBM, or if I trade McDonald's. I think we talked about this just a few days ago even. And so generally speaking, it's just kind of internalized. And this is a benefit to kind of just trading the same stocks all the time, which doesn't mean you have to be handcuffed to those stocks and that's all you can trade. But you develop a little bit of market awareness, which is actually what today's calculated risk was about. Today's calculated risk that will be posted tomorrow. When you're trading the same stocks all the time, it's helpful because you just kind of get a feel and a rhythm for these stocks. And so, for me, like Tesla, the IVX of Tesla, where is that at? Probably 60 or something. If I go to Tesla, the implied volatility is 51, so I was pretty close. I know Tesla's going to be 51 and AMD is going to be 60, 70, 60, 58. I know those guys are going to be high. And then I know if I go to even Starbucks is going to be a lot lower, right? 43. It's actually not as low as I thought it would be. Starbucks is going to be lower. Procter & Gamble is going to be lower. 29. Johnson & Johnson's going to be pretty low, 29. Right? These guys are going to be pretty low. Even if you sort by IV on the actual watch list, you'll kind of see what the low guys are. The super low guys, TLT, 14%, that's brutal. Right? Disney, 32%, that's actually not that bad. Apple, 33%, that's still okay. Microsoft, 37. I mean, generally speaking, I mean, just looking at this then, I would say I probably want to see something at least at 25, if not 30 most of the time, if not even higher. And so those would give you, I'm sure I would and will violate that rule from time to time. But if you're asking me for like a reference point off the top of my head, just to give you something, that's probably what I would go with. Hopefully that helps a little bit. SC Golfer, what's going on there, my friend? I appreciate you very, very much. There's Shane, I believe it is. There. What's going on there, Shane? So, Dr. Jim, on a scale of 1 to 10, how mad was your lovely bride last week when you left the groceries outside and she had to call, text you? Yes. And so it didn't end well for me. It did not. I mean, I ran out there. And by ran, I mean, I gave you a fast walk, right? But I got out there pretty quickly, and we lost 3 popsicles. And those obviously were my popsicles that we lost. And so they ended up pretty much net scratch. And so I'm not even sure why I took any heat for that, to be honest with you. But I'm pretty sure we're still not a break even on that trade. And so iPod Touch in the house. What's going on, the iPod Touch? My man, iPod Touch. Dr. Jimmy, I gift you this day. Enjoy. Man, I appreciate you, my friend. Thank you so much. Are you referring to the market being up? Man, I appreciate you, my friend. You are a man of the people. Don't you ever let anyone tell you otherwise, and don't you ever let them tear us apart, iPod Touch. Like, it's you and me until the end, my friend. And so thank you so much for being here and being a part of the show. You're like woven into the fabric, man. And it all started with the username. I mean, iPod Touch, that's an amazing username. I mean, that is a relic. That is a shout out to the past, man. And so that's some good stuff right there, iPod Touch. And so, man, I appreciate you. So much. Sam L's in the house. What's up there, Sam L? Doc, you were out yesterday. AI showed up, but we still needed the real professor. Yeah, I think they played some crash courses, I think. That was not AI. That was me. That was actually me. Now, some of the stuff they did with the graphics in there is a little bit creepy. But the actual face to camera stuff, no, man, that's all me. I'm not going to do AI for that stuff. And by that, I mean, it should be any day now. And I'm not going to tell y'all. I'm going to see if you guys can figure it out. Like, let's just see if you guys can pick up on it. But yeah, Wolf is in the house. What's going on there, Wolf? Jared Kramer, there it is, for the love of the algo, or for the something. There you go, you're mixing it up. I like that. You gotta keep the algo guessing. Nicely done. Sam L says the algo tried to cover for you, decent effort, but no B- humor. See, that's what I'm saying. Like, it takes real effort to be this consistently below average. Like, it takes real skill, in my opinion, to be at this level just day in and day out. And so no algo can do that. Like, we're safe, man. We're good. And so, Rodrigo, Dr. Jim, how is it to have the most popular tasty show? I don't know about that. I most certainly don't have that. But because of you guys, we got something, man. Like, we've got something, and we're doing it all together as a family. And so I appreciate you guys so much. I couldn't do this without you guys, man. I really couldn't. And so I'm so thankful for all of you guys investing your time and your attention into the show. So thank you. I think I'm all caught up on my emails now, by the way. I got caught up over the weekend. And so if something came through and I missed it, please resend it to me, because I tried to get all caught up. And it's always my pleasure to help however I can. And so thank you guys so much. Let's see. Volatility Farmer says, Dr. Jim, can you go over the volatility surface and the options surface? I'm not a volatility trader. I've said this many, many times before. I trade it indirectly through the equity options, but there are guys that are trading the curve, and there are guys that are looking out, and they're actually measuring like the 3-dimensional volatility surface. That's outside my area of expertise, to be perfectly frank. To be perfectly Frankie Walsh with you all, that is outside my area of expertise. But of course, I mean, looking at any chain and kind of just looking at your basic kind of 2-dimensional skew. I mean, you go to SPY, you go to May, 45 days to go, and I mean, you're seeing some pretty significant volatility skew, right? Like, if I go to, you've got SPY at 648. So if I go down to a 600 strike, right, my volatility is 26 on the 600 strike. That's $48 lower. And then if I go up to like a 695 strike, that'll be about 48 points higher. You're going to see a much, much lower volatility. And so this guy's only at 16%. And so when you take equidistant strikes, now you could compare delta for delta, but generally speaking, I think going equidistant is a bit simpler, and it's typically how skew is measured. Now, people that are doing it a bit more granularly and looking for surgical levels of precision, they might be doing delta for delta, but that's not how I typically look at it. And so right now you see incredible skew baked into the marketplace, and that makes a lot of sense. I mean, we're still in backwardation, I think, when it comes to the volatility curve. And so volatility farmer, I mean, I'm looking to you, man. You're farming the volatility. And so maybe you can help us out with some volatility surface. Maybe you can help us out with the option surface. I mean, that actually is an area where I would like to grow and get better, along with, GACs and DACs and gamma flips and, things like that. And so, maybe we'll see some content in the future as I kind of branch out and challenge myself to get even better. But that's not my area of expertise. They're a volatility farmer. And so rather than just, fumble around in the dark, I'm gonna politely pass on that one. But I appreciate you, my friend. Like, thank you so much for being here. Samuel says, iPod Touch, where are you? Oh, he's here. He's 100% here. Robert Darcy selling some ES at 65.48. Man, that's right near the top there, Robert Darcy. So good luck to you, my friend. Are you Mr. Darcy from Pride and Prejudice? I only know that because Autumn has made me watch. She makes me watch it annually. Like, you guys probably have like annual reviews at work. I have annual watchings of Pride and Prejudice at the house. And so that begins the review process. It doesn't end the review process, but it always starts with that 4.5 hours of Pride and Prejudice. So I know all about Mr. Darcy, man. And so we got Mr. Darcy here in the chat. And so that is some good stuff. N1C says iPod Touch is drunk in a bar somewhere. He should be, man. He should absolutely be. Rodrigo, what do you think of my 45 DT SPX Iron Condor? 6,200, 6,300. Let's take a look at it there, Rodrigo. 7,000, 7,100. Yeah, we'll take a quick little gander at this guy. I mean, you're 45 days to go, so that's a good entry price. Or I'm sorry, good entry point, I should say. 6,300, 6,200. And then a 7,000. So you got the big numbers helping you out there. 7,100. Yeah, you're probably collecting a little bit low. I mean, this is kind of generally how we go with these, right? Usually you're on the lower end of what I would like to collect. I'd like to be closer to 40 on this, probably $40 on this trade. Just because, with an Iron Condor, you're not going to be able to adjust it as often or as easily and freely as you would something that's undefined risk. So I'm going to try to control that risk more effectively on the front end by collecting a little bit more. So hopefully that helps. Fred Dotson is in the house. Great interview yesterday. Odell at the double top last week. Let's go, my friend. Yeah, thank you for watching the interview. That's so awesome there, Fred. Appreciate you so much, my friend. And yeah, Dell being down today, man, that's really something. Now it's rallying back now. But man, I'll take it. Beggars can't be choosers, so I will absolutely take it. Too much Dave in the house. Seems a good time reward for a double-sided ratio spread in USO. What do you say there, Dr. Jim? Try to remind me tomorrow. Maybe we'll take a look at that guy tomorrow. I haven't done too many double-sided ratios, but it kind of has very much of a strangle feel to it because you're basically just you're short an extra unit on both sides. That's essentially a strangle. And so I'd be open to taking a look at it tomorrow. But Joel James says, Dr. Jim, on a road trip with my daughter, Izzy, what are today's gimmies and gotchas? She's 14 and ready to learn. Oh, you mean, oh, wow. So Izzy, what's going on? I appreciate you so much. So number one, listen to your dad. So number one, listen to your dad in all aspects of life. But number two, your dad is a great trader. Like your dad is going to have some amazing insight to share with you as you learn to become a great trader and you learn to become, kind of active in the derivative space. But the next thing that I want to say, and this is the most important thing that you could ever remember, and that I do have to go, it's not a race and it's not a competition, right? So there is no hurry. Learn at your own pace. There's a lot to learn, but go as slowly as you need to so that it all soaks up and it all kind of makes sense to you. So I appreciate you guys. I got to go. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Hello everybody, Tim Knight here, and we've got the biggest update we've had in months at this point. And you know what? I just want to jump right into the charts because I got something very cool to show you. And just like we did a few days ago, I'm gonna show you something from my slope site, slopeofhope.com, that I did that speaks to this. So this is a very simple image, and I think you can see most of that, but let me explain. 2 weekends ago, a couple of Saturdays ago, on the 21st of March, I believe, I sketched out this very simple drawing. You've seen it before, or at least I think you've seen part of it. I did this for my paying subscribers, not my free people, because, you know, I thought it was more valuable. But it's enough time has gone by that I don't mind just showing it for nothing. And what I constructed was what I felt was a projection of what was going to come in the days and weeks ahead. So I composed this. The market had closed on March 20. It had closed very weak. And I called for basically 4 actions to happen. And this is so simple, it's almost like what a kindergartner might do. We had a big push with this green bar, and then we had a push lower, green bar, green arrow, big push higher with the green arrow, drop to a new low with this red arrow, then a counter trend push, another counter trend push with this green arrow, and then finally bombs away. So 3 guesses, 4 guesses actually. Green, red, 4 guesses as to what was going to come. The green arrow happened, the red arrow happened, and the green arrow happened. So I am 3 for 4 so far. And of course, the big question is, what happens next? If we do fall, it doesn't have to be tomorrow, but if we, in the coming, I don't know, couple of weeks, fall hard, let's have a party, because this is, you know, pretty cool stuff, don't you think? Because in my estimation, my guess, the future's already there, and my job is to try to see it clearly, if possible. And so far so good. What I'm also trying to say is that, you know, it is not a great day for me as a bear, but I saw this coming and I was prepared for it. Because this weekend, I really was, and I mentioned this, I was pondering, do I get long also as a hedge, or do I get less short? And I opted for less short. And my portfolio closed at a record high yesterday. This morning came, the market was green, but the big news hadn't come yet about, you know, they're finally talking again. And I started to trim. And like one of my portfolios went down to like 30% committed. I mean, just like vanishingly small. So I'm not pretending this is a great day for me. I've lost some money, I've lost some ground, but the damage is pretty modest because I did see this coming. I just didn't know exactly when or exactly why. And to compare this wild speculation with reality, we look over here to the SPX itself, and just to hammer this home, This was the 20th of March. So it was based on this data that I did my green, red, green, red. The next trading day, Monday, was all it took. We went roaring higher and, tick that box, got it. The next move was down and we went bum, 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 and bottomed yesterday. Now, I want to note that we went lower than I had hoped over in my crayon drawing here. So we rose almost exactly as high as I thought we would, but we fell even farther than I hoped, which is pretty cool. And now, whoosh, we get the green. Now, I want to be clear about something. We are now just about where I called for that green bounce to end. If it goes higher, do we rip up that paper and throw it in the air and say, wrong? No, I'm going to give some allowance for it to push higher. The only circumstance where I would say, well, I was 3 for 4, that's not too bad, the fourth ain't going to happen, is if we push above even this level in red. So there's plenty of wiggle room in here. I would love for it to stop here, but just because we are just about exactly at that level doesn't mean it has to stop right on the dime. Just like it fell farther than it was supposed to fall, it might rise more than it was supposed to rise. Could be. As it is now, of course, there's a lot of optimism right now. A lot of folks are short. They're squeezing the market higher. And everybody's buying, which is why we have, over 1,000 points on the Dow. I can't imagine the victory lap Trump's going to be doing over this stuff. Almost 800 points in the NQ, et cetera, et cetera. So massive move today. I saw it coming. And we're going to see if the next move happens, because it hardly matters why the next move happens, but it could be anything. It could be, the reality starts to sink back in again. Like, well, here are our demands. Like, we're not going to do any of that stuff. Oh yeah, okay. Well, the bombing renews and whatever. So peak optimism is about now, because there's all these like, okay, it's over. It's really over. This is going to end. But I'll also say this: the damage is done. They could kiss right now and declare that it's a complete end of hostilities. There's been billions and billions of dollars of damage done, years of reconstruction to get back to where things were, added to which, this whole Strait of Hormuz thing isn't exactly settled. So it's not like we control Z it and it's back to February 27. It's like none of this took place. A lot has taken place. There's been a lot of damage politically, physically. So, and by the way, earnings season is coming up. So there's a lot more driving this market than just, what's going on in Iran, although that's been everyone's obsession lately. So that's where things stand. 3 out of 4, and we'll see if the next zero happens. I've got a feeling I'll mention it if it does. Moving on with the regular stuff, here's the ES. Huge green bar, 174.5 points. And it's sure looking interesting with respect to its overhead distribution, isn't it? The more reckless among us might be wise to short like crazy right now. I'm going to hold off a little bit. Like I said, I trimmed like crazy earlier today. Those that survived have relatively loose stops and some wiggle room. So I'm not going to let a 4-hour rally maybe go bonkers shorting again. The diamonds still have some room to roam here, possibly. Resistance, I think, is up here where that gap is located. The small caps are up almost 3.5%. Here again, there could be a little more room to go. In my experience, the way these things tend to go is you get a huge day like today, and the vapors from that go into the next day. So there'll still be lingering excitement and everyone will be clinking champagne glasses and all that. So it's not like at 4 p.m. today, everything just stops. The cubes are up almost as strong, about 3 1/3%. Once again, beautiful push back toward that distribution top. And this is the point I was making yesterday about, bounce away. Go ahead, bounce. Please do. Because it's circumstances like this, what I'm looking for. How close can we get to that mass of overhead supply that's going to suppress prices? Because this is easy. It fell really, 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 really fast. And so it's bouncing really, really, really fast. We've undone all the damage from yesterday, all the damage from Friday, almost all the damage from Thursday. Thursday and Friday were the big ones. But it went really fast. And so the healing is very swift as well. And by the same token, if we do get my fourth arrow, the descent will be even faster, because it's like an old spring on a door. After a while, it kind of gets limp, and so if people keep seeing the market falling, they're going to get dispirited and be like, just forget it and just dump whatever. Semiconductors, SMH, very strong day here, over 5.5%. And this is one reason I was relieved to trim my SOXL puts yesterday so heavily, because it went from an 85% gain yesterday to, I think it's a 5% gain right now. So I sold all, but I kept some for sentimental reasons, but I sold almost the whole position. And I intend to add to that once more, but with a move this big, you're going to see those options values just fly around like crazy. NVIDIA up almost 5.5%. Again, this is in the context of a top, so we're pushing back toward that gap. And I think that remember, this is a shortened trading week. We've only got 2 trading days left this week, and if some real uncertainty is introduced before the holiday on Friday, it's going to make people kind of skittish. XLK is another angle at this. This is the technology ETF. Again, sorry to be so repetitive. There's so many pretty tops out there. They're just so magnificently formed. This is a beautiful, beautiful top. I've done a less than beautiful job drawing it, but let's tidy up a little bit. Look at that. Rare do you see things that are this clean. This is textbook. Absolutely textbook. Beautiful stuff. That's why I'm so, Mr. Bear here, so cheerful on a day when the Dow's up over 1,000 points and I'm losing tens of thousands of dollars. Bring it on. I love it. That's okay. That is so okay. Meta is another good example of how oversold things have gotten, because this plunged down here as of Friday, and then the bounce began. And I had puts on this. I got the devil out of those. We had kind of some stabilization here yesterday, rally here, get back up to this resistance. Mark, I will be seeing you again, but I have nothing to do with Meta right now. So I'm just undoing all that damage, creates new opportunities. Crude oil is down, but not that much. Not even 1%. You would think that with all this optimism, crude oil would be down, $50 or something, but it's down just a skosh. Not even. It's down several dimes. I don't think we're going to plunge back to the 60s. It seems to have what's the phrase? A permanently high plateau at this point. But I'm staying far away from energy. Anything to do with energy is just crazy. XLE, 2 red bars in a row. That's burning off some of its gains. XOP, same deal, 2 red bars in a row there. So there's some relaxation going on in the land of oil. Gold's having a good day. That gap that I've drawn there, I think, is sort of coaxing it higher. Silver, SLV, also has a gap, although it's almost closed. It's be interesting to see if it actually crosses that or not. And palladium, I jumped the gun a bit on this. I bought this on Friday. I sold it yesterday for like a 3.5% gain, and it's up again today, over 5%. So, made a profit, but not as much as I could have. But I would also note the gap actually is sealed beautifully on that. So it'll be interesting to see if it pushes past that gap and makes its way to the next gap or not. And then GDX, the miners, strong day here, over 6%. Once again, we've got a gap. Gaps all over the place. I think that's going to kind of hem in precious metals gains. As far as Bitcoin goes, up about 2%. And I still believe that what we're seeing here is very similar to what we saw here. And so, I think that we're in the equivalent of something like this zone, thereabouts, from an analog standpoint. And in turn, strategy, MSTR, is recovering a little bit. I actually have a small short position in this, but that's been generally sinking over the course of the days recent. And then BITI, the inverse, that's down a little bit also, obviously, because Bitcoin's getting some strength. Anything else worth noting? Well, we'll just kind of end where we began, the spider. So there's SPY right there. The low back here in November, that was the big November 21st low, I believe. We're just about matched it now. So by the time I see you tomorrow, it'll be very, very interesting to see if we've pushed past this line or not. I'll just say once again, if we do, if there's one or two bears out there, it's not the end of the world. It'd be very clean and very pretty if it stayed below that line, but it's not a huge deal if it pushes above it, because it's a matter of the thicker and thicker we get as we approach that distribution top, the slower and slower prices will be. This is the easy part. This is where the easy money was made from the bull side. Okay, that's it from me, and I will see you here tomorrow for more mayhem. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
The color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's
Oh,
game. I'll get in this man's game.
Yes.
5 mil.
5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancelleri. Bam!
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to Last Call. If you didn't get enough of us live from the SIBO floor, we are back and with a vengeance on the biggest update of updays there ever was.
What is the biggest update in history?
Are you asking me? Are you asking Josh?
Josh?
Chime in.
All right, everybody. Before I forget, today is Tuesday, tomorrow is Wednesday, and it's What's Your Assumption Wednesday. If you have an assumption in an underlying, email it in. Let's pull up the art card, Josh, if you're ready for it. If you're
Drum roll, please.
All right, I see your platform. And next up, I will see the art card. tastylive.com/assumptions. Assumption, no S.
Just one assumption. You can only send in one. It's a single assumption. You can't send in more than one. The boys will do it live on the show tomorrow. Please do it. Liquid products only. I know they say that, but give them a challenge. They love a challenge.
Yeah, they love a challenge. They love a challenge. This market is crazy. Honestly, this is why I never like to roll down calls. I don't like naked calls, and I don't like to roll down calls.
Yeah, I kind of agree with you. Okay, good. We're in the platform. Take a look at this. SPOs are up. Okay, the highest I saw them, and I'm going to go into the Nasdaq because I heard the Nasdaq was up like 3.5%. I want to see if this is fake news or real news. So hold on. Nasdaq. No, I think it's trading near the high. The high was 23.91. Yeah, so a little bit higher than here.
Barely, yeah.
Barely.
Yeah. Or 912. We're at 88. So a little bit higher than here. I mean, crazy day. Everything's up around 3%.
Yeah. Well, yeah. I mean, even the S&Ps never got up over 3, did they? It's only been the RUT and the triple Qs that have been over 3. It's been bonkers. Okay, so looking at our account, it's almost like, is this day one? Is this reprieve? Are you closing your positions? Are you adding to your positions? What are you doing, Jenny Andrews?
Let's take off the ZB put spread we sold today, because I think that's what's coming in. We have we put this on a few hours ago, and we're up $100 on it. $95 on it.
Yeah, and look at this. We closed that one, and it probably would have started coming in.
Oh, yeah. Right.
That's okay, though. Let's close this.
Right. I mean, we're over 114.
Mm-hmm. Yeah.
Dang it. Thank God we put this one on.
I know.
But you know what? Now we are net up in ZBM. Thank you, ZBM. It's been quite the ride.
It's been the wildest ride in the wilderness. I kind of agree with you there. So there is a lot of stuff to do. Now, we talked about this today a little bit with Baking Trader. XSP. Let's take a look at this. So
now this is just like a mini of SPX. So this is like 1/10 of SPX.
1/10 of XPS. So today we were looking at this, the 643 during our show for $1.17 or $1.
It was $1.63.
$1.63, and now it's $9. So this is what we were looking at for end of quarter, end of month. Now Jenny said she was going to do a couple at 40, a couple at, but I don't know. You might have already hit your rally.
No. So what? There was this has been going on for a year, this discussion of end of quarter, end of month rally at the very end of the day. This isn't the rally today is not the end of quarter, end of month. The end of quarter, end of month rally we've seen in the past is like the very end of the day, last few minutes of the day.
The one that I saw last March, it might have been 2 Marches ago because it was Anton, right? Has he been gone for a full year? He has.
Yeah.
So yeah, 2 Marches ago, 2 moons ago, I saw it go up about 90 points in the last 30 seconds. Really? The last 30 seconds.
So I don't know, with us up so much, that I'm even doing anything today.
I've got mine in. I bought it on the train, and I'm just going to leave it. But I did it early just because.
Yeah, because I have a hard time doing it now with it's tough. I don't know. In the show account, are we doing anything? I don't know that we will. If we would, it would be something very small, like buy that 652 for $1.16. It would be something very small like that. And it's only 237, so I don't even know. I would wait.
See what just to kind of talk through what we were talking about doing today is I wanted to wait until the end because you can watch the decay coming out of these. Now, if you miss the move, you'll miss the move. But right now, if you buy that 652, like Jenny was saying, you're still giving up 30 cents in extrinsic value. Not a lot as you get closer to the end of the day, but you can watch it kind of dwindle.
In SPX, that would be $1,000 for that option and about $300 in extrinsic value. If we weren't up 182 today already, maybe I would, but I am having a hard time at these levels putting that on.
I have a hard time at those levels putting it on too. I just kind of glanced up at the chat, and I think this was a great question, Jenny. So I'm gonna agent, and their handle's Agent 0DTE. So the question is, today is Tuesday. So we have, and everybody's off on Friday, right? So we've got a 3-day weekend coming up. So Friday, Saturday, Sunday. Do you think people are going to be long or short going into the 3-day weekend, given everything that's happening? I mean, I know we talked about, you see headlines that it's over. You see headlines that it's just talks that it's over. You see headlines that neither one is talking to each other. So there's headlines all over the place. Do I know why it's rallying? No.
Well, what's interesting to me today that the market rallied so much, but oil barely came down. So what I added to today was my short oil position, and I didn't sell naked calls. I didn't. That's instead of, because we're already long the market. We've been taking a lot of heat on the way down. But what did I have, and what did I do with my oil? In oil, I had a downside put broken wing butterfly, and I bought back one of the shorts.
What do we have here? Ratio spread and a short call?
So I don't know if you remember this, Liz, but we changed our
4 days ago. Who were you with?
So Fozzie and I, we had a short naked put, we had a short naked put, and we had a short naked call. We had a naked strangle in here. We had naked strangle MCL, and then the put was making so much, and we talked about taking it off or rolling it up. And Fozzie had this idea of turning it into this ratio spread. So if oil pulled back, we could stand to make a lot more money by having that 85-79 ratio spread. So, not using everything, locking in some profits from that naked put, but now we have that ratio spread. I thought it was a good idea.
Okay, so the ratios you kind of legged into a ratio spread.
It's kind of the same thing as if we had a broken wing butterfly and it's up, then you turn it into a butterfly. Here we had a naked put and we turned it into a ratio spread.
Yeah, I see what you're saying. So you added this long put because you obviously had these two in for 6 days.
So we added the long put spread. We bought the 85-70. We had the short 79 put, and we added the 85-79 put spread. We bought the.
I'm only saying interesting because then it goes with the longest dated option in there.
Right. Yeah.
Wow.
Right.
Okay.
I mean, you could pop out the side and see the MCL activity.
No, I believe you. I just know that
honestly, refresh my memory. Yeah, there it was. So you can see we bought the 85-79 put spread for $1.55. Originally, we collected $6.35 on that naked straddle.
Okay.
Yeah, strangle.
Okay.
So we gave up $1.55. It was like, buy that naked put back, take some risk off for $1.55. Or she said, let's throw on this spread for $1.55, giving us some extra profit potential if crude pulls back.
Okay.
Now we have that naked call, but again, our credit is, let's say, $5 in collection, and we've got the short 107, our break even's around 112, and we're trading 102. But with the market moving up so much, aren't you surprised that oil's not coming down?
I am surprised it's not coming down. The vol has come down quite a bit in it from the last time I looked at it, which was before I left.
Right, because it's not on its continued parabolic move up.
Yeah, take a look. So, I mean, it technically still is, I guess, but today is
it's settling down a little bit.
Yes. So maybe it's settling into a new range. So MCL, that's good. We don't want to do anything in MCL right now.
No. What time is it? 2:42. Spooze up
I have to sneeze.
181.
That's the only reason I'm going like this is I have to sneeze, and I don't know whether to look into the light or not look into the light.
Are you supposed to look in the light when?
Well, one makes you sneeze, one makes you stop sneezing, and I don't remember which one does which.
I'm gonna guess if you look into the light, you won't sneeze.
Okay.
I can't imagine anything good coming from looking into a light.
I'm looking into the light and I stopped sneezing. So there we go. Now we do have some earnings. I'm going to go to Twitter real quick and kind of go into Bob's list. Now, once again, on a day like today, are we going to do any earnings? Who's to say, right? But you've got Nike, Restoration Hardware, and ConAgra, Jenny's biggest position today. Just kidding.
I was cracking up. I've got so many things that are up today. ConAgra down.
It's down.
No, everything's up 3%. ConAgra's down.
That's pretty funny. I want to take a look at Nike and Restoration Hardware just because we can.
Oh yeah, let's look at Nike. Take a look at the chart in Nike. Nike has been, I think, really hammered lately.
So I don't mind getting in at these low levels.
No, let's get into Nike. Do we want to sell? If I look at the April with 17 days, $5 expected move, or the May with 45, 590, you definitely go with April over May. But do we go with the 2-day over the 17-day?
Let's take a look. This might have Jade Lizard written all over it.
I don't know. I kind of like the April 17-day.
Sure.
Because look at in the 2-day, we're only getting $3 away. That's not very much.
Well, you're not getting you're going to get $5 away here. So, but it's not bad. Honestly.
You could do a Jade Lizard here, do the 47.5. So we're, $5 away.
I want to change this to open interest and volume. So I don't mind just selling that. I just want to make sure there were some people at that level. The 48, you're getting 88 cents instead of collecting $1. Then anywhere to the upside, you get to keep it. It's only using $568.50. Shipping it. And
I am on it. I am pushing everything out to the follow page.
Oh yeah, because we got to do it live because we're about to go. Because it'll close after the fact. Is there anything that we want to change in our account? Oh, I want to look at Restoration Hardware while you're pushing that out. Restoration Hardware 139. That's been beaten down as well. So I mean, here's what I find crazy about this. So this. On February 23rd, so about a month ago, within a month or so, it was a $218 product, and now it's $139.
I was surprised, excuse me, to hear, did you say you had to sneeze and then you looked at the light and you didn't sneeze?
Yeah.
And it just transferred across the town.
Did you look at the light?
No, I was looking at, you know what I was looking at? I'm pushing trades out. We were filled after the show. We were filled after the show in UUUU roll. We were filled after the show in closing SPX. So there's a handful of trades I'm pushing out that were filled after our show.
And she knows that because if it's in the 11 handle or later, it was after our show.
We were doing something else. Okay, so I'm getting all of that out to the follow page.
Yeah, so you can see this here. This is kind of a beaten down stock too. Now, I don't know that I want to, I'm fine with Nike. I don't know that I want to jump into 100. Oh my gosh, look at this though. It's got a 45 rank, so it's only a $140 product, and it's got a $20 expected move. Look at how far you can get $1. You're putting up $5,000. This is nothing. I don't even want anything.
No, they too much buying power. Okay, so on a day like today, let's just talk about on a day like today, what did you do? Because we could talk about what we did on a day like today in our accounts.
I actually sold. Well, now I'm in a different spot. I will tell you that because I was not in for the last 3 days, right? So I wasn't actively trading, and usually I am actively trading. I traded a little bit while I was on vacation, but I wasn't an over trader. How about that? So I'm in a little bit different of a spot because some of my stuff rolled off. I've been very near-term trading, so I was getting assigned, I was getting rolled. So I was a little bit different because I was selling calls against things that I got assigned on, short puts that I got assigned on. I did a lot of downside ratio spreads, very, very near-term, thinking that I could just keep that credit. So I used this up move and high volatility to start selling calls against things that I got put. That's what I did today. I also added to my gold position. I did sell premium in gold, and I sold premium in silver because both of those were taken away from me.
So I was telling Liz after the show, we didn't talk about it on the show today, about Tony from Mexico, one of his trades, and he said on the show, one of his biggest winners last year was just selling short-term Stringles in GC. So we were looking at that, and I do like the idea of it.
This is a big product. Is there an MGC?
They don't have options, but you would have to look at GLD if you wanted something. If you're looking at Delta and you'd go to, the 2-day in GLD and go to like 20 Delta or 15 Delta.
Let me change it back to Delta. I'll go 15 Delta. You're getting $1 and $1.
Right, so $1 and $1. It's
$1 now, and I priced this out earlier. It's like $30,000 to get in the big
1,000 and 1,000 get $1,000 and $1,000 in GC, or here $100 and $100 for 7,000. You're getting $200 or $2,000 for 30 something thousand. But these are. This was his trade of the year last year. Will it be his trade of the year this year? I don't know.
So you know what I have in GLD, and I did it on my market measures, not market measures, my market movers that I did by myself. It's in the 45-day, and this is kind of crazy. I used a lot of capital to do it too. I have the 370, and I think I could take it off. 370, 360,
Oh, ratio spread.
Ratio spread. I have the double bat trade, and then I have the 444.50. This is getting close.
The upside. And are you out in May or are you in April?
No, I'm in May. And that's getting pretty close.
And that's a pretty hefty credit.
Yeah, it was a very hefty credit. And you know what's crazy, Jenny? It's exactly, I'm down $50 on this trade. Isn't that weird? That's how much I think
your calls.
That's how much I think a lot of the IV has come into out of gold though too. Because when I was putting it on, it was like an 80, it was like a 92 rank, right?
What did you do today in gold?
Today in gold, I went to GDX and sold premium. I went baby. I'm a small fry. That's why, I mean, we were looking at GC, but
it's a big move in the metals today. It's a big move.
Yeah, but they have big moves. So like that bar is not that big compared to half of these other bars.
Well, the crazy thing is, I mean, did you know silver was cut in half, like lost 15% of its value since January?
You have to say since January.
Yeah, since January.
Because if you look at from here, you know what I mean? You could pick a spot. Gold has done nothing but go up.
Oh, silver. Yeah. So
silver.
It was interesting. Like Tony, and I like Tony from Mexico's thought. I appreciate his thoughts because he's been trading these a long time, and he's bullish gold and continues to put on bullish positions in gold in addition to his neutral strangles, but he was not bullish in silver.
I don't disagree. You could go either way with it, and you could play the two off each other, right? Mm-hmm. So here I put in January 1st is literally this line. So it went all the way up to there. So it only fell back to where it was in January 1st.
We're back where we were.
Yeah, we're right here.
Yeah.
So it is pretty interesting. I like using these for the implied volatility and less direction, but I like to close one side of direction, meaning that if you get that pop, it's fine. On that GLD, I did do both sides, and I'm okay with it. Mm-hmm. But yeah. I kind of like the near term better. 191. So look at this. We're up, SPOOs are up 191. Let's take a look at our XSP.
It's 250 right now.
250. Let's take a look at XSP, see how much premium is left in there. I'm going to clear this out. 0 day. What were we looking at? The 52?
You mean during our show?
Yeah, just now.
I don't think that's fair. I think like if we were going to do it, because we wouldn't have done it then. Like the end of...
No. Not during our show today. Just 10 minutes ago.
Oh, just 10 minutes ago. I don't know. But if we were going to do the end of quarter, end of month, looking for a big move on the close. And honestly, with the move we have today, 188, I'm looking at SPX right now. You could do both sides. Like I'm looking at the 65.30, 65.35 strangle. It's only $665. And we can get a move in either direction. You just don't know. With 10 minutes to go.
Oh, you're talking about buying it.
Yeah.
Yeah.
I threw it in. Just to watch. I mean, I made that much money on my ES calendar this morning, so it's kind of like, I'll take some of my profits from my ES calendar and throw it into this end of quarter, end of month, last 10 minutes and see what kind of move we get.
So, because it could go in either direction.
Yeah, it could.
Yeah. Now, what I was going to say is you're kind of doubling, now 575 wrapped around it, but you're kind of doubling down. So it's got to move $5 in order for you. So to the upside, it's got to move to, 186 for you to break even. And to the downside, it's got to move $5 plus whatever move it is.
Look, it's a $100 winner right now. I could take it off for $100.
Yeah. Yeah.
But I'm just going to leave it. It's only 252. I'm going to leave it because with SPOOs moving 180 something points, you could get more than a $5 move in the next 10 minutes.
You could get more than a $5 move in the next 10 minutes.
Right. And it won't be worthless. Well, I guess it could. I didn't do the straddle. Since it's like just out of the money on either side, it could end up right in the middle. And I could have. It could. It could. Oh, it's up. I'm taking it off right now for $300.
Yeah, there you go. To the upside or to the downside? It was to the downside, right?
To the downside.
Yeah.
It's bouncing around.
So those might be wide. Oh, no, it's not wide markets. But it is fun to watch the end of the quarter, end of the month.
Yeah. And then it's like, oh, should I just take off the downside and leave the calls? I don't know.
You could.
It's really bouncing around. What time is it? 2:52?
I mean, you have 8 minutes left. 8 minutes.
I'm just leaving it. I'm not doing anything. I'm leaving it. I'm not going to touch it.
8 minutes is an eternity.
Right?
Yeah. But we're pulling back a little bit. It's only 177.
And so that's just it. You could get a big move. What's happening? Or some kind of roll at the end of the end of the month? Or if there's a big roll, has it already rolled?
Well, that's just it, is you don't know the time. That's what I was kind of saying. I don't know why. Everybody's got a reason why the SPOOs are moving and what the headline is. Somebody might have done the roll at 11:45. Do you know what I mean? Like 11:44 or whatever time the market had a huge spike. That could have been the roll.
Right. But it is, you could get, and I took it off for $300.
Couldn't hold it.
I figured I had a little calendar. I had a calendar in ES, a call calendar yesterday, today, that was fine. And then this on top of it, it's covered my loss in my NDX put spread from Friday.
So, and the reason I just want to be kind of clear, because you can trade, I want to do this because the overnight moves are going to be crazy. I kind of agree with you. I'm looking at the chat. The overnight moves are going to be crazy, and you use ES for that. We're looking at SPY, so I understand that we as traders quote the SPOOs and trade SPX. What we're doing with SPX is it's over, Johnny. Like at the end of the day, it's cash, so you can't take the stock, you can't do anything in it. So that's why when Jenny was said, I'm just going to let it go, you can do that in XSP, you can do it in SPX, because wherever the cash value is where it's going to stay.
Yeah. Now, what are you thinking?
I've got my trade in. I mean, I still think I don't want to watch. I don't want to be on the sidelines when I watched what happened last March.
Killing me.
Yeah. So, right. And so I will, tonight is a night when I will keep an eye on the SPOOs. And Jenny, tomorrow, won't be surprised if we're up another 100 or down to unchanged. I really won't be surprised in this market, right? You had the VIX. The VIX has come down quite a bit. So that is a little bit of a tell. Now it's down 17%. We're in the 25 handle, which I think is crazy.
Yeah, for the VIX to be down that much. So again, because
this doesn't look so when I look at this though, if you covered this up, this down move, it doesn't seem that big.
You know what I mean? Oh, hold on. Let me look at your screen. I'm too busy putting in my own positions. I'm not even watching. Watching.
This down move in the VIX does not seem that big. It really doesn't.
When we're at this level, and Tony was talking about this, when we're at this level and we're bouncing around in the high 20s, mid to high 20s, it could be 50, come down to 20, it could bounce up to 40.
The VIX could be 60. Nothing will surprise me tomorrow with this. Yeah. So when you look at this, you're absolutely spot on accurate. With VIX in the 25 handle, anything goes. I mean, it literally could be 60 tomorrow or 50 tomorrow.
If the world thinks things are de-escalating and that's why the market's up, and I'm not exactly 100% sure if that's why the market's up, but then if that were why the market would be up, I would think oil would be down more.
Well, and that's just it. We were on the trading floor the other day. The other days, Lucy, is before I went on vacation, right? So I went on vacation and we were talking to a trader from the pit, and he said the VIX, that oil is the new VIX. Watch what oil is doing. Watch what oil is doing, and the market's counterintuitive, right? So if the VIX spikes, that means the market's coming down, and if the VIX declines, that means the market's going up. That's just the general market. Well, if the oil is the new VIX, it's not performing.
No, it's not. It's not anymore. Maybe the oil was the new VIX a week ago or 2 weeks ago, but it's not today because oil's not moving. Oil's not moving, and we've got the SPOOs up, 175,
which is crazy.
I know. So 257. Let's see down. They're only up at 173. Are we going to get a big move one way or the other in the last? I'm
telling you, you're going to have to. I mean, 2 minutes and 30 seconds during a live show is an eternity. We say that all the time when they're counting us in. This is an eternity in the market. Anything can happen still at 257. And I'm going to go to XSP only because it's fair.
Go to SPX and put on the minute chart. Go watch the minute bars.
So day, I'm going to go to 1 minute.
1 minute.
1 minute. I'm going to go to a day though.
Well, yeah, 1 minute a day. And although it's only a minute, it's not like we're watching every second. No. I had this great idea. I thought it'd be so fun to watch it moving around, but it's only the minute. So,
So look at this. This is what I was going to tell you. This is exactly when I don't know what happened here, right? So we were at 11:36. You and I were probably eating our lunch.
We were eating lunch.
Oblivious to the world. And within, so it went from 11:36 to 11:41, that big of a spike. That big of a spike. And that's kind of where it stayed, in my opinion. I mean, don't get me wrong, it kind of meandered around a little bit, but that spike has held and gone up a little bit.
Right. So, what would someone do today? I sold some calls against some of my long positions. I didn't sell naked calls. I sold some calls against some of my long positions. I didn't sell all of, one for one, but I sold some. Just in case tomorrow we reverse and SPOOs are down 100 or down 150, I can say, I did something.
You can. But I mean, we always do something. I probably overtraded today.
Well, again, you haven't been here. I have a lot of my big chunk of my buying power already at use, so I couldn't just be like slinging a bunch of new trades, but I could sell calls against some of my longs.
Look at this bar going up. Look at it going up. Did you see it?
Yeah, I see it. Watch it.
I know.
Go.
I don't think, it was, like I said, it was the last couple seconds that I saw it the last March, but that's pretty high. We're back up to 185. Can we get a 190? Come on, it's going.
Go, SPOOs, go. Can we see like a blast in the last second?
Pull back. I don't know.
2:59. I'm watching the clock. That was it. That was it. 2:59.
Well, we'll see where it ends because you still have a couple seconds left, but it's trying, it's fighting. It's kind of fun to watch it.
65.28. It's not 3 o'clock yet. We haven't heard the bell yet. There we go. 184.
It didn't lock yet.
There we go. 65.28. 65.28.40. Is that where? Or 65?
Yeah, 65.28. And it does lock. I know it'll lock in a second. 65.28.38. That's pretty high. But I think its rally was here.
Well, that was at 11.
I know, that's what I'm saying. So that's where the big move was. But I don't know what that was for. I don't know. But we made it to the bell, Jenny. Another day done and dusted. Stay tuned for overtime. Those guys are great.
I know those guys are great. Stay tuned. And we will see you tomorrow live from the SPX pit. Everybody have a great night.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
We are believing in the rumors today. It's Tuesday, March 31st, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 27 minutes as we wind down the trading day, and what a day it was. You don't see these kind of moves to the upside that often. Less than 2% of occurrences in the S&P 500 produced rallies that are at least this high over the past 30 years, Ilya. 2.7% bound, 65, erasing all of Friday's consternation and concern that the war was escalating. We hear from President Trump yesterday that the U.S. is willing to walk away, leave the Strait of Hormuz in Iran's control. So the Iranian government today says it's willing to negotiate. An Iranian government, by the way, that is not the IRGC, an Iranian government that on 5 separate occasions since March 7th has said that it's done firing missiles at neighboring states, which hasn't exactly stopped, including overnight when a Kuwaiti, or at least an oil tanker, getting oil from Kuwait
yes, that's right,
was hit by a missile. So the market wants to believe, Ilya, hope springs eternal here as we get ready to end this quarter. This month of March, that was dreadful for equities. Worst month of gold's existence since 2008, as it were. Oil prices, of course, they don't really come in today. Crude oil, 102.04 here now after hours. It's a few pennies lower than where we were this time yesterday. I suppose it's not quite the 104 and change, or nearly the 106 we were seeing overnight at points. But oil prices didn't collapse. And while we got down into the 99 handle at a point today, the market did decide to pull itself up by the bootstraps and give us another 102 print. So, Ilya, oil volatility, it's coming in a touch. Equity market volatility came in a bunch.
Mm-hmm.
Why is today different than other episodes of Hope?
I don't think that it is. I think that we're watching, as you accurately point out, the end of the month. There is a lot of settling there. Tomorrow is April 1st. I think that's helping to inform the situation. We heard from Iranian President Masoud Pezeshkian saying that they're ready to end this thing, as you said. But in the days leading up to this, all of the headlines coming out of the deep recesses of Iranian leadership have pointed to a dramatic schism where people like the president want an off-ramp because they're thinking about the economy, and the people that control the oil, which is about 12 people that are all IRGC and adjacent folks, they are making money here. So, because the only tankers that transact crude through Hormuz are Iranian tankers. And to your point, the government of Iran that isn't the IRGC has said all kinds of things. Problem is, they don't control anything on the ground, it would seem. Certainly not the parts that matter, the shooting parts. So I think there's a lot to be said here, obviously, for the strength of the move, but also the trends that encompass this war since the beginning of the month. They're not changed. What we have is another violent swing. Bear markets are notorious for having sharp rallies. But has anything changed? No. Just look at the bonds.
How much of this is covering today at the end of the quarter where the market was leaning south?
Yeah.
And you got your end of the quarter where people are taking profits on existing positions.
End of the month, end of the quarter. Yeah, there's all kinds of end of stuff going on here as far as resetting people's high watermarks.
Bonds gave it all up at the end of the day, you point out. 113.28 marked close, but when we go to that 5-minute chart, the final 5 minutes of the day, We were up 114 and 3 ticks. We're now down to 113 and 20. Oil is still sticking higher. So really, I saw that we were looking at a drop in Treasury holdings, or at least foreign holders of U.S. Treasuries at the Fed. That was one of those ideas that we tossed out a few weeks ago. Like, what's driving this move? Why, if you're a government somewhere else in the world, how are you approaching this to provide stimulus and support to your population? What are you doing right now? Sure. Financial Times, foreign central banks have cut their holdings of treasuries at the New York Fed to their lowest level since 2012. The selling has come as oil importers like Turkey, Thailand, and India have been raising cash through asset sales to prop up their currency and economies. Right? We run through the iterations. You have 3 options. Raise taxes, do quantitative easing with lower interest rates, or you sell assets that are, well, foreign assets, right? Mm-hmm. First one is politically unfeasible. Second one may exacerbate inflation, or at least lay the groundwork for even more inflation in the years to come. And then the third one is the least uncomfortable. We're selling American bonds to help insulate our economy from the effects of an American war. That's very easy for someone like Modi or Erdogan to sell back to his population. And quite frankly, for someone like Erdogan, probably desirable to blame an external figure for his country's economic woes here. So, Ilya, I mean, we have a 200-point move off of the bottom here in the S&P 500. From where we were yesterday, near 63.60, we're now up to 65.70 or so. Is this a durable bottom? If I could make the bull case here from a technical perspective, you're back through your 1-week moving average. You have this bullish engulfing bar, new low relative to yesterday, only to close above yesterday's high, which technically makes it a key reversal. The triplet of candlesticks down here would be a Morningstar candlestick cluster. So being ticker agnostic and headline agnostic, the technician would look at this and say, maybe the market has established a low. Would you be interested in, even if you're pressing your short calls so far, short call spreads, would you be interested in trading around today's low as the low in the Iran war trade?
No, I don't think this makes any sense to trade as the low, because we still have a series of higher highs and higher lows. We don't have any breaks of key levels. You're asking for it, whether you look at the previous big green candle or the one before that or the one before that. So show me a break, and yeah, but show it to me.
Where the reversal was most prevalent on the Nasdaq and in the Russell today, both up 3.38% here after hours. It's a very similar looking chart, that triplet of candlesticks, Morningstar candlestick cluster. You have that engulfing bar today, bullish key reversal in Nasdaq, and likewise in the Russell. But the Russell hasn't gone anywhere for the past 3 weeks. The Nasdaq and the S&P have seen a little bit more directional downside with things like the Mag 7 leading the way lower. Mags had a great day today. 4.55% higher, leading the broader market. Ilya, when we look at the things that have been key tent poles of the market, like the Mags and ultimately the semiconductors here, pulling themselves back above the neckline in a head and shoulders pattern, mind you. Mm-hmm. What makes the bulls so confident here today that this time it's something different?
I don't think what you're seeing is bullish confidence.
Is this just covering?
That's what it looks like to me. Because
explain the dollar move then, because you and I want to push back on that only because the dollar has been the one thing that on green days you and I have said, how come the dollar's not buying into this? Right.
Well, this is the end. This is, I think, the same exact story. I mean, what have you seen over the course of this war? You have seen weaker stocks, higher dollars, weaker gold, lower bonds. It's all in correction mode today. It's the not war idea in every relevant market, and it's the end of the month and the end of the quarter, and the news flow isn't different. I think what you really have to look at here is crude oil. It all starts at crude oil. Has anything fixed? No. Or crude oil would be cratering. So nothing is fixed. And if nothing is fixed, then this is just end of month, end of quarter repositioning, and frankly, not much else.
Well, we get to the end of the quarter and you have S&P down, we'll round up 5%. You have USO oil up 55%. And then you have little Bitcoin here, which finishes the quarter up March at 3.3%. What's Bitcoin doing holding up in this kind of market? Is this an opportunity? Are you looking at the tape for things? Let's say you're a bull in some regards. You're looking for something to buy. Are you looking at things that are holding up better in this tape right now? Or are you looking for things that are on sale because of a 5, 10, 15, 20% pullback, like gold, for example? How are you approaching this market from that angle?
I think the market has become very, very correlated. Obviously, we're seeing a lot of things move together. I am watching very closely the sort of interplay between assets more than I'm really looking at sort of what's on sale and what isn't. There certainly are things that are on sale. The question is this the time to go buy them? EWZ, for example, ILF, for example.
Brazil had a nice day today, up 4.4%.
Yeah, I mean, this is helping bail me out here today. But I mean, there are things that are on sale. GDX, if you want to look at sort of
huge day today,
a gold proxy.
7%.
Yeah, so GDXJ even more. So there's stuff to do. The question is this the place you want to do it? And all of them look like they're scraping the underside of former levels. None of them look like they're doing something new. Not yet. That doesn't mean that they won't, by the way.
Not yet. It doesn't mean look like that they won't. Okay. I can get into that. I mean, I can see an S&P 500 here where we have our November low that we've just run into, and we haven't scaled across it yet. I mean, Friday, Ilya, I took off the long put spread in ES and was hoping to get a bounce yesterday to sell into, thinking that we get our typical early week rally, late week sell off. I didn't have a chance to get into anything yesterday, and I didn't put the short back on today. The short call spreads in the Russell are obviously not feeling too hot today, but this was actually decent in one regard for me, insofar that I do have a bunch of short iron condor trades on in the S&P 500, and by virtue of this market ripping to the upside, it helps bring the price action closer to the center point of between the width of my strikes, my short strikes. So kind of take the good with the bad, all things considered. I still think this market's heading lower. I'm looking for a place to get in short. And if I'm looking at SPX, this looks kind of like a textbook breakdown and backtest at first blush.
It does.
And until we see, a legitimate hurdling of things, I can't rely on candlestick analysis alone to substantiate, okay, the low is in, let's start trading this on the bull side and get, let's do it.
Mm-hmm.
I might be wrong.
I mean, listen, of course, this might be wrong. I don't think there's any question that at some point it will be the real deal. And at some point, the markets will react. But I think at some point necessitates not so much that we get sort of the clear-cut news, because almost never is that the case. You're probably not going to get the clear-cut news. You're probably going to get the price action acting first, because it will have sniffed things out first. But you do have to get some level of conviction that there's a legitimate kind of narrative to be had here. And when we look at what the markets have been telling us for quite a while now, what is it that we find? It isn't that there's an issue, and if only we were to end the war, the issue would go away. It's that not only do we have an inflation shock already baked in, we seem to also have a growth shock already baked in. If we look at what's been going on with the bonds and gold leading into all of this. So the markets have been increasingly telling us It's not that these things are risks if the war continues. It's that these things are coming because the war has gone long enough for them to be on autopilot. So let's say you end the war right here. Let's say all of this is real. And then what? Does that change the inflationary impetus here?
Yeah, I mean, the European Commission today urged people to work from home, drive and fly less for the Iranian war. Europe, which, bring in the comments, as I've put this out earlier, people said, well, Europeans don't work, so that doesn't change anything for the economy. I suppose that's a fair critique, Ilya.
That doesn't really tell us much here.
They go on vacation in about a month for the rest of the summer. And that is not a joke, but yeah, not a joke either is the Mag 7, Ilya. They had their best day today, broadly speaking, in 10 months' time. So hope springs eternal. There's clearly a desire to try to cover at least here a little bit. I don't buy anything about this being a big move to the upside because of the fear being tilted. After the most recent CFTC COT report update that we got on Friday, we are now looking at the least net short the market has been. Speculators have been in the futures market all year long. So it's not like there's a big tinder there. CTAs are short to the tune, I think, 47 billion right now. Mm-hmm. So you can burn through that fairly quickly. But the futures market is not at extreme levels, anywhere close to extreme levels that would substantiate this thing is going to rip back to all-time highs. Ilya, we did have Nike earnings come out here a little while ago. We can go over to the charts briefly. I saw that the revenue from China in particular almost doubled expectations, but that's clearly not enough for what we're seeing here in terms of the share prices. EPS beat at 35 cents versus 31. Revs were slightly higher, 11.28 billion versus 11.24 billion expected. It had a 55 IVR this morning going into the release. Coming out of it, it is starting to look like a little bit of a nothing burger for those folks that were playing an earnings inside move. I know we're only minutes out from it, but there is something to consider that. Maybe you may have just nailed that trade. So good on you if that's how you were playing it here. Again, EPS beats, revenue beats, but direct sales were down and margins are coming back in. All right, Ilya, second half of the program here, at least the last 5 or 10 minutes of the program here. When I think of the problems facing the market right now, I'm still looking at the second order effects. So on a day like today, when we see what's happening with stocks running to the upside, we do have bonds making their move higher. We have gold making its move higher. We also have some of the grains continuing to move up. Wheat in particular adding another near 2%. And while it's not near the highs, just direct highs of the day, it's starting to get back into the levels where it was trading at the highs when this war broke out and the panic and the uncertainty was really peaking early on. Mm-hmm. At what point, and I asked you this yesterday, so maybe with today's reaction to the market, reaction to the news in the market, we can have this conversation again. And I may ask you every day here.
Okay.
When should we stop chasing oil to the upside?
When oil stops going there. I mean, take a look at what we saw today. We still have the basic same architecture that there was yesterday. We have a breakout of a range. In fact, if anything, we have a more convincing hold at the former resistance become support here. We tested it again today, and again, we couldn't get through. I mean, what is that telling you? It tells you that the president goes, yeah, we're going to end the war and we don't need to reopen Hormuz. It'll reopen automatically. Okay. And then in the next breath, he says, the Europeans will do it themselves. Okay. Clearly, the oil market doesn't think that that's what's going to happen. And maybe the oil market will come around, but it's getting really expensive, obviously. So that's the bigger issue. This is now a problem of trade construction. I tried to build a USO call vertical here. I tried to build a put vertical where I'm selling puts, even though I don't really want to be short oil vol, but maybe I could get something off the board. Looking into the 40 days DTE range, looking at 79 days. There's nothing really there. And when you can find okay risk reward, your trade doesn't fill. And the moment you try to go in and get something on the board, your midline shifts because the spreads are so wide that you can't really get a very tight entry. And once you start to really open things up, well, then your risk reward goes out the window. So for me, it's been more challenging to get execution dialed in a reasonable way. The actual setup, I think, still doesn't show any signs of falling apart.
It leaves the markets in an interesting condition because Wednesday, Thursday are the final two trading days of the week. We have Good Friday on Friday here. We have a 3-day weekend in the U.S., not allowed to be closed 4 days in a row, but European markets will be closed on Monday. So it's fertile ground for a headline or two to really shake things up. Ilya, at what point do you start thinking about shifting your durations because of non-firm payrolls? And I ask because I'm thinking about what I'm doing with my short iron condor positions that I have going on here. And at 30 days to expiration, while, this is still kind of working out right now, just taking off one of the multiple legs, for example, I could peel off one of the legs here for a few bucks. It also feels like by the time we get to Thursday, Friday, Saturday, Sunday, Monday, okay, now Monday's 24 days to expiration, and I'll have to have survived the market through another war weekend as well as non-farm payrolls. If you have an expiration that's next week, do you think that tomorrow, Thursday at the latest, are the days that you should be rolling as opposed to, unless you're not wide enough? If you're wide enough, who cares what happens with the week and you have enough time, who cares? But if you're going to go through your rolling cycle next week, do you think that maybe the next few days are the days to get it done?
Yeah, I think you're already looking at stuff that's relatively thin. So if you're in your roll window, I think you've got to try to get it off as soon as you can. But at the same time, it's really challenging to ask for great fills in this environment. So if you have to roll not as entire positions, but you have to leg out of them, there's always market orders. And you might take some hits along the way. And you got to look at where you're unlocking buying power. Because depending on how much you have in exposure and how much you have locked up in margin, how much you have locked up in premium, you might need to take off those things that pay before you take off those things that cost to kind of stagger things correctly so that there's capital enough in your account to take these market orders off piece by piece. So that just takes a little bit more work. I would say if you're going to be doing this, do it early in the morning. Do it when Europe and the US are online together for maximum liquidity. These markets are jumpy enough as it is. And so it might be some work here to actually work the exposure and work the orders. But if you're coming up on DTE and you're going to roll as opposed to let things expire or get out, get to work because you're running out of time.
AAA gas national average $4.18. $4.18. That is jumping over $1 in the course of 1 month. The high that we have ever seen was June 22, when the national average was $5.16. The diesel record is $5.81.06. Both of those were set in June 22. The current average for diesel is $5.454. So gas price is still going up, Ilya. This is one of those knock-on effects.
It's not a lot because we pay north of $5 here in San Francisco regularly. So all this conversation about $4 sounds like wishful thinking.
Yeah, California's California state gas average is $5.88.7 right now.
Yeah.
Again, Ilya, can the consumer weather it? the real-time spending data so far, high-frequency data, credit card spending, that's all holding up. It's still holding up.
I've started to
Consumers are
see some
pushing through it.
interesting corporate delinquencies building in the system. And there's an interesting article in The Economist this week talking about how those numbers are understated because a lot of companies have done things like basically to turn the keys over to lenders, which doesn't look like a default, or variously twist the terms to extend the timeline. So, for example, adding interest to the principal and thereby reducing the burden. So there's a lot of shenanigans going into cooking the delinquency numbers, at least for corporates. Obviously, consumers don't have all these same tricks, but they're also not front line. Corporates are first. So this will be interesting to watch, but some of the cracks in the credit space are not quite as easy going as they appear.
Ilya, overtime's out of time for today. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. After Macro Money, go outside. It's a nice day if you're in the Northeast. But make sure you watch Macro Money first because he's up next here on Tasty Live.
See you there, everybody.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Let's celebrate this family, 'cause everything is better when we get together. Everything is better when we are side by side. Hey, side by side, side by side, side by side. Hey, side by side, side by side.
it's green shoots everywhere. So is the problem really over? That's what we're going to be asking ourselves today on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to be looking at here is, of course, the price action first and foremost, because boy, have we had a day here in these markets. But with the price action presenting itself, the narrative becomes very important because, of course, the upshot of what we seem to be seeing here is a situation where the markets have decided that it is time to believe that the war is over, or at least that the probability that it is almost there is immediately in front of us. And then, of course, there is the many elements of this story that suggest that, in fact, it is otherwise. So let's take a look at the price action first here. This is the S&P 500, and I've taken off all of the chart art from these charts just so that we can really anchor ourselves in a sentiment kind of way about what this is actually showing. I think it's really easy to get stuck, and I'll be the first to say it, in the lines you draw on your chart and then to try to find meaning in them and lose the price action itself. So let's focus on just what the price says. Clearly, this is a very big rally. Clearly, that rally is taking us back into whatever congestion area existed down here. So these bottoms over here. And so with that in mind, do we have a break? Well, the sequence still is of lower lows and lower highs, and we've not really made a convincing break. Arguably about 6,600 or so is where this line in the sand is, right around there. So this bottom, that bottom, and whatever the friction zone was right here. So you'd need to end up somewhere over here for the sequence of lower highs and lower lows to look like it's broken. And then your next bogey would be the underside of this range. Call it 6,800, 6,750. So first and foremost, then, what's the catalyst? Well, we got comments both late yesterday and today. Late yesterday was in an interview that showed up in the Wall Street Journal. Now, this was not a formal one. This was apparently a conversation between the president and his advisors. And there, the comments were that the president is prepared to end the war even if the Strait of Hormuz is not unlocked. La-di-da, the markets liked it. We saw a relatively positive response in European market hours. We saw a relatively positive response, of course, as we can see here in US market hours, though in Asia, this didn't take. So looking at this now, we end up with a story that says, okay, well, so why did the markets believe this? Why didn't they believe the prior instances of where we had similar stories? I mean, certainly this is not the first time that the president has said, oh, the war is going to be over soon. Oh, the war is going to be short-lived. This is an excursion, he called it. Well, okay, maybe it is, and maybe we should be taking this at face value, but what makes this different? Well, it's unclear. The subsequent comments in the New York Post, that was seemingly more of a formal interview, they suggested, again, that the president is, on the one hand, saying the strait will reopen automatically. I don't know how that works, but it will reopen automatically once the war is over. That, of course, might be with a toll, because Iran's government has just passed a rule that says they are allowed to charge a toll, or they will allow themselves. It's a cute way of slicing and dicing, to charge a toll for ships that transact the strait. So maybe it'll reopen. Maybe it'll reopen with a toll. Maybe the toll that it reopens with will not be as onerous as the war, and it'll be okay for the markets to unclench. The bottom line is none of these things are things that we know. And so we get these mixed messages, and of course, the market, after being beaten down in the way that it's been, is understandably reacting in a way that's positive, because you only get the bottom setting, the low tick headline once, and there's no knowing where that is. But at least for the moment, there doesn't seem to be any confirmation that this is in fact a turn of substance for now. Now, the way that you start to see that perhaps most clearly is in crude oil, where you can see here was the range that crude oil was in. Here's the past 2 days. Obviously, at the start of the week, we can see we have a gap higher. We're holding the range, and then we gap out of it. And then today, we correct a bit, and you can see there's a slight gap higher here as well, but ultimately we come down for the majority of the day because of these maybe the war is over type of comments from the president. But note, this top is holding. It's holding as former resistance becomes support. So the breakout here is validated on a reset today. And so we look at all of this and say, okay, well, at least from crude oil's perspective, the problem is not solved. Okay, well, that, of course, was the impetus for this entire situation. Let's recall that this whole episode was interpreted by markets first and foremost as an inflation risk. And so when crude oil first jumped, the market said, well, there's about a 1 month lag historically before this thing appears in CPI. How exactly are central banks going to cut rates if we get an inflation shock? We don't like. Of course, by that point, and we've looked at this chart a number of times before, we've had 50% of the OECD countries, that's a club of mainly rich economies, the Organization for Economic Cooperation and Development. And here we went over the course of 2024 going into 2025 from no countries almost having rising inflation rates to now 50%. Again, as of January, that's before the inflationary shock that is the war. And so the markets understandably looked at this and said, right, so this is going to mean that interest rates are going higher. This is going to mean that those higher interest rates will constrain the economy. This is going to mean that we are going to have central banks biased in a more hawkish direction. This is going to mean that the Fed is not going to cut rates, all of these things. And they sort of extrapolated out across assets. Stocks down, gold down because it doesn't yield anything. And in this environment of rising interest rates, that's not attractive. Dollar up, bonds down, and so yields up. All of it kind of started to fall into a pattern. Until last Friday, where we started to see a little bit of a difference in the layout. And we talked about this a little bit yesterday. These are the break-even rates, which track inflation expectations priced into the bond market. You arrive at these by taking the difference between nominal Treasury bond yields, what we normally just call Treasury bond yields, and TIPS yields, the Treasury inflation-protected securities yields. These are basically yields net of inflation. And we look at the difference in the yields on these bonds at the same maturity. That, of course, gives us the magnitude of the inflation adjustment to get from the nominal to the real, from the regular treasuries to the tips. And so we can see here then the 5-year, the 10-year. And number one, we can see that we're well above the Fed's 2% inflation target, though some premium here is to be expected. But we can see that even since the beginning of the year, we've shifted up. We've talked about why crude oil didn't just start rallying with this war. It's been marching higher since January. Now, of course, the war has accelerated the pace of these gains, but the read-through from rising oil into inflation expectations, that was going on all through January. And then in February, where crude oil paused, those inflation expectations unclenched a bit until, of course, the war, when they started to build back again. That is a little bit different as of Friday, where crude oil has continued to surge higher and is indeed holding at these higher levels, but these break-even rates have started to come in. Now, that suggests that the market is already looking through to the next order of magnitude, the next sort of concentric circle of effect that this war is going to have. So consider, of course, in the beginning, this becomes a supply shock. Things become more expensive because everything that petroleum goes into, everything that transacts the Gulf, fertilizer, aluminum, helium for electronics production, which is without which basically we don't have semiconductors, obviously crude itself, refined products, all kinds of things. That initially, of course, you can understand why the markets read as an inflation shock. Okay, well, everybody's going to need to buy this stuff, but now the stuff is going to be more expensive. And for as long as this thing continues, more expensive is what happens. But if you let that hold for a while, though, then companies go, well, if these prices aren't going to revert quickly, if this isn't just a price shock for me to eat for a few weeks, if this is going to be longer lasting, I got to scale back. And we already see that scaling back underway. Companies are reducing output. They're reducing work hours. They're telling their workers not to come into the office, or they're telling their factories to produce at lower capacity. They're telling people to take 4-hour work days. The anecdotal evidence is countless. But this is the part of the process that becomes demand destruction. This is the part that weighs on growth and is actually disinflationary, because the hit to economic activity means less money is changing hands and inflation actually cools. So that is perhaps what we're starting to see, where crude oil isn't falling. It is in fact holding near its recent swing highs, whereas inflation has started to come in. It is perhaps that part of the equation that's on display. We've seen that, of course, in spades in the bond market, where we can see the 10-year here has started to come off these lows. Now, again, just like stocks, here is where the prior inflection points are, right around here. So here to here, well, guess where we're testing at the underside of right here. So is the trend changed? Doesn't look like it. Looks like we have something similar to what we saw here. So we have this decline. We have this inflection zone right here. We can see there was a range over here. We can see that's acting as that same barrier here. We come down, we test, scrape the underside right here, and then have the next leg lower. What are we doing here? Well, maybe the same thing. Maybe we found some initial support. We scrape this underside here and extend back down. Certainly the series of lower lows and lower highs remains intact. So with that in mind, again, is there a trend change here? It doesn't look like it. Looks like the markets are digesting. But the important takeaway is The markets are now starting to pull yields in the opposite direction, perhaps because that demand destruction conversation is here. And maybe if in fact the war is over, if in fact all of these comments from the president are correct, then maybe at the very least, what we have is a limited impact to growth because we stop the damage being compounded further. But if the market's already as of Friday concluded that a recessionary risk is on the table, well, what happens if you end the war? You don't solve the problem of the inflation risk driving demand destruction. You just stop it from getting worse. So you don't have a bigger recession, maybe, but you could still have one. Similar story for gold, where the demand destruction argument has started to play a role. But again, note, former bottom, we're scraping the underside of it right here. We can see that there's an inflection zone here. We've come off it down before. We found friction here before. When we finally took it out, we found friction here on the way back down. Where are we now? In the same spot. So again, do we have a turn? Maybe not. Maybe what we're doing is just coming to terms with the idea that there's some amount of news flow that's going to wash through this and it's going to come at us hard and fast. But the bottom line is the recession is already in queue. Now, will it be a recession with a big R or will it just be an economic downturn? Who's to say? And it probably depends on the country that you look at. Will we have a global one? That's not clear. But what we can see is that the likelihood that central banks are just going to hike rates with abandon in the face of this inflation risk, which crude oil still clearly says isn't going away, that seems implausible. Because as the PMI data has consistently shown us, we're looking at a slowdown in growth that's already underway. As ever, these PMI numbers are with a logic where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. In the case of the US, we just, for March, saw the weakest growth since April last year. For the euro area, the weakest since May, and the economy there is at standstill, essentially, hugging that 50 line. In the UK, we have a little bit more growth, but still the weakest results since September last year. And for Australia, not only do we have the weakest result in 18 months, we're in contraction mode. We're sub 50. This is, of course, first of supply chain kind of an economy. This is a commodities producer. It sits early in the global supply chain. So think coal, think iron ore. Those things then get sent to China and used to smelt steel and power factories that make all kinds of other things. Those other things are then sold off to Western markets. So when we look at what's going on here, that the weakness is most profound in Australia may well be a canary in the coal mine, telling us what's happening at the beginning of the supply chain, and therefore what is going to happen downwind over a period of months. In fact, just like the 50% line was there for the number of OECD countries with rising inflation in January, so too we're at the 50% line for the number of OECD economies that had a rising unemployment rate as of January. So we're looking at a situation then where the market was already vulnerable in January to high inflation with weak growth type of dynamics. And of course, all this war has done is made those dynamics more acute. So has that changed as a consequence of what we're seeing here? And will it change if you stop the war? Well, all of what we know from how many months it'll take to restart full production, in the best case, assuming whoever makes a deal with the administration even controls the Strait of Hormuz. Because if the administration is talking to Iranian President Masoud Pezeshkian versus the 12 or so people that run the IRGC oil cartel, it's unclear that he can unfurl the Hormuz situation himself. So we're looking at the bottom line here, and all these moves seem more like end of month and end of quarter rebalancing of portfolios on this, the 31st of March, then it looks like a true change in sentiment. Markets will, of course, always find the news that they need to get to where they want to go. And behold, this was yet another day where the president put out a bunch of comments. He puts out a bunch of comments every day. And they say all kinds of different things. The same thing happened today. And yet, today the markets took him at face value, it would seem. Why? Well, because it is the end of the quarter and the end of the month. And there's some profit taking to do. And maybe just rebalance exposure. And so, do these moves then have follow through? Well, that part seems suspect. Looking forward, the biggest question on the macro data docket comes from, of course, how the U.S. economy is doing through all of this, and if the inflation risk and the demand destruction are already showing up. The PMI data would suggest, of course, that it is from S&P Global. We're now going to get PMI data from the Institute for Supply Management, the manufacturing number this week, the services one on Monday next week. Very helpful, of course, because that'll be Easter Monday, and so there'll be barely any volume, and markets are going to be very jumpy, and services is easily the larger of the two components. But I digress. Nevertheless, we are going to get this data, and if the markets are going to be jumpy to the president saying nothing, much as they've been ignoring him for saying very similar nothing over the preceding several days, well, then it might certainly be that they don't ignore the manufacturing ISM number and actually move on it. So if we get an ISM number, let's say, that looks like demand destruction, if the internals look like inflationary risk, well, then tomorrow we may well all be talking about, oh, everything was fine if not for the ISM. But everything was fine might very well have been a function of it being March 31st. And everything going wrong might well be a function of it being April 1st. And so if ISM gives us these negative effects, it isn't so much even that the markets are going to be reactive, it's whether they're going to care, because it'll be backward looking in any case, and if their sentiment primed to care, because they've already done their book rebalance, and it's a new month and a new quarter, well, then they'll care. And if they really do believe in this thing, well, then even a scary ISM number won't make much of an impact. So watching the price action response to this data should be very, very important. Similarly, for the U.S. jobs data. Now, this is going to come out on Good Friday for almost all of global markets. So we're not exactly going to have the greatest market response and the easiest reaction function, but there'll be things to look at to get a sense. OTC currencies certainly are one thing you could look at, as is Bitcoin, to look at sort of off-exchange sentiment and how that is going to play out. But sort of reinforcing the idea that not much has changed here, policy expectations are basically where they've been. If we were expecting that the war were truly to end, well, then one might think that you'd get a downshift in policy expectations, especially for the likes of the ECB, the Bank of England, where we now expect 50 basis points in rate hikes, even though those economies are weakening. In the case of the Eurozone, are stalled. So it doesn't look like the market is doing something that really speaks to a sentiment shift. And that brings us to the US dollar, which holds in its up move here. The trend since the beginning of the war intact. Of course, we get a pullback, much as we get a pull up in stocks. This is kind of the flip side of that. The anti-risk demand for dollar liquidity ebbing as stocks go up. And of course, yields come in. That takes another leg of support away. But again, we are holding these former levels. We are holding the series of higher highs and higher lows. And so this starts to look like the kind of pullback that gives you an entry for the next leg in a trend to continue once the markets digest whatever calendar-forced adjustment they're making, end of quarter, end of month, and capital starts to get laid out for the next iteration of the story. So, positioning-wise, obviously not a great day. I am short almost everything against the dollar, and the dollar clearly sold off today against the backdrop. I'm still up overall on the position, but that profit cut by a significant margin today. Being long gold via these short put spreads, that's helpful. I did this kind of song and dance where I was short the futures and short the puts longer term, expecting gold to ultimately find a bottom and come back to its deglobalization chops. That idea is working. I peeled off the futures now over a week ago. And so that is a helping hand today. Obviously being short risk through put verticals in IWM, that's the Russell, the Qs, that's Nasdaq, SPY, that's the S&P. That didn't work today. Being a little bit short the bonds helped at the long end, only just a touch, and not so much in the middle of the curve. But none of these trades seem to have crossed any red lines. And so I'm not changing anything for now. We'll see what happens as the calendar turns to the second quarter. And that's Macro Money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.